Good morning and welcome. This is NDTV Profit. I'm Harsh Saita. You're watching All You Need to Know. Over the next half an hour or so, we'll take you through everything you need to know at the start of trade with, of course, the right notes. Let's quickly take you through what's happening on the global front. In terms of global markets, the US markets, of course, were shut on the back of President's Day. And Asian equities trade mixed. Indian markets, on the other hand, continue to break records. Analysts say Indian indices are at the cusp of a breakout. In terms of HDFC Bank, the CEO assures investors, says he will not disappoint investors and apologizes for communication flaws. Third off is Whirlpool. Now, promoters are all set to sell 24% stake in the India unit at a discount of 7.5% to current market price. The deal size comes to around 3,600 crore. Coal India will be in focus. The shares dipped nearly 5%. Company missed product or is expected to miss production targets, and e-auction premiums have fallen. Lastly, farmers reject the centre's proposal. They say they will resume the march to Delhi from Wednesday. Now, I'm going to first start off trying to get you all of the perspective with regard to global markets. We've had five great weeks, especially where the US indices were concerned, which closed last week in the red. Now, Monday was a day off for US markets, but what we've seen is US futures trending largely flat. You've got around 0.25% or thereabouts in terms of a decline on the Dow future. So there's a negative bias which is clearly there. But outside of that, they were flat. Let's also quickly have a check at where Asian indices currently sit. A mixed bag when it comes to Asia. You're seeing gains on the Nikkei, which is up around 0.25% or thereabouts on your screen. But the Hang Seng is down around a third. The Shanghai has opened around 0.1% lower. So both of those indices pretty much again, trading with a negative bias. I'm also going to point out the ASX 200, which is down around 0.1%. The Kospi also down around 0.9%. So the Kospi taking the largest knock in trade within the Asian basket, at least today morning. I'm going to quickly take it to where bond yields are at. 4.3% breached on the US 10-year bond yield. That's a critical piece, because what we've seen, therefore, is the US bond yield going up by almost 10 basis points, 0.1% higher on the US 10-year. That's largely because of all the economic data flowing through. We've seen how PPI has come in and inched slightly higher than expected. That came in last week. At the end of last week, CPI also came in slightly higher than expected. Two things expected going forward. You're going to expect, or rather markets are penciling in a slightly higher than expected pause or elevated rates, if you can call it. Second, we're going to see rate cuts at slower pace. So that's what the market seems to start building through, and at least bond yields reflecting that. Lastly, on to crude. We'll look at oil prices around $80 a barrel on the WTI, NYMEX on your screen. Brent around the $84 a barrel mark, going nowhere. But let's quickly also take it to one key piece. We're looking at within the Middle East space. What we are seeing is that the West Asia conflict, several media reports seem to suggest that the United States has now proposed a UN Security Council resolution calling for a temporary ceasefire. It is also opposing Israel's planned attack on the Rafah in southern Gaza. Important to note that it's for the first time that Washington has explicitly backed a ceasefire in the conflict. The proposal, however, calls for a ceasefire as soon as practicable, unlike other UN members who are calling for an immediate ceasefire. To pass a resolution, one needs at least 9 votes in favor and no vetoes by US, France, Britain, Russia, or China. So that will be on everyone's radar, especially because it will start impacting oil. Now, I have Agam standing by to break down the FNOQs, as is the case every day. Agam, markets at record highs. Yeah. What are the cues that we're getting?
Well, positive cues, a little bit more affirmation of strength staying as far as the indices go. Well, let's start with the Nifty. Well, we did see the Nifty move up above 22,000 last Friday, and yesterday we continue to sustain about that mark, which means that we're starting to see 22,000 as a little bit of a base now building in. That said, as far as your underlying is concerned, about a 0.4% advance there, and about a little bit of an addition in open interest towards longs. There was short covering as far as the Bank Nifty is concerned. Now, Bank Nifty is a bit far away from its new life high, so that's it's got to have a little bit of a catch-up play there as well. But we did see about a short covering coming through. Talking about the options market yesterday, and as one might expect, a lot more writing as compared to in puts as compared to calls. So, as one might expect, around the 22,000 mark is where we've seen most amount of writing as far as puts are concerned. Moving on, let's talk about how your overall open interest has panned out. So, Max OI continues to be at 22,000. In fact, further strengthened as far as that being a base of sorts is concerned, and on the higher end, keeping an eye on 22,600. At least at the moment, we're seeing that's where we're seeing a little more traction coming in as far as calls go. And of course, Fin Nifty expiry will also be in focus today. Spotlight will be around the 20,600 and 20,700 levels. That's what we're keeping an eye on as far as the Fin Nifty is concerned. Moving on, let's talk about stocks. Well, we did see shorts in Lupin and SBI Life, and of course Dixon Tech, Bajaj Auto and Metropolis saw longs coming through. And in terms of stocks which saw unwinding in trade, where we did see short covering in IRCTC, Maruti Suzuki and M&M. On the other hand, Nalco and Federal Bank looking at longs and winding. M&M, of course, wasn't as much of short covering. It was perhaps some amount of profit taking coming through. So that's something that we need to keep an eye on, because it's not every day that you do see M&M move up so sharply. But remember, at the end of the day, it closed with gains of just around 0.7%. So maybe, just maybe, there is some amount of profit taking coming through. But once again, Harsh, all eyes will be on the Fin Nifty today based on the weekly options expiry.
Right. Thanks so much for that, Agam. Great perspective as always. Now, we've just got news coming through. We'll stick with macros because that's what's flowing through. China's central bank cut its benchmark 5-year loan prime rate for the first time since June. The Chinese central bank kept its 1-year loan prime rate unchanged at 3.45%, but the 5-year loan rate, which is the peg for most mortgages, was cut by 25 basis points to 3.95%. Now, according to a statement from the People's Bank of China, this comes as an effort to loosen monetary conditions further in a bid to support slowing economic recovery in the country. But that's on the Chinese front. You can see indices, well, not much of a recovery there, but you're seeing absolutely flat on both the Hang Seng as well as the Shanghai. Nikkei also pretty much trading flat, but the Shanghai will be in focus because, of course, this is a China-based story. Let me quickly switch focus, though, onto Indian markets. We'll start looking at specific stocks very quickly. Whirlpool. Promoters are expected to sell around 24% in the India unit at a discount of around 7.5% to current market price via a block deal. We have Mahima to give us more perspective. Mahima, this was in the works. What can you tell us about all that's happening here?
Right, Harsh. So as you rightly mentioned, promoters might sell 24% of their stake via block deal. Whirlpool Corporation already holds 75% in Whirlpool India. So they will still retain the 51% stake, which is the majority stake. Now, Whirlpool Mauritius will be the selling shareholder for this, and Goldman Sachs is declared as the sole broker for this deal. Now, talking about the sales stake value, as you rightly mentioned, the floor price is set at 1,230 per piece, and this is at a 7.5% discount to the previous closing price, that is yesterday's closing price of Whirlpool India, and 30.44 million shares will be exchanged, and the total value of transaction stands approximately at 3,700 crores. Now, the purpose of stake sale is that Whirlpool Corporation is looking to pay off their debt and enhance their balance sheet stability. And on 30th November, already on the exchange filings, they had informed that they will be selling 24% of their stake during Q3. And now the news has come out as per the Goldman Sachs term sheet that they will be selling this stake today via block deal. The stock has fallen approximately 12.9% since the exchange filing on 30th November. And overall, if if you see the Whirlpool Corporation debt profile, it stands as approximately $6,400 million, and they target to pay off $500 million this quarter, that is quarter 4. And overall, Whirlpool stock performance, Whirlpool India stock performance has not been very great in the past 1 year. If we see 1 month, it's been hardly up 1.8%, 6 months, it's gone down by 16.5%, and 1 year, it's hardly been up 2.7%. So this is all we've got for Whirlpool so far.
Perfect. Thank you so much, Mahima, for that roundup. Coal India is the other one in focus. At close yesterday, it was down roughly 5%. Management commentary came through, and we have Vikas joining us to give us all of the key takeaways from that con call.
Yeah, hi. You rightly said the stock is likely to be in focus today, especially because what the management yesterday said, they had trimmed the production volume target, what they had given at the beginning of the year of 780 million ton by 10 million ton. But what's impacted more, I think, the stock and is likely to impact is basically the e-auctions premium, which was around 117% in December, has fallen to almost 45 to 50% in January, and is even lower in February at 38%. However, today the brokerages, some of the brokerages like Motilal Oswal and Nuvama, they have come out with a report on the this management call which happened yesterday, and they've said that they have their buy rating and they expect Coal India stock to basically reap in the benefits of basically volume growth, that CAGR that they see of 3 to 6% for FY24, and also they have trimmed down the employee cost, which is likely to be lower, which had been the overhang for now till now for FY24, and next revision is likely to happen in FY26. So till then the stock is likely to perform basis the volume growth that they have seen, and they have also increased their supply to non-regulatory segments. So the volumes have increased, although the premium have fallen because of the drop in global coal prices. So it's likely to be a stock that needs to be watched out for, but overall the commentary is that they are likely to benefit from the overall growth that the country is seeing.
Well understood. Thanks so much for that perspective, Vikas. The stock down 4% in trade yesterday, the top loser on the Nifty 50 index. But it's time to take a quick breather. We'll slip into a short break. We'll leave you, though, with what the MD CEO of HDFC Bank, Sashidhar Jagdishan, had to say about addressing investors, about, of course, concerns with regard to HDFC Bank. He addressed investors in an analyst meet, and he also spoke about the Paytm saga. So we'll be back in a jiffy. Listen to this one.
Our narratives could have been better, and I take it upon myself that it's a learning for me. So with all humility, I do reckon, and we will be focused. As I said, we'll have our single-minded focus is to create a very sustainable franchise, and our focus is going to be on profitable growth. And that's the only metric that I'm going to be looking at for years to come, and especially during the period of transition. We will not disappoint you, that I can assure you that. Whatever has happened on that particular entity is rather unfortunate. So obviously there is certain little bit of an unknown. I know nothing more than what you would or anyone else in this room knows. So having said that, I think they do have a great tech platform, and that is what we have a partnership which sort of harnesses that, and it's not a big thing. As I said, these are experiments that we are happy to sort of continue as long as we maintain control of the regulatory norms, etc. Now, does it open up a lot more opportunity? If you really look at it, I think we are far more sanguine on what we want to acquire, even on the merchant side. Let's talk about where all they were very good. The FASTag is something that they had a reasonable amount of market share. Now, obviously, that may get distributed amongst a lot of other people.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options.
Welcome back. You're watching All You Need to Know here on NDTV Profit. We're shifting focus now to stocks to watch. Now, quickly on what you may have missed. Whirlpool, Coal India, we've already spoken about that. HDFC Bank, we've played what Sashidhar had to say on the analyst meet. We'll shift focus to stocks one should watch out for in trade outside of these. One on the back of block deals and fundraising plans. We have Anushi joining us with more on all of that.
Morning, Harsh. So starting off with Sula Vineyards, while this is just a confirmation piece of what we had discussed broadly yesterday with about the 1 crore shares that changed hands in 2 large trades today. So it is a confirmation that Whirlpool West Asia did sell about its entire 8.34% of stake. But in other sellers, there was also Muzarena LP, which sold about its 3.43% of stake. On the other side, at the buyer side, we had Morgan Stanley, which picked up 1.02% of stake in the company. So apart from that, the company also has a lot of mutual fund buyers, which includes Goldman Sachs, HDFC, Large and Mutual, Quant Mutual Fund, and SBI. Another block deal which was in focus was Minda Corporation, wherein Bela Agarwal had sold about 4.53% of a stake. But over here, again, a strong mutual buying with Motilal Oswal Fund picking about a 1.82% stake, Kotak Mahindra picking about 1.79% of stake, and Mahindra Manulife Mutual picking about 0.3% of stake. In other key shareholders, there are Axis Mutual Fund, Quant Mutual Fund, Aditya Birla Sun Life as well. Now coming to stocks and focus on fundraising plans, we have Piramal Enterprises, which will consider its fundraising on Feb 22 for a total issue size of about 600 crore. This includes a base of 100 crore with an additional green shoe option of 500 crores. Another is Pesalo Digital, which will also consider its fundraise on Feb 22, but the quantum of the fund total issue size is not yet disclosed, so definitely that would be on watch out. So these all other stocks that needs to be in focus again today.
Perfect. All of those in focus on the back of fundraise, block deals, and the like. More stocks though. We have Varsha joining us with key details on the likes of Deepak Fertilizers, I beg your pardon, NBCC, and more. Varsha, good morning.
Good morning, Harsh. So let's start with Deepak Fertilizers and Petrochemicals, where they've signed 15-year LNG contract with Norway-based Equinor. Now, this agreement is for annual supplies of up to 0.65 million tons over 15 years, and this will provide this tie-up will provide trading LNG parcels and companies growing captive needs. Also, the LNG will be delivered to west coast of India. Then we have NBCC, where they've received 3 work orders of rupees 369 crore from Rani Lakshmi Bai Central Agriculture University for rupees 331 crore, then High Court for State of Telangana for 12 crore, and ICAI that for 24 crore. Then we have Godrej Consumer, where it is divesting its entire stake in Godrej East India Africa Holdings Mauritius, and the sale of entire stake to be completed by Q4 FY24 or by Q1 FY25. And this Godrej East Africa actually contribute almost 1% to company's overall revenue, and its net worth as on March 31st contributed to 4.6% as of company's net worth. Lastly, we have CIE Automotive, where if you see, they've come out with the Q4 earnings where revenue are flat, EBITDA is up 11%, margin is up 160 basis points. Flat revenue was led by European market slowdown, US off-highway market drop. So this is all we have stocks to watch.
Perfect. Thank you so much, Varsha, for all of that. We'll keep our eyes out on CIE as well, those numbers coming through. But, I'm going to switch focus from markets to politics. Moving on, latest update from the farmers' protest. Farmer leaders taking part in the Delhi Chalo agitation rejected the centre's proposal of procuring pulses, maize and cotton at MSP, stating it was not in the farmers' interest, and announced that they will march towards the national capital on Wednesday. Besides the legal guarantee of MSP, farmers also demand the implementation of the Swaminathan Commission's recommendation. Now, pension for farmers, laborers, among others, were also part of the demands. Now, that's obviously all the update for now on the farmer leaders which have rejected the MSP proposal. We'll of course keep you queued on all of those updates coming through. But we'll move on. I myself, for one, I'm sure you as well, have been receiving calls from the likes of certain companies trying to offer loans, and pesky calls have been a long problem. Common people, you, I, everyone report, including those in local circles, reveal that Bajaj Finance, HDFC Bank have been top offenders when it comes to dialing digits for such calls. My colleague Malika Mishra has more details from the report. Let's listen in to what she has to tell us.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change?
Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Stock selection isn't an
Hello and welcome to India Market Open. Getting ready for trade this morning, guys. Good morning. It's been 5 straight days of a strong run on the street. I know yesterday there wasn't any consolidation and Agam, you've won a coffee. But I think today, minor profit booking cannot be ruled out.
You never know. You never know.
Just an
law of
eternal
averages.
bull, aren't you?
No, hang on. Law of averages. I'm just saying that we don't know when the law of averages actually starts to catch up. And there's, every time you try and guess, it's going to prove you wrong. And just when you don't expect it,
that's when it hits you hard.
Yeah. So we saw that in close yesterday, Agam and Samina, where you had pressure coming in during close, and you could not really retain above those levels or at those highest levels of the day. The question is that is there enough momentum and enough reason, enough steam to carry on above those 22,000 levels in a decent fashion? Well, global cues are not going to give you too much. US markets were shut overnight. The big story actually coming from China this morning and the US Treasury, I would say. Dow futures have been tepid, and the US markets were shut on Monday for President's Day. stock futures have been little changed, but look at the 10-year. The 10-year has been above 4.3. Trending above 4.3 quite firmly, and that's not usually a very good sign when it comes for emerging markets as well in terms of flows. So that's on the back of higher wholesale prices and a growing concern that perhaps Fed rate cuts, the alacrity and the size of it were being overestimated, and you've seen that sort of playing out. Crude has not seen too much of movement either. They've been flat. Brent has been hovering around $83 mark, even though there is now a report that the US is trying to craft together some kind of a ceasefire in Israel and Gaza friction, but we'll have to wait and see how that plays out. But like I said, Asia is the big story, and we'll just pull up and see what Asian markets are doing, because China has cut the 5-year loan prime rate by 25 basis points to 3.95%. This cut is the first time since June. So that is pretty significant. The 1 year has been left unchanged, but no great action in Asian markets. So perhaps the cues will be domestic. Let's just see what happened domestically yesterday. And that pattern continues, where you have FIIs either not participating much or selling, and DIIs the ones who are buying. And you saw that happening yesterday as well. In fact, a month to date, in Feb so far, FIs have net sold about 14,672 crores, while DIIs have been the big buyer, 17,846 crores. And that to me is quite interesting, that you are seeing a rally without FII participation right now. If you assume at some point that changes, do you see that movement running? The implied open today showing a muted start.
Just very quickly, before we go into local cues, a Citi report on gold and crude, I think that's worth a mention. They've actually said that you could see crude hit $100 a barrel by the start of 2025. And I think that is one thing that the markets will eventually take heart from. And I'll just say I'll quote what they've quoted. They've said that another wildcard scenario highlighted is that oil prices hits triple digits again, which we haven't seen in over a decade. The catalyst for oil to hit $100 a barrel include higher geopolitical risks, steeper OPEC cuts, and supply disruptions from key oil-producing regions. They've also indicated that there's an off chance that gold could hit $3,000 per ounce in the next 12 months. They believe aggressive purchases, stagflation, and a global recession that still could be on the cards are a few factors that could spur up the buying for the safe haven assets. So just worth a mention before we move on to local cues, Agam. It was interesting. Mixed picture by the time we closed. Lots of volume-led losers towards the last few hours of trade.
Yeah, absolutely. And the broader markets is something that was going to be in focus yesterday. But I'm going to start with benchmarks. Now, we're interestingly poised because sure, we made new life highs yesterday. Also, we continue to see base building around the 22,000 mark, and this is for the second straight day. Also, over the past 3 or 4 weeks, we have tested 22,000, but we've been unable to sustain about 22,000. This is for the first time that we have, in fact, closed above 22,000, which also strengthens that bit of support going in. Now, should we come off below 22,000 now, it's going to be a challenging time for the bulls then. And bulls are going to try and defend this particular mark with all their might at the moment. And, why I say this is because the kind of writing that we have seen around the 22,000 mark over the past 2 sessions, a significant amount of put options being written around 22,000 and 22,100. Moreover, the other factor that perhaps could play out is that FIIs at this point in time in index futures are 61% net short. Now, should we see the Nifty sustain at these levels, there is a high chance that there'll be some more short covering, and under those circumstances, that could lead the markets even higher from these levels. Now, again, I'm not suggesting that I'm a permanent bull, but this is what the factors are indicating. That, and at the moment, while sure, we can see a day or two of weakness, of course, the implied open is also indicating declines earlier on the start of the day. 22,000 is going to be a hard one to take out. And if we do see 22,000 being taken out convincingly, well, then we are in a little bit of volatile period for sure. But that again continues to be a crucial one, at least as far as this week's expiry is concerned going in.
Indeed, it's going to be an interesting morning. That's the implied Nifty indicating to a flat to slightly lower start. Lots of stocks that will be in focus this morning. Just a quick word, the VIX as well, I think in the second half of trade jumped quite sharply. So you saw a 5.5% spike on the VIX, taking it to levels of 16, which generally indicates that the markets are turning a lot more volatile than we'd have liked. So 16 on the India VIX is what we had. There will be a whole bunch of stocks, a whole bunch of block deals as well that hit the markets yesterday. But the biggest story yesterday evening was about Whirlpool. Let's watch out for how the stock is doing. They have reported and notified to the exchanges that this could be on the cards. Of course, they talked about this on the 30th of November, where the management of Whirlpool had indicated that the promoter may look to sell 24% stake in the company. Remember, the global holding company owns 75% stake in the Indian subsidiary. Promoters will continue to retain majority stake even post this stake sale. Whirlpool Mauritius will be the selling shareholder, and the whole idea of actually liquidating some equity in the local company is to ease out some debt. So high levels of debt on the books of Whirlpool India is of course what's leading the management to offload some of their stake. Well, the price that they're looking to repay, or the loan amount that they're looking to repay, is about $500 million. Goldman Sachs is the sole broker on this deal, and the floor price of the block deal is set at 1,230 rupees a share. So watch out for this one. This will be hitting the street soon, and we will be getting a notification of that as and when that happens. The price, remember, is at a discount, so you will see pressure on the counter from the get-go this morning. The other one to watch out for is Z. Post reporting its earnings last week. The stock has been unfortunately selling off. It's been under pressure pretty much every day. It also remains in an F&O ban, which of course Agam can talk about in a little more detail in a few minutes. But the big headline across newspapers this morning is that they have re-engaged with Sony to revive the merger. Representatives from both sides have held meetings across Bombay. Major differences are expected to be is what they're trying to sort out. Both sides are sticking to their positions. So no clarity yet whether it's a done deal, but conversation has restarted, and that could be a positive trigger for the counter and trade this morning, especially after the sell-off we've seen from 200 rupees to 178 in the last few days of trade. Well, another smaller company but worth a mention, could be fairly active in early trade, is NBCC on back of a massive order win to the tune of 369 crores. You also want to watch out for sugar stocks this morning. Sugar production is expected to see a downside due to lower rainfall. Low rainfall will lead to lesser sugarcane plantation, on back of which a whole bunch of sugar counters, which are usually active ahead of elections, may be seeing some more activity in today's day of trade.
Yeah. Just on Z, again, it continues to be a counter which is, very responsive to news flows, but one has to wonder why Sony would go ahead and change its stance. Has anything changed specifically for Sony to change its views? So that's going to be one volatile counter as well today, definitely. Coal India is the other one that we have to talk about. I mean, that stock took a nosedive at the end of trade yesterday, and you can see that on the chart, where it had quite a tough afternoon because of an analyst call that the management was having post numbers. Now, what spooked investors was a cut in guidance by the management on their production target, not massively, basically from 780 metric tons to 770 metric tons. But they also said that their e-auction premiums are going to have fallen to 45% in Jan. So for perspective, that was 117% in all of Q3. And these premiums contribute 15% to the top line in the December quarter. To match up that cut, Coal India will have to bump up the volumes. Now, some brokerages think that they will manage to do that. MK is fairly bullish that it will manage to bump up those volumes. Motilal Oswal has reiterated a buy on Coal India with a price target of 520 rupees. where they say that there are slightly trimmed estimates of e-auction revenues for the next financial year, but volumes could make up for that. So will you see a recovery in that stock is the question. Coal India definitely one to watch out for. Kotak Mahindra Bank would be the other one. They've announced quite a rejig in their management. And remember, for Kotak Mahindra Bank, the question always has been about leadership and who the next rung is or what the next rung looks like. So Devang Ghiwala has been appointed as CFO, Milind Nagnur appointed as COO. MK has set a price target of 1950. They've also mentioned how KVS Manian has been elevated as joint MD and Shanti Ekambram as DMD. The rejig is important because it could alleviate any immediate risk of top management attrition, which is a concern in the private banking space as well. Godrej Consumer is the other one perhaps that we should watch. The company will be divesting stake in its Mauritius-based unit, that's Godrej East Africa Holdings. Not a massive sale, consideration of about 30 crore rupees, and that entire stake sale will be completed by Q4 of this financial year or Q1 of FY25. But Godrej Consumer, remember, even through Q3 has been a bit of an outlier in terms of positive performance compared to the rest of their peers in that space. So Godrej Consumer definitely could be on the radar.
Right. Well, and I have two stocks, only two, but both of them are at a life high, and so which is why I'm really excited to talk about them. Both smoking hot. First one is Dixon Technologies at a life high. We have seen intraday volumes at the highest in 2 months, and February futures looking at an 8% increase in open interest towards fresh longs, which means that still it does seem like there's more legs to this rally. Yesterday's lower range was around 6,400 rupees per share, and that's where you could potentially see a near-term base building in. And the second one is a cash market stock. That's MRPL, and I'm sure that literally no one in this market has missed out on this one because it's literally moved up 57% in just 3 sessions. Then this cash market stock has also seen the highest weekly volumes since back in June. And well, there's no point talking about the base because the base at the moment is about 50% from current market levels. So, these are two stocks which look like they are in very strong upward momentum, and bears will have to be just a tad bit wary of how things are panning out here.
Right, a quick update as well, because those were the very active stocks. And Agam, you've got to be able to tell us what F&O data says could be the next MRPL in terms of movement this morning, right?
If only, yeah.
But a new listing that you want to watch out for, you've got Vibhor Steel Tubes that will debut on the exchanges today. The premium in the grey market is indicating to a 85 to 90% premium to the IPO price. So we should be expecting a listing of Vibhor Steel Tubes at about 151 rupees in today's trade. So you've got that, and a whole bunch of block deals as well hit the markets yesterday. We will talk about that in a little more detail. You've also got a few earnings to watch out for. So ABB India, Ansal Properties and Infrastructure, Gammon India, and L&T's Back India. So smaller companies, of course, ABB is a big one, will be reporting towards the fag end of the earnings season.
Just one more I wanted to add on the stocks list, just because I thought it was an interesting story, and the entire tech pack was facing weakness yesterday, is LTI Mindtree. They've launched a generative AI powered autonomous sourcing platform called Navi Source, which will reduce their procurement cost by 15%. And the reason I found it interesting is because in that whole AI game, the Indian companies are still to show their full mettle. So LTI Mindtree perhaps an interesting story. It would be great to speak to them to understand what this plan is as well.
Well, certainly. And of course, the other stock which continues to be in focus and has been over the course of the last 1.5 months is HDFC Bank. And we have more updates, and for good reason. But I'm going to hand it over to Harsh to take us through what our editor's cut on HDFC Bank is going to be. Harsh.
Yes, Agam, thanks for that. Of course, no surprises here with regard to what we have on Editor's Cut today. I have the pleasure of having Vishy right alongside to try and break this down, try and give more perspective, more color on all that's coming out from the commentary. Of course, trying to allay concerns, Vishy, with regard to a whole host of factors, but we'll try to focus in on 3-4 key factors that one needs to look out for in terms of the commentary. Let me first start off with what he suggested, or what Sashidhar Jagdishan, who is the CEO MD at HDFC Bank, suggested with regard to communication gaps, because that has been the key criticism that's come out, Vishy. And, with regard to this communication gap acknowledgement, is it a step in the right direction in your view?
So, a few things that he said, which was that first, be patient with us. Q3 is not indicative of what the future is holding. The bank management is also focused on continuing with profitable growth, and that's going to be the focus. EPS over loan growth always. What is interesting here is the acknowledgement itself, because we have been saying it here in this very studio that the bank's management is not driving the right kind of narrative as far as HDFC Bank's results is concerned, as far as the kind of outlook on the numbers are concerned. So now you have the CEO coming and saying that, listen, I get it. Our narratives were not so great. We will try and fix everything, and we are being humble in accepting that there's an issue with the way story was built versus what played out. I want the viewers to have a look at what exactly the CEO of the bank said while he was talking directly to investors.
Our narratives could have been better, and I take it upon myself that it's a learning for me. With all humility, I do reckon, and we will be focused. As I said, we'll have our single-minded focus is to create a very sustainable franchise, and our focus is going to be on profitable growth. And that's the only metric that I'm going to be looking at for years to come, and especially during the period of transition. We will not disappoint you, that I can assure you that.
Right. Vishy, you feel comfortable with the fact that he's acknowledged the mistake, and probably there's going to be repair work on the anvil, especially with regard to more clearer guidance coming from them?
The only way to repair this is to have a better Q4. I mean, honestly, there's just nothing else that anybody expects from the management than to deliver on the results, on numbers, on business metrics, because at the end of the day, what else does matter, right? But having said that, this was like a 1-hour-long conversation between Goldman Sachs and the HDFC Bank CEO. Yes. And the one point that he kept saying is that the metric I'm looking for is EPS. I want to ensure that our earnings are strong, and thereby EPS is looking strong, because that was one of those points that was brought up during the results, that you had an EPS dip for the first time in a decade, on a year-on-year basis. That was something that's unexpected out of HDFC Bank. So management's clearly saying that's our core focus. We will ensure that those numbers are remaining strong.
And that is the correct way to look at it, right, Vishy? Now, the other metric which he spoke about was deposit growth. This has obviously bothered the street in a big way, because if deposits don't grow, just for perspective, if deposits don't grow well, then it will impact loan growth, and therefore will impact profitability and the right? Let's firstly, Vishy, let's go across, listen to what Shashi had to say with regard to deposits.
We realize that effectively we have preponed the loan growth, so I need to now have that period of, I would say, transition time to warm up the engine, to raise that amount of equivalent, granular, sustainable funding to be able to substitute some of the bond maturities, so that I can have a reasonable amount of share moving up, and so that matching with that of the loan market share. Obviously, it's not going to happen overnight. It's a kind of a glide path that we will be seeing. In the meantime, obviously, whatever I raise, if I raise a lot more, then I'll have enough to maintain reserves. I'll have enough to pay off the bond maturities or the loan maturities that will come up there, and the balance we'll deploy it. If I have constraints because of the monetary policies or monetary situation, liquidity situation in the system being rather tight, to that extent it will be much lower. But yet, just by repayment of the high cost borrowings, you will see the trajectory of profitable growth continuing.
Now, very interesting thoughts coming through Vishy. He's not spoken about his reduced guidance on branch count, but he seems quite comfortable with regard to deposit positioning, going forward at least.
So he did make a point about branches later on during this 1 hour long conversation, but the point that he was trying to make is that, it is core to our business to grow our branches, and eventually you will start seeing some of the operating leverage kick in, and that will sort of explain to the market why exactly they're going after branches. Having said that, on the granular deposit base, I want to make it a point. So he's saying the first priority on raising these granular deposits is to pay off your high cost deposits or high cost borrowings that came from HDFC Limited. Once you pay it off, you ensure that your reserves are strong enough, and then you deploy. So loan growth is clearly taking a backseat. I mean, even with the EPS comment, he said that I'm going to prioritize EPS over loan growth. So there, it's very clear that the bank is not looking at growing very fast on the loans at this stage. They will grow, of course. They want to maintain that 18 to 20% market share on incremental lending. Having said that, the focus clearly is on granular deposits, because obviously that's the need of the hour. LDR is out of control at this point in time. Incremental LDR, they have to maintain at a reasonable number. They have to also ensure that the high-cost deposits are taken off their balance sheet, and thereby, according to the management, when you take out the, as you start repaying these high-cost deposits, you start seeing profitability come back into the balance sheet, because obviously the cost metrics works in favor of the bank.
Correct, absolutely, Vishy. And that takes me to margins. Where do margins really lie? Now, he's suggested that margins ex HDFC Limited is roughly in the 4 to 4.4% band. Firstly, let's listen to what he had to say before we start and give more perspective on that.
Minus of the foreign body that has come in, which is the book from HDFC Limited, there was a certain band at which we were operating in. I think somewhere between 4 and 4.4 for a long period of time. If you look at it, minus of that, we continue to maintain similar kind of a thought process. Why? Because we know in periods of tight liquidity, in periods where the funding is scarce, the rates will move up. So we have the right balance of what we need to do in terms of risk-based pricing, and this is not something new. We've been doing it for a long period of time. And I'm sure Srini would have done it in his earnings call as to how many we let go as well. For the risk appetite that we are comfortable, I think the pricing is more or less right. Okay. So yes, it's going to be tight. We are constantly, the only element, assuming my expected, the risk appetite continues to be the same, or the expected credit loss is the same, the only thing that is changing in the risk-based pricing model is the cost of funds. So to that extent, you will see constantly our asset liability committee management constantly raising the threshold level so that we don't sort of go down the margin ladder. Incrementally, I think we are reasonably sanguine that we should manage that. As I said, we're not in the quantity game at all. We don't want to grow just for the sake of market share.
Again, the thoughts here, Vishy, seem to be quite interesting. If he's going to replace his current liability base with deposits, margins should go up regardless of where loan growth lies, and which should impact EPS.
Correct. Yes, it's true that once you start replacing your high-cost borrowings with lower cost deposits, then margins should improve in general. Having said that, he made one more point. He does not want to grow for the sake of growing.
Correct.
Right? Again, comes back to the point that loan growth is not the primary driving factor for the earnings trajectory that he's setting. He's saying that we will ensure, because there is a transition period. So he's very clearly guiding the market. There's a transition period. In this period, we will fix the cost problem. We'll fix the liabilities issue. Then we'll focus on the loan growth part.
But no timelines given, Vishy.
No
That's
timelines
one concern that continues to at least, mar me in terms of, I'm a bit of a skeptic on that particular count. No timeline given. Also, Vishy, very quickly, will this allay investor fears?
So his ask of the investors is that you should remain patient, look at Q3 as a sort of an anomaly. Q4 onward, you're going to start seeing better numbers. But the problem that you raise, which is timelines, for a high execution top bank management, lack of timeline is an issue, and maybe the investors will take it differently. Maybe they will look at it from a point of view of, oh, at least now he's sobering the narrative, so it may be better off. I would like to see some amount of detail in terms of when exactly this transition period ends and when does a growth period for the bank starts.
Absolutely, Vishy. So one is timelines. The other one is with regard to just the fact that there was, how can a bank as large as HDFC Bank not have visibility on tight liquidity situations, which arose in October to December, which is what he continues to allude to. But of course, we need to wait and watch how markets respond to this. Investors are, of course, and markets are the ultimate barometer to decide what this commentary really means and how they assess it. But, that's all we have on the editor's card. Thank you so much, Vishy, for breaking that down for us. We have FNOQs on the other side. We'll slip into a very, very short break. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity. Co-powered by Bandhan Bank, aapka bhala, sabki bhalai.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching India Market Open with a first quick check of the top headlines this morning. Global cues are largely muted with US markets shut, Asian equities trade mixed, Indian markets, on the other hand, continue to break records. Analysts say Indian markets are at a cusp of a breakout. China's central bank cuts its benchmark 5-year loan prime rate for the first time since June. This comes as an effort to loosen monetary conditions further. And in corporate news, Whirlpool promoters to sell 24% stake in their India unit at a discount of 7.6% to its closing price yesterday. The deal size is valued at 3,600 crores. And Coal India shares dip 5% as the company misses production targets and the e-auction premium fails. Well, farmers reject Centre's proposal, say they will resume the march to Delhi from Wednesday. Well, those are the top headlines of your tracking as we gear you up for trade this morning. But remember, it's been 5 straight days of gains coming for D Street, and Agam is standing by with more on that. Agam, what is the F&O data indicating? Because while we did make an intraday high, we couldn't sustain at those levels. And the last few hours, the picture turned quite mixed, actually.
Yeah, it was a mixed picture, at least in the last 1 hour of trade, certainly. At the moment, however, all the cues are playing in favor of the markets, at least sustaining at where they are. So potential consolidation, that's a question that we do need to ask. More strength on the cards, that is also not improbable at the moment, considering the way things are panning out as far as the markets go. So we did see the Nifty advance by around little less than 0.4%. Open interest addition seen as far as your index futures go, though not a very large amount, but one addition all the same towards longs. The Bank Nifty did see about a short covering. The Bank Nifty is not around its life highs at the moment, so it does need to see a little bit of a catch up, but we're seeing about a short covering there as well. Now, in terms of the options market, while naturally considering the Nifty moved higher, we saw a lot more traction with respect to writing around the puts. So as you can see here, 22,000 and 22,100 puts seeing the most amount of writing action coming through. And on the higher end, we're starting to see a little more activity beginning to come through around 22,600. That brings me to your max OI. Now, at the moment, we are looking at 22,000 put as the one with the maximum open interest, and that should serve as a little bit of a base in the near term. And on the higher end, keeping an eye on around 22,600. 22,500 or 22,600, that's where we're seeing a little more accumulation as far as overall call, options are concerned. But speaking of the Nifty finance, Nifty expiry, again, we're keeping an eye on 20,600, 20,700, where we have seen a lot more in terms of calls accumulation. But keep an eye on that one as we move into the weekly options expiry. And finally, moving on to stocks, let's take a look at all those which saw shorts yesterday. SBI Life and Lupin. On the other hand, long seeing in Dixon Technologies, Bajaj Auto and Metropolis Healthcare. Dixon Technologies, of course, at a new life high there. And in terms of stocks which saw unwinding coming through, we did see short covering in IRCTC, Maruti Suzuki and M&M. Even though M&M may not necessarily have seen short covering because it's already at a nearer life high right now. And of course, longs unwinding for Nalco and Federal Bank. So plenty of counters out there to keep an eye on. But it's certainly an interesting time as far as benchmarks are concerned. So let's talk about that. And let's get in an expert then. We have Amit Goel of Amit Ventures joining us on the show. Amit, good morning. Thanks for joining in. Well, the Nifty is at a life high at the moment. How are you trading the benchmarks? What would your idea be? How would you go about, deploying money here?
Yeah, good morning to Agam and all my viewers. Thanks for having me here, Agam. How would I trade Nifty here at lifetime highs? The obvious answer would be long till we go short, right? Nifty has inched its way up towards a new all-time high, while I would have expected that there could be a breakaway gap, which is not really manifesting itself because the biggest contributor, which is Bank Nifty, has not been along with it. It has not been, riding along with Nifty. So I am not expecting any breakaway gaps in Nifty. I am seeing a lot of exhaustion in the current trend. If you look at some of the technical indicators like ADX and all, they're not really pointing towards the sky. And so while the bias is on the long side, I'm not expecting a tear-away gap as such because the non-performance or the non-contribution of Bank Nifty. So while I would look to, set up a simple bull put spread, by selling the 22,000 put because, as you mentioned, there is a lot of put interest, open interest at the 22,000 level, and I believe the bulls would look to defend the 22,000 for this and for the next expiries. So the bias would be on the long, and I would look to do a bull put spread at 22,000 put levels.
Okay, so Amit, you did briefly allude to the bank Nifty and the relative underperformance. I believe you do have a view on State Bank of India. Are you playing a little bit of a divergence play, because I believe that State Bank of India has outperformed the rest of the peers?
Correct. So very clearly, this is a simple time decay play since we are near the fag end of this long expiry of February, being a leap year nonetheless. What I'm really looking to do here is basically play on the increased theta decay as we approach the expiry. So this is a simple play here. We have already seen a breakaway gap in SBIN, and if you recall, on the 1st of January, when we had met for the morning session, like today, I had clearly mentioned that SBIN happens to be my pick of the year in the large caps, and I kind of stand validated from 600 levels. It is at nearly 800. So I'm very happy with that performance. But what I right now feel is, on account of this theta decay, I would like to simply play a non-directional setup in SBIN, wherein I would like to set up a 740 and 780 strangle. 740 put, I would like to sell the 740 put and sell the 780 call, which is essentially known as a short strangle. But traders who are uncomfortable with the unlimited risk nature of a short strangle could consider buying the offsets at 720 put and 800 call. The maximum profit in about 1 week to 8 days would be about 11,325. Again, we are getting these kind of premiums simply because the implied volatilities are elevated. And the risk at either of the breach of the break-evens, which is at 732 or 787, the risk is around 2,500. With a margin deployment of about 1 lakh rupees, the ROI works out to about 12%.
Right. This is a very interesting strategy because what Amit is looking to do is exit at around break-even points, at the point of which you are not making a significant loss. And, well, of course, the upside is tremendous. And should you, in fact, see SBI expire within those two levels, well, you're likely to make a return of around 12% based only on the margin that you're deploying. And this is, of course, over the span of the next 2 weeks, because we just have 2 weeks from here in expiry. That said, Amit, you also have Reliance Industries on your radar?
Yeah, again, a similar setup. I'm looking to, not really look at the directional angle here. Since I'm seeing the broad markets not giving a tearaway gaps, so I do feel that we would be in a zigzag kind of a formation. Even if you look at Reliance, while it is drifting up, there have been days of greens and reds on the price action. So what I'm looking here again is to capture the essence of theta decay, since we are again nearing the expiries. So the similar setup as SBIN, wherein I will like to set up a short strangle of 2,900 put and 3,000 call, while I would buy the offsets at 2,840 put and 3,060 call, giving a maximum profit of about 6,000 rupees and stop loss at either of the breach levels, break-even levels, is about 1,500 rupees. So with a deployment of a 60,000 rupees margin, the ROI works out to a cool 10%. So this is a pure theta decay play and not really taking a directional bet on the index, on the stock.
Right. Amit, just a follow-up operational question on both these strategies. It just so happens that when you reach the final day of the expiry, if you let your options expire, of course, you will probably be expected to give some amount of delivery because these are stock options. The other, alternative in this case is that you try and exit before the expiry, maybe a day before or maybe an hour before expiry. But under those circumstances, you don't always get the premiums that you're expected to get because of certain liquidity issues which you don't see in indices. How do you address this issue here?
So ideally, if I were to trade these stock options, I mean, if you've noticed the pattern that I have been following, Agam, I have always stuck to large mega caps where in stock options where the liquidity is profound, right? I'm not looking at trading Zydus Life or any of those for an example, say. So while I feel that the liquidity is going to be fairly good in the counters that we have discussed now, but as a thumb rule, as a good practice, as an options trader, I would look to take my exits, whether in profit or in loss, in a stock option trade on the Monday or maximum on the Tuesday of the expiry week, in order to avoid the gamma risk and also the liquidity issues. We might find, exiting one of those legs could, we might give away a lot of our accumulated profits in account of slippages. So I would definitely look at exiting and not really wait till the expiry date on Thursday or Wednesday. I would ideally, on a comfortable level, exit on Tuesday or Monday late, because by that time, most of the credit is already accrued. If the trade plays out in your favor, you're already making 80 to 70% of the maximum credit in that setup. So there is not really too much. So the additional incremental risk reward is not in your favor for the last 2 days. So why be in that position?
Fair enough, and very, very well put, Amit. Thank you so much for that explanation. Of course, also thank you for joining us and giving us your views, also giving us a couple of trading ideas. That's two trading large cap ideas, of course, both Nifty counters that we have for us. And with that, Samina, it's back to you.
That is the FNO update coming in this morning, and stock ideas from our FNO guest. A quick check on how implied Nifty is looking after 5 straight days of gains. It is expected to take a break in early minutes of trade. Implied Nifty indicating to a gap down. Remember, we don't have too many cues coming in from Wall Street as those markets are shut on back of President's Day. Well, there's going to be one stock that will be in focus from the get-go this morning, and that's Whirlpool. We have news or reports and confirmations coming in from the promoters, of course, where Whirlpool promoters are expected to sell 24% stake in the India unit at a 7-point discount to its closing market price yesterday via block deal. Mahima is standing by with more on this. Mahima, the management had indicated that they would be looking to do this about 3 months ago, if I'm not wrong. This time around, actually executing, not just talking.
Right, Samina, so as you rightly mentioned, on 30th of November 2023, there was an exchange filing which said that Whirlpool Corporation will part 24% of its stake in Whirlpool India. Now, even if they, and now today we have news from sources that they will be selling 24% of their stake via block deal. So, Whirlpool Corporation holds 75% at present in Whirlpool India. So, even if they sell 24% stake, they'll be still holding the majority stake of 51%. Now, Whirlpool Mauritius will be the selling shareholder here, and Goldman Sachs is the sole broker for this deal. Now, talking about the transaction stake value, the floor price is set at 1230 per piece, which is at a 7.6% discount from its yesterday's closing price, and 30.44 million shares will be exchanged, and the total value of transaction stands at approximately 3,700 crores. Now, the purpose of stake sale is that Whirlpool Corporation wants to improve their debt positions. They want to repay their debt levels and enhance their balance sheet flexibility. The stock has fallen approximately 12.9% since their exchange filing on 30th of November. And if we talk about Whirlpool Corporation, in the recent SEC filing also, they've mentioned that their debt stands at approximately $6,400 million, and they want to repay approximately $500 million of their debt in Q4. And overall also, stock performance of Whirlpool India, if we see, has not been very good. 1 month the stock has been hardly up 1.8%, 6 months it's been down almost 6.5%, and 1 year it's hardly been up 2.7%. So this will be one of the key stocks to watch out for today. Let's see how the stock pans out to be after the sale happens.
It'll be interesting, Mahima. It'll be a stock we'll all be watching out for from the get-go on Whirlpool. A big block deal expected as the promoters, which is Whirlpool Mauritius, looks to reduce its debt by liquidating some of its holding in the local entity. Remember, they will still be the largest shareholder, but of course, from a 75% holding, that number now will come down to close to about 51%, making them the majority shareholder. Well, along with that, there'll be a whole bunch of other names. HDFC Bank as well will be active in today's day of trade, maybe getting a break and a breather from all that negative commentary after the CEO, MD, addressed the investor meet and talked about being cognizant and of course, indicating that they have and will communicate better going ahead. Bernstein, of course, has upgraded the counter to an outperform and continues to hold their stand on HDFC Bank. Well, along with that, talking about upgrades, has also been a downgrade. One stock that disappointed the street when it reported its earnings was UPL. UPL's third quarter revenues were down over 28%. Year-on-year, EBITDA margins were down 1% due to the ongoing industry destocking, channel rebates and high-cost inventory liquidation by UPL. Well, we have with us Akash Gupta, Director Corporate Ratings, Fitch Ratings, who joins in to talk to us about what his concerns are about UPL. Hi Akash, good morning. Thanks for joining us. Akash, you seem disappointed with UPL. There's been a downgrade from Fitch. You want to talk to us about what has led to this? Because there is a sense that maybe they're turning the corner. You know, the cycle of destocking may eventually be coming to an end.
Sure. So let me talk about the downgrade rationale first. And basically, what we saw was UPL's leverage has been elevated since it made the Arista acquisition back in FY19. So we expected rapid deleveraging, and that did not happen. Additionally, last year, industry conditions worsened, and we saw demand being weak due to destocking, as you mentioned, and supply increasing due to capacity additions in China. So we now estimate that UPL's leverage will remain elevated in FY24 and FY25 and decline gradually. So a weaker financial profile and risks on the supply side in the industry are behind our downgrade.
Leverage will continue to be a concern. How long was this on your watch list to begin with, and what happened this quarter that led you to act on your, of course, downgrade?
So UPL has been on a negative outlook for a couple of years now. There were issues earlier about working capital increase. If you remember, in the last quarter of FY22, there was a significant increase in UPL's working capital. And then since last year, they have been saying that the industry conditions are not great. There has been destocking at the distributor level. We also think that the supply side risks have sort of taken a toll on UPL's performance. And now we see that these risks, although they should abate over the next few years, they will, nonetheless, the deleveraging would be gradual. And that is one thing that we have sort of factored in our rating action.
Going ahead, this downgrade is only going to make it tougher for a UPL to go out and raise low-quality funds or debt in that sense, right? I mean, it's a little bit of a cat and mouse that's going to play out now. So while this downgrade has happened, I'm assuming if UPL fulfills a few conditions, goes out and deleverages, which is going to make it tougher, like I said, post your derating, how do you expect this to play out in the foreseeable future if the fundamentals of the industry actually improve?
So, I mean, obviously UPL remains a good quality credit, maybe not investment grade, but yeah, I mean, the business fundamentals remain strong. And UPL is also undertaking initiatives to deleverage in the form of capital raising. We know that it has the board has approved a rights issue. The company is also talking about raising additional capital in its various business verticals. So I think over the next few years, these capital raising initiatives should help it deleverage. As I said, we also expect industry conditions to improve. And with this, hopefully we'll see better financial metrics, and that should be reflected in our ratings as well as its financing costs.
Akash, any concerns? I mean, I know it's sounding very negative here, but any concerns on failing or defaulting on that outstanding debt that the company has? I do understand that the cycle of destocking is improving. That should be coming to an end. But just give us perspective, right? Because I know investors generally have been worried post this, and your rating action of today will play out or pan out the landscape for tomorrow for the UPL.
So one thing which is which UPL has done well is it has spread out its debt maturity profile. So over the next 12 months or so, there is no long-term debt maturity. And regarding the short-term debt, which is mainly for working capital, we do not see a lot of stresses emerge. What we understand is that the banking relationships are still there. Obviously, UPL, the presence on the ground across the world is there. It has competencies in terms of its product diversification. So we do not sort of expect any stresses emerge in terms of its debt repayment capacity.
Akash, if you see them raise some equity or liquidate equity in that sense and improve the debt equity ratio, do you think you'd go back and revisit your rating on UPL in the next quarter or the next couple of quarters?
Sure. So we look at debt to EBITDA. So that is the key metric that we focus on. And our rating actions certainly take into account past performance as well as our outlook for the next few years. So if UPL's performance improves, it could be the next couple of quarters, it could be a year or so, we certainly would take that into account and calibrate our ratings accordingly.
Akash, so it's past performance more than the outlook that has led to that downgrade from what I'm picking up from this conversation. But hopefully it works out for UPL and you probably go back and relook at those numbers. But for now, it's stress. A bunch of brokerage downgrades, rating agencies also expressing their concern about the high leverage that UPL holds on its books. But thank you, Akash. Great having you today on the show. We also have with us Amar Dio and Sunny Agarwal joining in for a technical and a fundamental view. Amar, 5 straight days of gains, law of averages usually plays out. It didn't play out yesterday. But do you think today could be a morning of some profit taking off the table or new highs down the corner?
Yeah, I would say markets, the way the markets have really rallied over the last few trading sessions. And also what we see is that there has been a revival in the private sector banks. So be it ICICI Bank, which has performed well, and it has taken out some crucial zones of resistance. But still 1050, 1060, that's a zone of resistance. But that also is likely to be taken out. And also the good part is that HDFC definitely seems to have formed a base. So now we'll have to watch out how these two actually play out, because they would have a significant bearing on the overall market upside scenario. And if I look at the technicals and the derivatives data, so overall, I've been always saying that the long-term, intermediate-term trend for the market remains positive and strong. And short-term, yeah, we are seeing some sort of consolidation. It's approaching very crucial zone. So I would say 22,150, 22,200, that's a zone of resistance, but still the favor, it's in favor of the bulls. So any pullback is a buying opportunity. Support for immediate level for support for Nifty is around 22,000 odd levels. Whereas on the upside, 22,200 is a zone of immediate resistance. Also, we've seen long build-up happening in Nifty over the last couple of days. So that also shows that there is still, I would say, interest, but there is some caution at the same time.
Yep, absolutely. Just some details on the Z story that has been making the round since this morning, and it has been reporting that renegotiations could be on. Now, sources have told NDTV Profit exclusively that lawyers are engaging in talks right now from both sides. That's from Z and Sony. The ball is in Sony's court whether they want to revive these merger talks or not. Because remember, Sony had pulled the plug on the deal on the 22nd of January for a $10 billion merger with Z. The stalemate, though, over key issues definitely continues, even though, as Z has stated publicly, Puneet Goenka is willing to step down from position of MD and CEO. But the negotiations, will they move ahead or not? Why will Sony come back to the discussion table is still under question. It's a key clarification because a newspaper report this morning seemed to suggest that negotiations are still on and there is a specific deadline attached with that. What we're learning is that perhaps there is no such strict deadline of an answer within 24 to 48 hours, but the stalemate on those sticking points is definitely still a big issue. We'll wait and see how that stock really reacts. Amar, let me come to you on some of these, and two stocks really. Z is one of them under a cloud of what will happen next, a lot of uncertainty. I would say Paytm is the other one. Any views on either of the two? And I'll go with Amar on the charts first on it.
Yeah, so talking about Z, see, Z overall has been actually a non-performer. If you look at the stock did rally towards 300 levels, and then it's currently around 178.80. So the stock was actually, or I would say markets were anticipating that a merger would go through and that would be positive, but that's not happened. And if you look at the long-term charts, intermediate-term trend, even the intermediate-term trend, that really tells me that still it's not out of the woods yet. So the levels to watch out for, because it did make a low of 152 on 24th of, I think 23rd of January. So now that should act as a key support zone for the stock. And if we go back in time, the stock used to trade as low as that was though in the COVID times, even it had hit 119, 120 levels. So 150 is a level to watch out for on Z. That's a crucial zone. And for any upside move, the stock needs to sustain above the 200 levels. Then we could say that the stock has there's some positive news that's building in the stock. If the stock sustains above 200 levels, then it could rally higher. But the structure of the stock isn't very promising to say.
Absolutely. Sunny, let me get a view from you on, what we're going to see as the big movers this morning in the markets, considering that no major triggers coming in. Do you think that metals will see some sort of shine because of what we've seen in China with a cutting of the 5-year loan rate?
Good morning and thanks for having me on the show. Definitely, I feel, again, metal is a global cyclical commodities and driven by the global demand and supply environment. And China is one of the largest consumer of the metal at the current juncture. So definitely any tailwind which would lead to the increase in demand from a Chinese economy as far as metals are concerned augurs well for a metal. But again, one has to keep in mind that any rate cut translates into the demand, increase in demand environment. It takes some time, maybe 6 to 9 months, 12 months. So we may see a temporary knee-jerk reaction today as far as metal stocks are concerned. But from a medium to long-term perspective, anyway, what I feel is that instead of metal, one should focus on mining companies. As we all know that at a current juncture, India is going to auction many mining blocks, so whether it is lithium or critical mineral block. So that will add to the lot of kind of new revenue stream for multiple mining companies. So I feel at a current juncture, from a short to medium term perspective, mining companies look relatively a better bet as compared to the metal companies.
Absolutely. We'll take a very short break and come right back. Quick look at the implied open before we get into that break. We're coming back with pre-open rates as well. Are we looking at a choppy day of trade? Possibly. A range-bound trade? Possibly. We've seen that volatility also increase. What are the top picks that you should see in a market like this today? We're coming right back with that and more.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
सौ में सौ
Welcome back. You're watching India Market Open. Implied Nifty is indicating a bit of a gap down this morning, but one of the big losers in the second half of trade yesterday was Coal India. The counter went home with a cut of 5%, and we've got Rupesh Sankhe, Vice President of Research at Elara Capital, and now joining in with more on those takeaways from the con call. Morning, Rupesh. Thanks for joining in. Rupesh, the street, investors and analysts, including yourself, I believe, were a little disappointed coming out of the Coal India con call. Take us through what were the key pointers that stood out?
Definitely. Good morning. Definitely, the Coal India guidance for FY24 was close to 780 million tons, and there will be a shortfall around 15 million tons we are expecting. And for FY25 also, their target was earlier was 850 million tons. So we are expecting close to 825 kind of a target for FY25. Now, if you look at the stock performance, was largely because of higher e-auction realization that witnessed in the last 12 to 15 months. And there is a lot of concern is there on the e-auction realization, which has down to almost 3,200 rupees per ton. Earlier, it was close to 7,000 rupees per ton. And we believe that the e-auction realization will go down further because a lot of stock inventory is there. And the India's peak demand, which was close to 240 gigawatt, has come down to 210 gigawatt. So slightly concerned there on the e-auction realization front. On the volume front, we have seen the new thermal capacity expansion there around 70 gigawatt by 2032. And that has boosted the sentiment around Coal India in the last 12 to 15 months. So to that extent, we believe that what market was factoring low single-digit volume growth, we're expecting close to 5 to 5.5% kind of volume growth in the next 7 to 8 years. But the e-auction realization will put pressure on the margins and earning going forward. So earning will come under pressure in FY25 and 26, and that investor will look at. If you look at the valuation, is currently at close to 4.5 times EV/EBITDA multiple, which is a quite 40-50% discount to their historical average. But looking at the volume trajectory beyond FY30, I think the market will not give them higher multiple. But definitely at this valuation, a stock is looking attractive, and there is a earning. We could expect around 30,000 pound kind of a profit there. But I think the decent level to enter is below 400 rupees, where we will see a lot of value there in the stock.
Sure. Rupesh, good morning. Just want to get a sense of why we saw this extent of panic, because your volume guidance or output guidance was reduced by just about 10 metric tons. So from 780 MT to 770 MT, you're saying could be 15 metric tons. And the drop in e-auction percentages is expected to be made up by volume growth. Do you think that we saw a bit of a panic reaction? Are you expecting a pullback today in trade in Coal India?
You're right. I don't think that the volume cut will have major impact. What that the premium to the e-auction, which is there getting around 117%, I think that will go down further. And that will, because e-auction contribute close to 30% of their earnings. That was a negative. Secondly, if you look at the volume uptake, around, I think, next 4 to 5 years, we expect that volume will be there. But we don't expect that kind of earning what they delivered in the last 2 years. And that is a slightly negative on the Coal India. But volume front, I don't think that market will react. Market will react more on the e-auction premium. And that can go down further. Because if you remember 4 or 5 years back, the e-auction premium was close to only 2,000 rupees per ton. it has gone to 7,000. It's now coming back to 3,000 level. And that is what a worrying factor for the market, whether they will maintain this kind of earning growth or not. So that is an issue there. And other than that, I think a volume growth will be there because India will witness significant growth in the power demand, and renewable capacity is not coming in that pace. So I think coal has to be there to support the higher increased power demand going ahead. So we are not worried on the coal uptake front, but I think e-auction volume will come under pressure for sure.
Right, thank you for that. It was good talking to you. That's the word coming in on coal. India may have seen like a little bit of an overreaction yesterday, but it'll be interesting to see how the stock reacts today after it's digested that news overnight. Well, Amar, you want to come in on the charts on Coal India and any other stocks that you're recommending this morning?
Yeah, first talking about Coal India. See, Coal India has witnessed a spectacular rally. So if we look at the stock, so as earlier September, it was almost 238. Currently, it's around 450, 460 levels. And if we go back in time and see Coal India used to trade around 447 in December I would say in 2015. So it had made a high of 447 in 2015, and then it had corrected all the way down. Currently, it's trading. So it is still very strong on the long-term charts. Short-term, we've seen some sort of correction. So effectively, it means is that any pullback in the stock is a buying opportunity. Support level for the stock is somewhere around 400, 420. That's a very strong support zone. Talking about stocks which could be of interest, one is from the pharma space, and that is Cipla. So if I look at Cipla is in a different trajectory altogether. And the stock continues to remain very strong on various timeframes, countries from 1470 odd levels. The stock has rallied significantly. So not at the current levels, but any pullback in the stock is a buying opportunity. And if you look at crucial support zones, that's around 1370, 1400 levels. Upside, the stock could rally towards 1540, 1550 levels in the short term. So this is one stock one can look at. And the other is from the, I would say, PSU, that is Shaping Corporation of India. This is one stock which has rallied, corrected from 280 levels. Currently, it's around 240. So the stock has a potential to rally back towards 265, 270 odd levels, with crucial support for the stock seen around 200 odd. So these are two stocks one can look at.
Just looking at two stocks that we've been discussing and what they're doing pre-open, Z Entertainment up about over 6% and pre-open trade, and we just broke those details about conversations between lawyers that are going on. Paytm again at 5% for a second day in a row. The RBI FAQ is still being seen in a positive light, one supposes. Sunny, I want to come to you on Coal India. You already spoke about Z, but Coal India and Paytm, if you have any view.
So yeah, we continue to remain bullish on Coal India, although there may be a short-term hiccup in terms of reduction in price due to a downtrend in e-auction premium. But what I feel is that if somebody take a slightly longer horizon, ultimately Coal India is the indirect play on thermal power growth story of India. And valuation continue to remain attractive, trading at 6 to 7% dividend yield. I think a minor downgrade by the in the earning, and to that extent we have already seen reaction yesterday. I think ultimately stock will stabilize and is heading towards 500 plus level in a medium to long term, from a medium to long term perspective. And regarding Paytm, I think still the clarity needs to emerge from the company side. How will the ecosystem pose restriction on operations of Paytm Payment Bank? The ecosystem of cross-selling of the various financial product to its network of consumer as well as the vendors. How will that emerge, and what will be the growth through the sale of these various financial products? So I think I would like to wait and watch as far as Paytm is concerned. Coal India, I would like to add on deep in my medium to long term portfolio.
Amar, MRPL, 57% gains in the last 1 week. What is this? Uncharted territories? Is there some more room on the upside?
Yeah, MRPL has been, I would say, you rightly said, the stock, if you look at this month itself, the stock is more than up by 60%, and yearly it has given returns of almost 114%. So if you look at the stock was consolidating, and somewhere around 198, 200, which the stock had made around the first week of February. That was taken out. And in the last 4 trading sessions, the stock has witnessed a significant rally. So as you rightly said, it's in uncharted territory. But the good part is that the momentum there on the long-term charts is very strong. I would say one of the strongest charts which I've seen in recent times. So, and also the volumes have been phenomenal, because if you go back and see, the stock was consolidating in the first week of January. And then what happened was that towards the 11th of January, the stock witnessed a major move that day, and that also on significant volumes and delivery quantity. And again, recently, last 4 trading sessions, we've seen increased volumes and delivery quantity compared to the averages for the last 20 days. So that tells me that definitely there's a lot of interest in the stock. The uptrend remains strong. The big question is, do you buy at this level or wait for correction? That's a tough call to make. Looking at the levels, if you ask me, around 230, 250, that's a zone of support where the stock, if it could correct, that could be an opportunity to buy. On the upside, the way the stock is rallying, 300, 320 doesn't go that far.
Sunny, just a quick one from you on fundamentally, what's the word on MRPL? I mean, the stock's been on a tear. I know there have been a bunch of upgrades coming in for the oil and gas sector, and MRPL seems to feature on top of the list for most of the topics. But what is the story here, and what is your target fundamentally on MRPL?
I think the story in the MRPL is on expansion on GRM. So if you see of late, because of this Red Sea crisis, we have seen spiked in Singapore GRM and Indian refineries, whether it is MRPL, IOC, HP, BP. They all operate on export parity price, and in case there is a boost in Singapore GRM, obviously there is a boost to the earning as far as all these refining businesses are concerned. And that to that extent, we have seen that bump up in the Q3 numbers, and as per the management commentary, this advantage will continue in the Q4 also. So I feel that is the reason we are seeing a bump up, a rally in the MRPL stock price. Again, I feel trading at a reasonable valuation at a current juncture. But again, one has to keep in mind that GRM is something which doesn't stay sacrosanct at one level, right? It is a cyclical, it's a globally driven parameter based on the demand and supply environment. So right now, I would like to take a kind of neutral view after this humongous rally which we have seen in MRPL. And I feel the better bets are oil marketing companies which offer a mix of both advantage of both refining business as well as marketing business. So companies like IOC, BP, and HP are a relatively safer risk-reward bet at a current juncture.
Yep, absolutely. Now, pre-open rates have settled. You're looking like you're set for a flat trade. IT stocks under a bit of pressure, and you're seeing the Nifty IT down about 0.5%, while not too much movement on the Sensex and Nifty. Broader markets, small cap stocks seem to be doing fairly well, with certain specific stocks showing some action. But which are the other ones that you're going to see in focus? Varsha joins us with more.
Good morning, guys. So let's start with Deepak Fertilizers and Petrochemicals, where it has signed 15-year LNG contract with Norway-based Equinor. Now, agreement is for annual supplies of up to 0.65 million tons over 15 years. Now, this tie-up provides for trading LNG parcels and companies' growing captive needs. This LNG will be delivered to west coast of India. Next, we have Godrej Consumer, where it is divesting entire stake in Godrej East Africa Holdings Mauritius. Now, the sale of entire stake to be completed by Q4 FY24 or by Q1 FY25. If you see, this contributed, the Godrej East Africa contributed almost 1% to company's revenue, and its net worth as on 31st March 2023 contributed almost 4.6% to company's overall net worth. Then we have CIE Automotive, where it has released its Q4 earnings, where revenue is flat. This is led by European market slowdown and US off-highway market drop. While if you see, EBITDA is up 11%, margins were up 160 basis points at 14% versus 13% last year. Net profit was down 9% at 177 crore.
All right, Varsha, some of those stocks on that radar. Very quickly, a few minutes to open. Amar, your take on Deepak Fertilizers?
Looking at Deepak Fertilizers, I would say this is one stock which has been, I would say, one of the non-performers, and the stock has corrected significantly from almost 700 levels to currently around 500. would say one should stay away from the stock right now. There could be a pullback, but the pullback isn't likely to sustain because the long-term charts are not at all strong. So it could be a dead cat bounce at most. Talking about the levels to watch out for, the stock would have support coming around the 450, 460 zone. And if there is a pullback, the stock could rally towards 530, 550 zones. It's more of the structure of the chart really doesn't inspire much confidence.
So stock up 4.5% pre-open, but Amar says it's a more structural thing, not too much confidence over there. Sunny, if I were to ask you about your top trade pre-open, what would that be?
I would like to bet on Mahindra and Mahindra. I think a very robust set of results we have seen for the December quarter. And at the same time, order book continue to remain very healthy for SUV portfolio. The production is likely to ramp up from quarter 4, and we will further see boost up in production in FY25. So trading at a reasonable valuation, standalone business trading at 18 to 19 times price to earning multiple, I think can be added in a short to medium term portfolio with a price target of 2200 as far as Mahindra is concerned.
Well, that's the view coming in on M&M from a fundamental point of view. That is the top stock recommendation, M&M, from our guest. In the meantime, you're expecting a flat to slightly lower start, more or less on expected lines. So no surprises there. We've had 5 straight days of gains. What you will see today is minor profit taking that could emerge. But the good news is the bulls still are in control of the street. The Wix did see a jump up yesterday, but that hasn't really dented sentiment to a very large extent. Well, as expected, below 22,100, 45 points lower on the Nifty. You are seeing a little bit of profit taking like we've indicated and expected in today's trade. The Sensex as well trading in line, flat to slightly lower, 150 points off on the Sensex. The Nifty down about 40 odd points. Of course, what we are seeing that the gap could get bought into over the next couple of minutes, and that I think will be interesting to see if that actually happens. So holding around 22,085 on the Nifty itself. A quick check on how and what's contributing to the market moves and how the broader markets are performing. What we have picked up in the last couple of months now is that the broader markets have seen gross outperformance coming in as compared to the benchmark. Similar trend this morning as well. The mid-cap index trading marginally better than the frontline names, and the small-cap index trades the gain actually up about 0.2%. Well, across the Nifty 50 counters, like I said, the bias may still be on the upside, but from the look of it, maybe not. There is more selling than gaining, or buying rather, coming in on the street this morning. Bernstein has upgraded Power Grid, and that leads to a big bump up in trade this morning. 2.5% higher is what we've got. Kotak Mahindra on senior management rejig sees a little bit of a gain, 1% higher. Pharma is not looking too bad. Oil and gas continues to feature in the top 3 to 4 stocks that are gaining. ONGC up marginally. Metal seeing a little bit of buying on back of some easing, much anticipated easing coming in from the Chinese central bank, but no runaway gains there yet for metals that we're picking up on. UPL has been under pressure, continues to trade flat in early trade. On the sell side, it's Coal India. The disappointment continues after a 5% cut yesterday. The stock continues to see some pressure this morning as well. Aisha is down about 1%, so auto is seeing profit taking after a sharp run up post their earnings and brokerage upgrades that we've seen. Insurance continues to see some weakness. SBI Life, HDFC Life are all trading flat with slightly lower buys. I'm going to find HDFC Bank to see if there's any sort of relief coming in on the counter as the markets digested the clarity that came in from the management. So the communication gap finally seeing some resolution. But I believe the activity may be in the small cap space. Lots of counters there. Sugar as well could be one spot you want to watch out for today.
Absolutely. Coal India is still getting hammered despite a lot of brokerages saying that the concerns in that analyst call are short term. But meanwhile, the morning is seeing a lot of action from Z and Paytm, stocks which have been notorious for a lot of news flow and uncertainty in terms of fundamentals. But Z reacting to a story that negotiations are back on. Now, what we are learning is it's the lawyers that are talking, but no clarity yet on whether Sony will agree to any change at all, because Z is already offering pretty much everything that Sony wants. So will that go anywhere? is very unclear. That stock anyway, 6% up. Paytm seems to be, at that 5% circuit for a second day in a row. The RBI FAQs have given some comfort to the market that Paytm will survive, or perhaps has a better chance of surviving. Axis Bank has also come in to handle their nodal accounts, and that has given comfort, and you're seeing that play out. Godrej Consumer is the other one. Now, this is an interesting play in any case. When you compare it to its peers, but it is divesting its firm, its arm in Africa, actually, in Mauritius. It's not a very big stake sale. It's about just 30 crores odd, but that stock responding positively. Deepak Fertilizers is the other one, and we already saw a response in pre-open trade. Deepak Fertilizers, not Deepak Nitrite. Deepak Fertilizers is in the news because it signed a 15-year LNG contract with the Norway-based Equinor agreement, and which is why you're seeing that stock up about 9%, a zoom up in open trade. NBCC also news-based this morning. They've received 3 work orders worth about 370 crores, and that's why you're seeing NBCC also having a pretty good morning. So some spots of green in the broader markets, but not too much activity as we open up for trade.
Well, you've got a few names that you want to see. EID Perry from the sugar pack is leading from the front, up 6% in trade. It's not just Deepak Fertilizers, but the rest of the fertilizer pack is also picking up on the euphoria and trading highest. Sugar stocks like Balrampur Chini are all trading with gains anywhere in the range of 2 to 4% each. So sugar shortfall is what's leading to a bump up for sugar names. EID Perry, like I said, leading from the front, seeing a big up move in today's trade. Z is settling at 188. Remember, it's in an F&O band, so there's only that much the stock can move up in today's day of trade, no matter how positive or negative the news flow remains. This morning trading with a 6% rally. You've also got MMTC that's looking good. Phoenix Mills is an aberration. The realty pack holding itself together. Blue Star, we spoke to them yesterday, and they of course seem to be doing quite well. They are solid earnings, reduced debt, all those factors contributing well. The counter trades the gain of about 1%, just over 1.5%. Let's put up MRPL and see what it's getting up to. After a 57% up move in the last few weeks, the stock sees a big cut this morning. Profit taking warranted on MRPL. The counter trades the cut of 4.5%. You've also got Whirlpool that is seeing some pressure, 3% off on Whirlpool. Aegis Logistics, SJVN, Coal India are some of your other gainers that we are picking up on. So that's largely where the market is at this morning. A morning of some profit taking, a morning of consolidation, more or less on expected lines. Amar, spotted anything right now on opening?
Yeah, I would say if we look at the some of the stocks, we are seeing some sort of movement here in this Omax Limited. This is one stock which has from the reality space. This is one stock which is I would say witnessing a pullback, and it is moving higher. So this is one stock from the reality space. It is close to a key zone of resistance that's around 120, 125. That is taken out, then the stock has a potential to rally around 10 to 12%. And the other stock to look at is, I would say, Minda Corporation. This is again one stock which is strong today, and looking at the charts, the stock has a potential to rally towards the 455, 460 zone. So these are two stocks which are looking promising on the charts as of now.
Right. Amar, you want to quickly share your word with me on the 3 top gainers? Deepak Fertilizer, Z I know is in an F&O band, but nevertheless, if you've got a view on that, and 197 Communication.
So Deepak Fertilizer, we are seeing some sort of pullback happening today. The stock is up by almost 10% towards 540 odd levels. So there is a possibility that we could see some pullback in the stock towards 560 odd levels. But that's going to be a zone of resistance where the stock could meet with some sort of selling pressure. So on the upside, it would be around 550, 560. That's a zone of resistance where the stock would meet with. And talking about Z, the stock is basically, you have to remember that such stocks where there's a lot of news flows, the stock moves one way or the other based on the news that comes, whether it's positive or negative. So having said that, just like PTM on the other hand. So Z, I would say it's more of a risky trade as of now. If something works out fine, otherwise we could see the stock correcting on the upside 200, 220, that's the zone of resistance, downside 150. So it's more of a range play. Technically, if you ask me, there's not much on the charts as of now for Z.
Right. Thank you. Thank you, both of you, for joining us this morning on the show. It's a quiet start, but much needed after the market, of course, made a new intraday high in yesterday's trade. Talking about the markets, the euphoria, the excitement, we believe Julius Baer, India has raised about 300 crores for their very first Cat3 AIF. Umang Papneja, CEO of Julius Baer, now joins in to talk to us about what investors are thinking, what this fund is going to be investing in, whether or not this is the first or the last fundraise coming into this one. Umang, good morning. Thank you for joining us in the studios.
Thanks, Amina.
Umang, I'm going to start with a very basic question first before we talk about the broader markets and the sectors and what investors are telling you. This is a Cat3 AIF. Do you already have an existing PMS license?
Yes, we do.
So what was the rationale of launching an AIF? Was it to get foreign money into India?
No, not at all. I'll just explain probably the background of how, investor preferences have changed, and particularly in the HNI segment. So let me just rewind back maybe 30 to 60 years when we started Unit Trust of India, which was UTI, in 1964. And then the private sector mutual funds came in the late 90s. And since then, we've got 50 lakh crores in the mutual fund industry. And in 2013 is when SEBI came up with the AIF license.
Yep.
Right? So in 10 years, we've got almost 9 lakh crores, almost hitting 10 lakh crores in the last 10 years itself. So what we took 30 to 60 years to reach 50 lakh crores, we've reached almost 20% of that in 10 years. So clearly investor preferences in this HNI segment, because AIF predominantly is an HNI and institutional product, investor preferences are changing to unitized offerings which are more personal in nature, right? So that was the rationale. So we had already a PMS license, as you mentioned, and there was a existing good track record, and that's the logical extension why we took a AIF license. Also from a history perspective, Julius Baer, as you know, earlier was DSP Merrill Lynch, which became Julius Baer, and we've always been an equities powerhouse. Equities has been a bedrock, so just a logical extension.
Your PMS, of course, is a non-discretionary PMS from what I remember.
We
you
have
a
both.
discretionary PMS
Yes.
as well. The key difference, and from what I understand, between a PMS and an AIF Cat3 is, one, the cost, the lock-ins. Is that the only difference between the PMS strategies that you're currently running and the AIF that you've launched? I mean, what is the rationale for...
So, okay. So let's compare PMS versus an AIF. So PMS, of course, every individual has its own account, so they open a DMAT and bank account.
Yeah.
Whereas in an AIF, you have number of units, just like a mutual fund into NAV, right? So it becomes quite smooth in terms of your tax returns, in terms of reporting, because you just show your number of units and NAV, and the tax is paid by the fund in the case of Cat3, not in case of Cat2. And what you get in hand is a post-tax proceed. So it's far more simpler to get into an AIF as compared to a PMS.
So its efficiency
It's
is...
efficiencies, yeah.
And what about the minimum ticket for an AIF? I know
So
PMS
that
is 50 lakhs regulated.
So AIF is by SEBI 1 crore is the minimum.
Okay.
Unless if you are a registered investor, where you can say that you can probably put lesser.
Yeah.
But otherwise it's 1 crore.
Okay, so let's talk about this fundraising that you've done, and it's about what, 300 crores? Is the fund closed now?
Yes, it's almost closed, and it's entirely domestic money. Just going back to your old question, whether it was for foreigners, it was not. It's largely, it's 100% domestic money.
And how big is the size of the fund? If 300 crores is almost closed, what was this, what did you set out to raise?
So it was 300 crores, and we've crossed the 300 number. So I think last number which I saw yesterday was 332 or something.
Okay, and this is largely existing clients or new clients that have come on board?
Mix of both.
Okay. Okay, so let's now talk about when this fund goes out and allocates the money, right?
Yeah.
I do know that mutual funds usually have to allocate immediately. PMSs have the option of doing a cash call or a staggered investment. With an AIF and with your AIF, what is going to be the investment strategy?
Perfect, fantastic question. So I think let's go back to the comparison which we were doing with AIF versus mutual funds. So AIFs have two distinct advantages. One is you do not need to put the money upfront on day one, unlike a mutual fund, so if you do allocate the whole thing. So here fund manager can choose to have say 50% drawdown or 60%, 40%, whatever the case may be. And secondly, also in the case of an AIF, you can part prepay as well in profit book and give it back. So in case of a mutual fund, you cannot do that. Either you fully redeem. In the case of a closed-ended mutual fund, when the date comes, you'll get your money back. A closed-ended mutual fund cannot say book 50% profits and give you back the money. So AIF has that flexibility. So what we are doing is we are basically taking it in 3 tranches, and also when we return the money, it's a 4-year closed-ended fund. We will also take profit-taking opportunities and return the money and stagger it out.
Right. So this is 300 crores of commitment or 300 crores of money that's already come through?
Commitment, out of which 50% has been drawn down.
So 150 has been drawn down,
Yes.
and the rest of the 150 will be drawn down over
in
how
the
long?
Next 3 months or so.
Okay, and your payouts will start as soon as 3 years?
Yes, you can pay out even earlier. So for instance, if market goes up 100% next year, we
You're
can
going to be
choose
more than
to,
happy to distribute
we
the
can
income.
choose to,
And in terms of strategy, is it primary and secondary market? Is it only secondary market? Where is allocations?
So this one
going
is
to be
secondary
made?
market, 100%.
Only, okay.
Yeah.
And any sort of sector-specific themes that you're following? I mean, the big talking point these days is EV and AI in India, right? And there's so much of euphoria around that. Is there a strategy that the fund managers adopted? Is it going to be market size focus? Is it going to be value, momentum, sectors, themes?
Sure. So first on the market cap, it's a multi-cap product. So the fund manager can choose to buy large caps as well as mid and small caps. At the moment, because of valuation comfort, I think it will be skewed largely towards large caps. Now on the strategy, so there are 3 pillars to the strategy. The first being companies which have exhibited very high earnings growth. So basically, you have companies which double profits in 3 to 4 years. Those will be one subset. Second is what we call fallen angels. Fallen angels, something which has gone out of flavor, and something is coming up, say a new plant is coming up, or something which will change the sales trajectory in the coming months or a year. So that is what we call fallen angels. And the third is special situation trades. So like for example a merger or a buyback. So these are the 3 things which we are focusing on, and the stocks will be a subset of these 3 themes.
And any government-focused themes? I know you talked about buybacks, but I think the big story that's been playing out over the last couple of years has been PSE.
Yeah.
And every now and then there'll be conversations around they look expensive. The gains have been in back of orders. Execution could be a concern. What I want to understand from you is a whole bunch of these PSEs still trade at a discount from what they were at the 2006-2012 peak.
Yeah.
Is there going to be any exposure to those stocks, to those sectors that are largely government-led?
So we are not saying that we'll not have PSUs or have PSUs. It's basically merit-wise whatever you want to buy in terms of stocks. But one thing I'll mention about PSUs is that what happened over the last few years is that a lot of PSUs gave out dividend. So when you give out dividend, your net worth remains flattish and your profits keep growing, so your ROEs start increasing, and suddenly everybody in the market started seeing that ROEs have inched up and PSUs have become much more efficient, and hence the re-rating. So if that continues, I think PSUs will still be trading or probably also trade at a premium, but that story continues, I think.
And how many stocks at an average will the
Around
portfolio
about
hold?
30 stocks.
And how frequently will it be rebalanced?
Not really. I mean, it's not.
It's a buy and hold strategy.
Yeah, it's a buy and hold strategy.
And if there was a need to rebalance, would it be event-based, return-based, incident-based?
Could be any. I mean, the fund manager can choose if there's something which changes the investment argument completely. That, of course, then the portfolio manager will rebalance, or it could be a profit-taking. It could be either.
And this is a long-only fund. So there's no short allocation that you are going to be making at this stage.
No, it's a long-only fund.
Okay, is there anything else about the fund that I haven't talked about? I think I've literally
largely a multi-cap with those 3 themes which I mentioned and completely listed. Maybe also I didn't talk about, we'll also invest in IPOs.
Exactly.
Yeah, so as an anchor or in the QIB category. Not the pre-IPO, it is largely just before it gets listed.
And also the 30 stocks that you are going to be adding to their portfolio, have they already been identified, Umang?
So as we speak, it's getting deployed. Yes, it's a large part of it is identified.
And is it a cap at 30, or we could, if you see
could
something
be
good, you
28 to
could
30.
still add,
Yeah,
you
of
could
course,
still
of
go out
course.
and add. It doesn't have to be one in, one out.
No.
Okay. Also, in terms of incremental capital, so if this fund does close at whatever 300, 350 crores, with the commitment of that sort of money, would you be? I'm sure you've talked to a lot of investors and you've probably had a lot of positive feedback, and hence the commitments. Would you be looking to raise a second AIF Cat3 fund?
Yes. So the way we are looking at our AIF business is that we're trying to give investment solutions to HNIs, right? So it's not that we're wanting to build an investment management business. So many things which probably are not available for HNIs generally through other manufacturers, that is what we'll create. So for example, if you want to play a credit strategy, you might want to play through a fund of fund and diversify. Instead of one fund buying only 10 or 12 papers, you might buy 5 funds, and hence you have exposure to 60 papers, right? So you're diversifying in terms of, so those kind of solutions we'll provide. And as
this is going to be a separate AIF that you would be looking.
I'm just giving an example. I'm not saying that
so
we're launching
it's more solution driven as opposed to.
This will be a solution driven business pertaining to our HNI clients.
Also, you know, while you mentioned this is more solution driven, I mean, it's imperative for our viewers to understand. I know this is for an ultra HNI segment, but what is the cost? What are you talked about the lock-in being 3 years. What is the cost? What is the carry?
So our fund, this fund does not have a carry. It's a fixed fee.
And no profit sharing.
No profit share. It's the most expensive share class is 1.5%, which keeps going down as you.
Okay, lovely. So it's not too much more than a PMS in that sense.
It's significantly lower.
Yeah, because I think most PMSs, if on the direct code, range anywhere in the range of 1 to 2%. So this is 1.5.
Yeah, I think maybe. I mean, not going into specifics, but generally the market is around 2% or so.
So this is 1.5 is shown. Oh, that's actually pretty good. And then there is a 3-year lock-in. If there is an exit...
No, there's no lock-in. It's a closed-ended fund, but the investor has an option to exit.
How long into the fund?
After 1 year.
Oh, lovely. Okay, so there is a 3-year closed-ended fund, but there is that option of exiting at the end of 1 year, like Umang indicated. Umang, we'll move away from the fund and talk about the view on the markets, because we should have some focus on that too. Where do you stand on the markets right now? We've all had the big event lined up in a few months from now is the election, but the outcome seems almost a given. Earnings is behind us, which was largely in line, if not better, for most sectors in terms of expectations. The run-up has been sharp. The rate cuts from the US are not coming anytime soon. I feel like the markets will very soon start missing triggers. Every time you see there's a price or time correction, they outdo us and move up. From where we stand right now, what is the advice to your clients? Allocate upfront, stay on the sidelines, sell on rally, buy on dips? How do you feel?
So if you look at history, I think any election year, most of the price, most of what's going to happen is priced in 6 months, in the first preceding 6 months of the election, right? I don't think this year also it's going to be different. So as you said, it's already a given outcome. So it's not going to happen. I mean, generally markets can be very different, but it's not going to happen that people are going to wait for the outcome and then start buying. I think you will see a large part of it getting discounted before the outcome itself. Now coming to, that is probably nobody can predict the short term, but maybe if I'm giving it a try. But largely on the longer term basis, I think the story is intact. And when you look at election to election, in the past few elections which India has happened, always the returns been around 12 to 15% CAGR, and I think it's not going to be very different long term, right? And when you're seeing this kind of momentum from a GDP growth and reaching a particular scale in global standards, I think it's a great story to be there.
It is a great story. We'll take a quick break. We'll come back, but we'll continue our conversation with Umang. So stay with us on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching India Market Open. Well, the markets are having a flat to slightly lower day. The breadth of the market also biased towards a downside in today's day of trade, holding on just around 22,100 on the index. And your biggest gainer is Deepak Fertilizer, 190 Communication, and Z Entertainment. My colleague Tamanna caught up with Deepak Nitrate's Maulik Mehta and began by asking him about the specialty chemical space and a roundup of what third quarter looked like for the company. This is a slice of that conversation.
I do agree that quarter three has not been a quarter of remarkable numbers for Deepak Nitrite standalone or consolidated. But I also believe that we have shown a significant ability, remarkable ability in that sense, to remain extremely relevant in the Indian chemical industry and its ability to supply to the world. Now, when we're talking about margins, yes, margins have been affected. Partially, that is because of volatility in the feedstock prices, partially because in the AgChem segment, a lot of customers that we have had their books being closed for December 31st, and they had an unusually difficult CY23. Now, moving ahead, once one looks at the pain that the chemical industry has been going through, I think part of this pain is to be seen in terms of the kind of challenges that it has gone through over the last year and a half. That challenge is, in most cases, ones which have not been expected. So whether it is the Red Sea crisis, whether it is the Ukraine war, whether it is these geopolitical tensions that have led to a delinking. Now, the chemical industry worldwide thrives when there is a stability because customers and suppliers can plan long, have order books accordingly, and they become a little bit skittish when there is global geopolitical uncertainty. And because of that, there is always a quarter catch-up in terms of resetting what they consider as the new normal. Looking forward, what we can see from our own markets as well as the supply chain that we are intrinsically linked to, we expect the demand resurgence to start from Indian consumption improvements. And we are also seeing a general worldwide improvement in terms of customers' confidence in its buying strategy over quarters. In the beginning, this means that there is an improvement in volumes. And over a period of time, this means that there is an improvement in margins as customers and suppliers are willing to settle down into a predictable planning strategy. Now, Deepak is broad in its sense of being able to supply to ag chem, pharma, materials,
Right.
construction, paper, detergents, etc., dyes and pigments, and hence we are de-risked in that sense. We don't have an over-dependence on one segment or another. At the same time, we do have 30% odd dependence on ag chem in the standalone business. And here we are seeing that there is an improvement, as I mentioned earlier, in volumes. And moving forward, we are certainly seeing an increase in wallet share. So over the last 6-8 months, what we have been doing concurrently is also brownfield capexes. And where brownfield is not good enough, greenfield capexes to be able to maintain or increase wallet shares. Right now, we've done it by increasing our headroom with existing plants. But over the next 12 months, there's a lot of semi-greenfield or significant brownfield expansion that is due to be commissioned.
Okay.
We remain bullish.
All right. So you remain bullish. Deepak Nitrite is looking at recovery mode. You're saying it will start from India. So let me begin with what kind of timelines you have in mind or you're predicting, because if this is determined on geopolitical factors settling down, that's something that has very little predictability one way or the other. So I want to understand the optimism when you say that recovery will come, and when do you think it begins?
So geopolitical uncertainty by its nature, I don't expect geopolitics to settle down.
Yeah.
This is a year when 90% of the world's democracies go to vote. I don't expect any sort of normal this year.
Yeah.
It's never happened in history, and I don't know when it'll ever happen next. But it's not the settling down. The settling down that I expect is in terms of the volatility, right? Now, for example, take the Ukraine and Russia war. There was a significant peak that took place with regards to natural gas availability as well as prices. But the war is not resolved today. In fact, it continues grindingly. Gas prices, on the other hand, have been able to find floor after floor over the last 3 or 4 months in wintertime. Right? So it is not about geopolitics settling down, but it is about the volatility calming down.
Okay.
So once that happens, all parties resume a sense of confidence in their buying and selling strategies. Also, it is pertinent to note that right now we're continuing to live in an environment which has relatively high-ish inflation trending downwards, but an interest rate which has not yet followed suit. A lot of players worldwide are hoping for that to happen imminently, but whether that happens in March or April or May, some of them have planned aggressive expenditures only following this rate announcement. So there is optimism. There are animal spirits led by India in that sense. But a lot of companies worldwide feel, at least right now, that there is no harm in waiting for a month or two before making any significant announcements or rejigging any significant parts of their supply chain.
Okay. In all of these factors that you mentioned, Mr. Mehta, I'm trying to understand how much of a pain point is the China factor, recovery in their exports, and some may describe it as dumping of chemicals from China. We've seen that impact chemical companies across the board. I just want to understand that context for Deepak Nitrite.
Sure. So China as a manufacturer of note should never be ignored, right? It's the largest chemical manufacturer in the world. Pretending like India is in a sense insulated or that it is delinked, or any region in that world for that matter. That is, I think it is high hope right now, and it is not a mature way to think about it, even though a lot of Indian companies do offer that as a solace. The chemical industry in China is plagued by a slightly different situation, in my opinion.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, Some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hello and welcome to NDTV Profit. You're watching a special where I'm in conversation with Sanjay Kumar Jain, Chairman cum Managing Director at IRCTC. Sir, thank you so very much for taking time out for us post your earnings release.
Thank you, Pallavi.
So, sir, to begin with, I'm actually curious to understand what is the strategy, what do you intend to do now that you've finally incorporated a payment aggregator business?
So it's already incorporated and
Right.
discussion is underway, will come soon.
Okay, all right. Sir, so the catering business revenue growth was strong this quarter, and one of the reasons for that was because of the significant addition of trains, 41 trains in Q3, which took the total to 1,518. So was this growth also driven by seasonal demand, and how are you rating or looking at the performance of this vertical?
Yeah, catering segment, both our catering segment and tourism segment this quarter has given a wonderful result. Basically, there are two reasons for catering business to grow. First, the festive season this year fell in quarter 3 as compared to quarter 2 last year. And the other, as you correctly told, the addition of Vande Bharat and other trains in railway system.
Okay. And do you see demand continuing to remain strong given that we're heading into peak travel season, the summer season?
Yeah. You see, there is a huge growth in the railway sector in particular and economy in general. So any addition of trains gives us all the 4 business which IRCTC is into. First is ticketing, another is catering, third one is rail neer, and the fourth one is your tourism. So addition of a train has a multiplier effect on the business of IRCTC.
Absolutely. All right. So in the mobile catering segment, what is the status of the move to longer tenders for trains that you're currently tied up with? I understand that all trains are meant to move to the 5+2 years in a phased manner. What are the benefits associated with longer term tenders?
So there are two things. First thing is we have Railway Board, Ministry of Railway has recently come out with a new catering policy in which they have permitted clustering of trains and investment into base kitchen by the vendors, not only in railway premises but outside railway premises, which will give two kinds of benefit. First, they have a assured business from IRCTC or railway, and additionally they can also work with in the private sector. So these are the two major changes what I am seeing here. This will bring investment into the for improvement of the quality, and at the same time the tenders are being done for 7 years. So longer period will help them in investing money and bringing quality and perceptible changes in what we see in the catering business today. So, and this ultimately will lead to a win-win-win situation for all. First for our customer, another is for the vendor who is there, and last but not the least the IRCTC.
Okay, all right. So would you also be able to give us an update on the non-rail catering business? What are the plans for expanding that particular segment, and what is the potential for revenue contribution going forward?
You see, it would not be good on my part to just specify some revenue, but I can tell you that we are already on 9 such ventures are already in operation, and many more are coming. We are under discussion with them. So anything if you put on zero will be infinite growth. So when NRC was very low or almost zero, so whatever we are doing will have a very, very high reward ratio.
Okay, all right. The tourism segment saw the biggest revenue growth. It now accounts for about 17.5% of revenue. What are the drivers of growth going forward? Do you anticipate that the share in the revenue mix will rise further going forward?
If you first thing, the tourism sector growth is with the policy change by Railway Board and bringing this Bharat Gaurav train into this for IRCTC for developing for improving rail-based tourism. This is one such policy which is creating a huge business for IRCTC tourism. Like we have already tied up with entered into an MOU with Uttarakhand government for improving rail-based tourism, for bringing rail-based tourism to Uttarakhand. Similar requests are there with us from different other states, and quite a few we are sure that we'll be able to take in this quarter. It's not fair on my part till it is finalized to talk and tell anything, but this is under discussion. First thing. Second thing, tourism as a segment. Your second question was the segment, like how much percentage will be there in the overall mix, this thing. As you see this kind of growth, this type of mix, like when we were adding catering, tourism, these two sectors will be growing. I am telling you because of two reasons. First is economy is already booming. There is a lot many capex in the IRC, in the railway segment, where they are putting investment to the rolling stock, to the infrastructure, and releasing of capacity in the railways because of this DFC coming in. So
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short
Hello, you're watching Talking Point. I'm Tamanna Inamdar. Today, before we start the show, we're talking about new kid on the Lal Street, a Vibhor listing, which is set to debut on the bourses in just a few seconds from now. Now, Vibhor Steel is an interesting company, a small issue size, about 70 odd crores, but grey market price has indicated quite a jump up. Its issue price is about 151 rupees. And we just have to wait and see what it lists at.
Congratulations, Vibhor Steel Tubes Limited is now officially listed on the National Stock Exchange, and it marks a milestone in the corporate journey of the company. We are grateful to our host, NSE, members of the board, family and friends, well-wishers.
So as expected, huge jump up over there. 151 rupees was the issue price. That stock is opened at about 195% up at 295 bucks. So bumper listing over there. But remember, it is also because of the size of the issue, which is just about 72 crores. Huge oversubscriptions, overall oversubscribed about 298 times. We're going to be speaking with the company, with the management in a bit to understand what makes them tick and whether you will see sustained growth for the steel maker. All right, joining me today on Talking Point is Andrew Holland, the Chief Executive Officer at Avendus Capital. And the case for the chat today is the time that we are in, where markets are hunting for the next big trigger. We're at a time when markets have touched new highs. This was expected, but the momentum, in a sense, is missing. The breadth or the move that is pushing the markets towards the next big leap is in a sense missing. Markets are hunting for the next big trigger. Is it going to be an election year, considering that election results are being priced in? Corporate results are good, but what next? The biggest question, is the Fed movement going to turn out to be the biggest headwind of the year? We're going to be talking about all this and more, and also asking Andrew about the stocks and sectors that he would continue to bet on. Andrew, welcome to the show. Absolutely fantastic to speak with you on Talking Point and get your take on what is a slightly confusing time in the markets. We're seeing range-bound trade, volatile trade, but the large direction is definitely trending upwards. Let's begin with the importance of global cues at this point. Do you think that this is still a market which in the medium term will be directed by what the Fed does and what US market does?
Well, first of all, Tamanna, thank you for the opportunity. I think we've been thinking that the Fed is leading the way, but despite the fact that now we could be waiting longer for interest rates to fall, the market's just looking through it. So I'm not sure the Fed is giving the direction to the markets. The market's giving directions to the Fed and saying, listen, it's okay. Don't reduce rates so quickly because earnings growth will be good. The recession or hard landing, which the market was possibly anticipating, isn't going to come. So that Goldilocks scenario of lower inflation or trending lower inflation, rates, yes, will be lower, but earnings growth will be there. Is a narrative which is being played out, not just in the US, but across global markets. I mean, it's interesting, right? You have the US where it's probably growing at real GDP growth of say 1.5%, 1.7%. Not great, but okay. UK, Europe, particularly Germany in technical recessions. Same with Japan. But all markets kind of towards new highs. And then there's that dichotomy in terms of central banks. Everyone's raised rates. Japan didn't raise rates, but the market's getting towards that three-decade high, which hasn't been seen for so long. So I don't know which central bank's getting it right anymore. Is it the Fed? Is it the Japanese? Is it the UK or the European Union?
Andrew, may I hazard a guess on if China's getting it right? Today, China's cut its 5-year rate, its benchmark lending rate to 3.95%. It's the first cut since June. Now, do you think China or the Chinese central bank, in that sense, is ahead of the curve?
No, I think the Chinese central bank has to do everything possible to get some comfort for investors behind the property market, because obviously that's been having a devastating effect on the economy and confidence. So therefore, if they can shore up the property market, and of course they're trying to do that with the equity markets too, then you have a very cheap market. So if they can continue to kind of, I'd like them to do more of a big bazooka in terms of monetary policy to get that comfort back. But at the moment, no one wants to be in China. Everyone thinks it's cheap, but they need this trigger on the property market, and this is the start of what the central bank is doing there. So that's the good news, and that's good news for emerging markets, because all the outflows that we've been seeing have been related to China, which has obviously impacted India's flows as well. So if we see more confidence coming back to the Chinese market, then we'll get flows in emerging markets, and India will pick up a large portion of that too.
Let me talk about flows in the Indian context. So December 23 was an outlier in a sense. That's generally when everyone's on holiday and you don't really expect flows to come in. That's not what we quite saw. We saw aggressive flows coming in. Now just look at Feb, when you've seen outflows from FPIs for about 14,000 odd crores. You're seeing markets touch new levels, but without the sort of tailwind of an FII or FPI inflow. Do you think that changes at some point, and that's when you see the next phase of bull run in the Indian markets?
It's a good question. I think that relates to what I've just said, Tamanna, in terms of that if you get flows into emerging markets, because China's now seen to be, kind of bottomed out in terms of the property market and the stock market, then you will get flows coming into emerging markets, and some of that will, come towards India as well. The problem for India is that valuations, whilst they're not killing, but they're not so attractive if you compare it to China. So we will get some flows. So that would be the extra leg. But the question now is the market pricing in the kind of the fact that the elections seem to be in the bag for the ruling government, and we'll probably see a run up to that in March. But then thereafter, what do we have to? To May, and then what after that? What's going to be the catalyst to get the market going? And I think that's going to be the question we all have, because the market is just pushing itself higher on the basis that all of the good news is going to come through. and then it's really what next. And I think that's going to be the difficult time for the market.
Just talking about the pre-election rally and what that picture looks like. So since you had the 3 state elections in December last year, November last year, that continuation or the continuation of policy and the same government coming back was priced in. Now the question is how high, how comfortably, and which is really now an arithmetic exercise more than anything else. My question is, what does it mean in terms of capex? What does it mean in terms of the PSU rally we've been seeing? What does it mean in terms of more opportunities for companies in renewable energy, in railways, in defense? Do you think very clear, comfortable win at the end of the day translates into all of these clear opportunities where you can drill down to a sector that works and a stock that works?
Yeah, no, the sectors you mentioned. So let's just we do know that the government will spend on infrastructure. We know it's going to spend on defence and renewables. So that's a global factor. It's not just an India factor. So those are clearly industries which are going to continue to receive very strong orders going forward. Of course, execution is going to be key in that as well. But I think the market will price that in as we come towards the elections, and these stocks will continue to do well. I still think they have a long runway, so I'm less worried about the kind of the valuations in these kind of sectors at this time. I think what we have to look for, Manu, is what could upset the apple cart, after the elections are over. And I was at a conference yesterday, and the Kotak conference, and Uday Kotak spoke there. So I'll quote him, which is quite interesting. What he said was that, in the kind of the growth that India is expecting, it can't just be a one-legged race in terms of just equity markets. Therefore, the bond markets have to play a big role in the funding going forward. And what he said was that the differential between bond taxation, which is around 40%, and some of the equity taxation, and you mentioned ELS and arbitrage, is 10%. They said that gap is too large. So maybe that expectation of some kind of change in capital gains tax for equities could be something that we'll see after the elections, and maybe the markets might not like that.
Yeah, that's one of those things that makes it from one budget list to the next budget list every year, to be honest, Andrew. Capital gains tax, will there be inheritance tax? Will there be any leeway there? One would argue that this government doesn't really need to change anything. There is no compulsion they have to change anything or, to hold back their hand if it comes to taxation. I just want to get your take on the pre-market rally. You said from March onwards, we may see a pre-election rally. And I was just looking at the data, and I'll start from 2014, which was term 1 for this government. You had 3 months before the elections a 15% jump up. Before the 2019 elections, it was 8% jump up. My question to you is, are we going to see that pre-election rally muted, considering that the result is now priced in once again? What exactly are you rallying up for?
I think you're going to be rallying up on terms of that the policy continuation and the government spending will move very quickly after the elections, and obviously there could be bigger reforms going forward which will excite the market. What those reforms, we'll have to wait and see, and taxation is one of them. Tamana, I wouldn't rule it out this time in terms of equity taxation at all. So I think those are the kind of reforms which could happen, which will help fund. You've got to fund this economy, right? At some point, it can't just be the government all the time. Private capex needs to come in. So if you had that kind of a rally, our forecast for this year, so when I say this year, FY25, is that earnings growth should be up around 15%. And we think the market gains will be similar, around 15%. So if you've had that 15% before May, there's nothing to go for in the second half of the year. That's for sure. So there could be some disappointment in terms of expectations thereafter. The only thing that would change it Tamanna, in terms of moving that 15, maybe to 20, is two things. One, the realization that China has bottomed out, and you're getting flows into emerging markets, which India will get some of that. And two, that earnings growth starts to accelerate towards the back end of 2024 into 25, and that 15% earnings growth becomes nearer to 20%. So those are the only two factors which would propel the market higher. To my view, the other factor which could help is obviously if the RBI starts reducing interest rates, which will obviously be very helpful for the banking industry, which is struggling anyway in terms of NIMs, and that being a large weightage in the index could be the rally point for the market.
So that's, I suppose, in terms of immediacy, an RBI rate cut could come earlier or could be the next big sort of movement for the markets in terms of what happens with financials. But talking about corporate results, because you referred to them, were you happy with Q3 in terms of the performance of these companies? Because a lot of sectors, a lot of stocks have run up on expectations, especially in the PSU space. And the Q3 numbers was an opportunity to examine whether the business prospect is that solid. What was your sense on that end?
Yeah, apart from certain companies, I don't think there was any real big surprises. The only thing that I'm seeing now, Tamanna, is that it's not that earnings are being upgraded so much. It's target prices have been reached, and therefore target prices are being raised, not on the basis of earnings growth. So, or earnings, kind of upgrades. So that's a little bit worrying, because I think, the street is trying to say, we can push PEs to a higher level because something will come through in the next 1 year to increase earnings, but it's not happening. So I'm a little bit skeptical in terms of the share price targets rather than the earnings growth of a lot of companies. So what I would say is that whilst earnings growth is going to be important, I don't think we've seen, if you take the banking sector, it wasn't a great year. I'd say quarter. So, there's still a lot of headwinds for the banking sector in the very short term. So, increasing price targets doesn't really work for me. I think there's interesting, not as though I'm commenting on the stock itself, but, Coal India, I think, came out with a forecast saying that, prices are starting to kind of fall. But of course, most of the streets, so that's okay because volume will pick up. I don't get it. So these are the kind of things that happen in a euphoric market where prices, share price targets become too high.
I'm going to come back to you on that and drill down a little on that, Andrew, because it's truly astonishing. You're talking about a Coal India. Let's talk about a 197. They've pretty much, their business model has been cut off. The blood supply has been cut off, but you have house views that let's up the target price, and then a lot of disparate views coming in. Do you think that's a symptom of a bull market where you're looking for an opportunity, or you're looking for hope against hope for the target price to go up?
Well, again, I've seen reports, with share prices half of where it is today, and share prices are 50% higher where it is today. So someone's going to be right somewhere. I think on these kind of regulatory, kind of decisions from the RBI, it's always better to wait till the dust settles, and in terms of what the real business model will be going forward, because I think we're all grappling in the dark a little bit. In terms of what the outcomes will be, and how the RBI will react going forward. So I think there's still a distance to go before we have all the full evidence of what's going to happen here. But I think on terms of rather than individual stocks, and I talk about PSUs, I've seen a lot of kind of research reports saying this is the time and it's all changed and there's better governance and so forth and so on. I think for certain companies that's the case, but I don't think it's for all. So I think we're taking again a viewpoint that just because a stock rallies or a certain section of the market rallies, that everything is the same for everybody, and it's just not the case.
Yeah. So research reports maybe should be taken with a pinch of salt. Would it be fair to sum up, Andrew, what you're saying like that?
Well, being an ex-research analyst, of course, I'd not say that. But I'm just saying this is how the market narrative changes.
Yeah.
And I'm not, it's been a great rally. Don't get me wrong, and I think everyone's scratching their head a little bit of how they missed it. But it goes back to, when the market's where they are at the moment, and I'm not saying there won't be a pre-election rally, but when you arrive late at a party and but all the good stuff has already been eaten or drank. And you're kind of left with some of the, I'm not saying the scraps, but some of the leftovers. That's where I'm feeling at the moment. I just don't want to kind of push into this market so aggressively, when a lot of the gains have already been made, individual stocks rather than just the indices.
What a great analogy to end at. Are you late to the party and are you just left with scraps where there's been a massive run-up? In that sense, how you pick the best bits becomes very, very crucial. Thank you so much, Andrew Holland. Pleasure, as always, to speak with you.
My pleasure too. Thank you.
Absolutely. We're going to take a very short break, but on the other side, we speak to the listing of the morning and the management. Vijay Kaushik, Chairman, Vibhor Steel Tubes, and MD, is with us on the show after the break.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health.
Right, first blockbuster IPO of this season is Vibhor Steel. The stock has listed almost 293 rupees up, nearly a 200% jump up at 443. The issue price was 151. If you did get allocated, which might have been tough because it wasn't a very large issue size, just 70 odd crores, and was oversubscribed quite heavily. Now, I'm speaking with the chairman, Vijay Kaushik, and the managing director, Vibhor Kaushik, of Vibhor Steel, to just get a sense of what the future plans of the company are. Welcome, gentlemen. Congratulations. It's been a fantastic listing on the NSE for Vibhor Steel. That's absolutely great. Let me start with you, Mr. Vijay Kaushik, on what you're going to do with these proceeds. As I understand, about 62 crores odd of these 72 crores is going to be directed towards working capital.
Yes, of course. वर्किंग कैपिटल हम यूज़ करेंगे और उससे हमको इंटरेस्ट कॉस्ट कम आएगी और फर्स्ट डे से करीबन ये समझिए साल में 5 करोड़ रुपए की हम इंटरेस्ट में बचत करेंगे और ये प्रॉफिट जो है हमारी कंपनी को ऑटोमेटिकली ड्यू टू लो फाइनेंस कॉस्ट हमको आएगा। तो ये फर्स्ट डे से शुरू होगा, तो जैसे भी आएगी हमारी पेमेंट और वो हम कुछ बैंकर्स को वापस करेंगे। ये हमारी प्लान में है।
ठीक है, तो आपके इंटरेस्ट रेट बचेगी क्योंकि आप वर्किंग कैपिटल में ये लगाएंगे, लेकिन एक्सपेंशन के क्या प्लान है? विभोर कौशिक से मैं ये सवाल पूछती हूँ क्योंकि आपने कहा हुआ है you're planning to expand into Odisha, footprint into Odisha with a new plant. How are you going to fund that?
Yeah, it's internal accrual. We've already purchased the land and a lot of construction has already started. For example, the boundary wall is done, a lot of foundations are done. Around about 50% of the machines are ready and the rest of them are in the pipeline. So most of it will come from our internal accrual. That is our plan. And that expansion will add another 1.2 lakhs
yeah,
to our
how much are you expecting
capacity.
to spend on it, Mr. Kaushik, on this Odisha plan? What is the capex?
It should be around about 60 CR should be the capex on it, but we'll do it in parts.
Okay.
Which is what we're thinking right now. But the board of directors will come together and we'll discuss and how we're going to go about it. But as I said, the initial production should start end of first quarter or the beginning of second quarter.
Okay. Okay, so internal accruals will fund your Odisha plant. 60 crores is what you'll spend on it, and you'll begin probably by first quarter. Just one more question, Mr. Vibhor Kaushik, and I'll come to you on this. Is your largest client is Jindal Pipes? You have signed a 6-year agreement with them as of 1st April 2023. That means it goes on till 2029. My only concern is that they account for 90% of your revenue. Do you have any plans to diversify your revenue sources? Because this is a little risky, isn't it?
This is an association we've had for almost 20 years now, and we find a lot of comfort in this arrangement because it's only one debtor. As you see, there's a lot of turnover. But with that turnover, having a strong debtor is always, we've always seen it as a plus point. About the dependability, there's a lot of value-added products that we have already started. For example, in Telangana, we started manufacturing of crash barrier, which is used on the highway. Similarly, when we go put up a plant in Odisha, we will invest in value-added products such as crash barriers, octagon pole, high mast pole.
I just have about a minute, Mr. Vibhor Kaushik. Can I just reiterate my question? Are you actively hunting for more clients, or you have comfort in the fact that your number one client accounts for 90% of your revenue? Are you looking to diversify that plate?
We've had this comfort level for 20 years and we'll continue to have that. But yes, there are some value-added products that we're getting in the market along which we'll be selling to other clients.
Okay, thank you so much, Vibhor and Vijay Kaushik, and congratulations once again on a fantastic listing. We'll take a very short break right here on NDTV Profit, but we'll be right back with all the live market action and more. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Markets rally hits pause. Nifty Sensex open flat. Sensex now trades below 72,800 while Nifty stands above 22,100. Most sectors trade in the red, dragged by auto and pharma. On the other hand, media and realty come out as top gainers. Meanwhile, Zee re-engaging with Sony Group on merger talks as per sources. Stalemate over key issues continue. That's an NDTV Profit exclusive. And a dismal day of trade for Whirlpool as promoters are expected to sell 24% stake in the India unit at a discount of 7.6% to current prices. And a stellar Dalal Street debut for Vibhor Steel. Shares list at a premium of over 100% to its listing price of 421 rupees per share. Well, hello and welcome. This is the FNO Show. I am Agam Vakil, and in this show we take you through all that is happening in the futures and options space in India. A quick look at the markets, and the Nifty for now is flat. We aren't seeing too much traction there, and it's the same for the Sensex. But the good news is that we're starting to see a little bit of a catch-up as far as the Bank Nifty is concerned, and that is advancing by nearly 1%, actually 0.9% to be precise as we speak. And of course, we must also remember that it is a Fin Nifty options of expiry today, and well, a lot of that will be critical to keep an eye on in today's day of trade. So advances there coming through. Let's take a look at all the constituents which are contributing to the gains as far as the Nifty is concerned, or rather it is which is once again slipped back marginally in the red. In terms of the key contributors, we do have a lot of traction in something like a power grid. Of course, Kotak Mahindra Bank and HDFC Bank are the two big movers contributing to that up move today and providing that impetus. But on the losing end, we do have weakness in something like a Coal India. Continued pressure coming through, which began perhaps in the last hour of trade yesterday. Hero MotoCorp is down nearly 3%. In fact, the big three two-wheelers we have seen weakness today. So Hero MotoCorp, Eicher Motors and Bajaj Auto. All of them are looking at, deep cuts in today's day of trade. And by deep, I mean about 2 to 3%, which is significant for such large cap companies. So we do have some weakness as far as the auto space is concerned. And even in the broader markets, to take a look at how things are panning out there, we're looking at marginal, moves as far as the mid-cap index is concerned. Largely flattish, but even in that index, in terms of gainers, we do have Paytm, which is locked in another upper circuit of 5%. Then we have Sona BLW, which is up around 4.1%. And Z Entertainment is the other interesting one. Z Entertainment is in an F&O ban in today's day of trade, but it is still advancing by as much as 4%. So we'll keep an eye on that one. And on the losing end, we have something like Federal Bank, which is under pressure, down around 6.6%. And Patanjali Foods continues to see its own bout of volatility. That's also down around 4%. Thereon, let's address what's happening in the futures and options space. Now, at least as far as the Nifty futures go, while the underlying remains flat at the moment, we are looking at just a tad bit of unwinding coming through, about 2.5% decline as far as your open interest goes. Moving on, as far as the Bank Nifty goes, we are seeing unwinding there as well. In fact, that's of course the Nifty. Let's pull up the Bank Nifty and take a look at how things are panning out. So yes, Bank Nifty is looking at, nearly no change as far as OI is concerned, even though we have an advance as far as your underlying is to be seen. Now, coming down to the options market, do remember once again that we were looking at a lot of traction off late around 22,000. A lot of the call activity has shifted higher, around 22,500, 22,600. And on the lower end, we continue to see a base building of sorts around 22,000. That's as far as your puts are concerned. Coming down to the Fin Nifty, I want to talk about the Fin Nifty. That, of course, is giving you an idea about how change in OI stands as far as Nifty is concerned. But let's pull up Fin Nifty as well, because that is where we are likely to see some strength building in, given the kind of up move that we've seen on the Fin Nifty. And it's certainly turning out to be a very interesting day of trade too for the Fin Nifty, because earlier on the session we started with a little bit of weakness. And eventually we started seeing an up move, and now at the moment it is advancing by around 0.7%. So a lot of call writers being taken out, being forced out of their positions, and a lot of put writers at the moment in the driving seat. Well, from there on, let's talk about and let's bring in our experts for today who can perhaps give us a better insight into how one can deal with the markets. We have Ashish Kyal, founder and CEO of Wave Strategy Advisors, as well as Aditya Arora, founder of multi-asset research analyst at Analytics, who's joining us on the show. Good morning to both of you. Thanks for joining in. Ashish, let's start with you. Your view on the Nifty 50. Are we expecting consolidation around the levels at which it's trading in, or can we expect strength at the moment?
Hi, morning to you and all the viewers. If you look at Nifty, I think the overall trend for Nifty is going to be positive, and we are right now in buy on dips. There is some loss of momentum and Bank Nifty is yet to pick up, but I'm optimistic that Nifty can possibly touch the level of around 22,250, 22,290. But for that to happen, we have to cross back about the previous high, which is around 22,180 odd levels. So I think we might have a range bound movement between 22,190 on the upside as the immediate hurdle. And on the downside, the support is going to be around 21,970 levels. So that's the broad range. But having said that, I would be looking at buy on dips kind of a market scenario. We opened bearish, we had but we recovered from the lows today, and we are now managing to again go back in the green. There is some kind of an attempt. So I'm expecting a range as of now. And once we are having some kind of a dip, we will again have a buying opportunity, aiming for 22,190 is the first target, followed by 22,290.
Aditya, morning to you as well. How are you placed on the Nifty 50?
Morning. I think markets are consolidating, and I see lack of strength in large caps like Reliance, then L&T, then SBI and HDFC Bank. All these are trading neutrally or sideways. So I think there's lack of leadership at this point in time, and I expect that going forward we can see good correction once we break 22,000, 21,900. So my bias would be once we break 22,000, 21,900 on the downside, I expect markets to correct 500 points from there.
All right. Let's talk about the Bank Nifty then. And if we can actually pull up the constituents of the Bank Nifty as well to take a look at how things are panning out, because of late, of course, we've seen a lot of weakness in HDFC Bank. But today is a day where we are starting to see a little bit of more covering coming through. Besides HDFC Bank, we have strength in some of your relatively larger names like ICICI Bank, Axis Bank, Kotak Mahindra Bank. All of them are advancing in trade. In fact, out of the 12 stocks, out of the 12 constituents of the Bank Nifty, you only have 4 in the red, and all the rest are advancing. And that's probably the reason why the Bank Nifty, along with the Fin Nifty, is outperforming the Nifty in today's day of trade. That said, let's also take a view of how things may shape up for the Bank Nifty. Ashish, coming back to you. Bank Nifty, of course, has been a little bit of a laggard. A lot of that can be attributed to weakness in some of your private sector names, HDFC Bank being one. How would you address the Bank Nifty? Do you think that there could be just a little bit of a catch-up trade, or do you expect this one to consolidate, perhaps even see further weakness?
See, if you look at Bank Nifty, we can clearly see 46,800, 46,900 is the zone from where it has reversed in the past also. And now we are again attempting to challenge that zone. And today, Bank Nifty is the one that is outperforming. And thanks to HDFC Bank, that looks like completed at the 5 years down, and we are starting a retracement on the upside. So I'm optimistic that with HDFC Bank showing the pullback, Bank Nifty might again try to catch up, because PSU banks have been outperforming. It's the private sector banks that has been the major dragger. And if that starts showing some kind of a positivity, I think Bank Nifty can also move towards the level on the upside of around 47,500. So over here, I'm going to keep a close watch. If we can get an hourly close above that 46,950 odd marks, and we can manage to cross 47,000, then I'm expecting Bank Nifty to go towards 47,500 levels. And on the downside, the important support is going to be around 46,350.
Aditya, what would you do with the Bank Nifty at the moment?
I would actually wait for a better price, because market has took resistance previously also at 46,857 on 2nd Feb. So we are trading exactly at that point in time. So I would wait for bearish opportunity. I wouldn't like to go long on the market at this point in time. So I'm looking for a breakdown in market and lack of leadership in large caps, wherein they start breaking down. So at this point in time, I'm looking for a good opportunity to short the market.
Okay, so looking for a... Sure. Understood. All right. Well, since we've had news around Zee Entertainment, and we understand that there has been a contact with the Sony Group, perhaps some sort of re-engagement of sorts, and which is why we're looking at Zee Entertainment advancing at the moment. We're looking at about a 4.5-5% gain today. But that said, that Zee Entertainment is currently also in an F&O ban. Now, this is for some of the newer players in the industry, newer traders who don't exactly understand the concept of ban. Well, just to apprise you of how things pan out as far as the ban is concerned, it does not necessarily mean that you are banned from trading Zee Entertainment. It only means that if you were holding a position before today, well, you are allowed to square off that position. If you take up a new position in today's day of trade, you can do so, but you will have to square off that position before the end of the trading day today. If you do carry on with your position, your new position taken today, and keep it on for beyond the end of the day today, well, you will be penalized for that transaction. A lot of the F&O ban, of course, will be determined by open interest as far as that particular company's stock a company or stock is concerned, and there are thresholds and there are limits beyond which a stock moves into the F&O band, and a threshold below which, after which it moves out of the F&O band. That is once you start seeing unwinding. Now, should you see Zee Entertainment come through with a lot of unwinding as far as its futures and options trades are concerned in terms of open interest, and if it falls below a threshold, of course there is a certain mark where your exchanges decide at the moment is 85% of market-wide limit. Well, under those circumstances, Zee Entertainment will come out of the F&O ban, and after which you can in fact take a positional bet. So that's as far as Zee Entertainment is concerned. That said, let's also address what's happening with a handful of other counters. Now, one of the other counters, of course, which is in focus in the futures and options space is Dixon Technologies. It made a new life high yesterday, and it has seen substantial gains as well. And while today it's also been strong, it's come off to a certain extent on an intraday basis. Aditya, can you come in on Dixon Technologies? How would you address this one? Is there more legs to the kind of strength that we've seen off late? What would you do with Dixon Technologies?
Absolutely. The kind of run-up which we have seen from 5,800 kind of level to almost 6,800, so almost a 15-20% jump over there. But last time it actually got knocked off from its resistance, which is 6,767, and it's currently trading at 6,776. So I think if it closes below 6,760, then I think probably short sellers are having an upper hand, and I think there's scope for some profit booking in the short term. If we consider a longer duration, like 1 to 2 months, then probably the trend is on the upside. But if you're talking about short term, then I think I don't see significant run up from this levels. So this is a short at 6,770. Stop loss should be 6,930, and target would be 6,660 to almost 6,500.
Okay, well, it just so incidentally happens that Ashish also has Dixon as one of his picks, but we're going to slip into a short break and come back with our experts for their recommendations today. Stay tuned, and we'll be back in just a bit.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks
on your show, Hot Money.
Welcome back to the FNO show. It's time to take a look at all the stocks which are buzzing in trade as far as the futures and options space go. And I'm going to take a look at all those stocks which are advancing as far as their open interest is concerned in today's day of trade. Let's take a look. And we do have Hero MotoCorp right at the top. Along with, in fact, a lot of these two-wheeler companies are under pressure, as I've mentioned earlier. But Hero MotoCorp looking at a near 10% increase in open interest towards shorts. Balrampur Chini is the other one, along with Federal Bank and Coromandel, all of them looking at shorts building in. Power Grid is the only one which is in fact looking at 4.5% increase in OI, even as the underlying advances by around 3%. Among stocks which are seeing unwinding in today's day of trade, let's pull that up as well. A lot of long unwinding in Coal India. Now remember, Coal India did see a lot of strength in the week and the week preceding that one. And it does seem like over the past couple of sessions, we're starting to look at some amount of declines. And of course, consequently, a lot of those longs are also unwinding as far as the futures market is concerned. Metropolis and M&M also looking at longs unwinding. M&M is the other big stark mover of late, you know. And while its underlying has declined by less than 1%, but well, weakness all the same. And TVS Motor Company as well. Vodafone Idea is the other one, which is just advancing by a tad bit. It wouldn't necessarily be called short covering, but well, we're certainly seeing unwinding as far as that stock future goes. But we talk about stock ideas from our experts, and you know, as I've mentioned before going to the break, Ashish also has a view on Dixon Technologies. Besides that, he has yet another idea for us. Ashish, can you take us through your trading ideas for the day?
Yes, if you look at Dixon Technologies, yesterday we saw a very good bullish candlestick formation. And that has given a strong breakout along with a huge volume. So volume plays a very vital role because if the rise is along with the good volumes, that indicates more buying hands, and that is a sustainable move. And today we are seeing some kind of a profit booking or sideways action, which is a good sign. I think the overall price action is suggesting that the trend for Dixon Technology can resume on the upside, and we can see the mid-cap IT space has been already buzzing. Even TCS has managed to bounce back sharply on the upside from the large cap space. So I'm bullish about the IT stocks as a whole, and Dixon can be the bullish bat. One can create long positions for the target of 7,400 and maintain a stop loss of 6650 on the downside. The next stock pick is going to be Lemon Tree. We can clearly see the stock has formed a higher high, higher low pattern, managed to cross above that 20 days average again, and is picking up along with the volumes as we speak. So the overall trend for Lemon Tree is bullish over the short term. We can expect the stock to reach towards the target of around 152, and one can maintain a stop loss of 136 on the downside.
All right, that's as far as Ashish's picks go. Aditya, what are you recommending today? I believe you're on mute, Aditya.
Apologies. So as I told you, we are trading market with little bearish bias. So my first pick is exactly from the space which you highlighted, short buildup in Hero MotoCorp. We see short bearish pattern in Eicher Motors as well. So that stock has been trading with downward bias since a while. And I think call writing could be a good strategy over there. So Eicher Motor 3950 call is sell at 29, stop loss is 55, and target is 0. Second one is also from Auto Pack. I think auto sector looks little toppish to me. So the second pick is Bharat Forge 1150 call is sell at 10.60. The stop loss is 20 and target is 0.
Okay, well, there you have it. Those are some of the recommendations coming in from our experts as far as day of trades concerned. You know, I'm going to extend the conversation around two-wheelers just a little longer. Now, we can take up something like a Hero MotoCorp at the moment because it's one of the bigger movers as far as the futures option space is concerned. And I want to take this up with Ashish. The thing with Hero MotoCorp, along with a handful of the other auto names, is that they've seen some amount of strength of late. Now, even if you consider, you know, a Hero Moto at the moment, sure, we're looking at weakness, but you know, it made a recent low of somewhere around 4,630 odd levels. It's currently at around 4,700. Ashish, at what point in time would you start becoming bearish on this counter on Hero MotoCorp? Otherwise, how would you play this? Do you think that there's perhaps some amount of consolidation on the cards after the kind of run-up it has seen of late?
Yes, if you look at the overall trend for Hero MotoCorp, the stock started trending on the upside from 3250 levels and had a very strong run up, which with an impulsive move, which suggests that the overall medium-term trend for the stock is bullish. Now, short term, we are seeing some kind of a sharp decline. So I'm expecting possible a triangle pattern. When you usually see a sharp decline after a good run up, it results into a triangle pattern, which is going to be a consolidation. So the level that you pointed out is absolutely apt, which is 4630, where the low was formed and the high was formed around the level of 4960. So that's the range that we are looking at. Over short term, maybe today or a day more, there can be selling pressure that we can witness. But eventually, I think if you can manage to get the stock again around that 400-500 level, that will be a classic opportunity to buy an outperformer. So the level where I will start turning bearish is if the stock does not stop anywhere around 4,500 and even breaches that on a weekly closing basis, then that will be a sign of concern that there is a deeper retracement that we are seeing. But as long as 4,500 followed by 4,630 is intact on a closing basis, I think there will be opportunity for the medium-term uptrend to continue, and one can invest into this stock.
Right, and just a final one on Coal India. The way things are panning out over the past 2 days, it does seem like there's been a little bit more weakness in Coal India, but after a substantial up move in the week preceding. Aditya, do you think that the uptrend is over for this one? And how would you trade Coal India now?
Yeah, I think the uptrend is probably over for Coal India because the management commentary was bearish, and that was followed and accompanied by bearish buildup in the market. Good volumes were seen. Patterns are bearish. You see long unwinding and little bit of short buildup. So I think, yes, for the meantime, I think it would be very difficult for the stock to cross levels of 480. So that's a bearish opportunity for the bears light over here. And I think even downward levels can be achieved in month of March.
All right, well, we are out of time on this show, so I'm going to take a moment to thank both our experts, Ashish and Aditya, for joining us and taking us through their views, as well as handing us a handful of trading ideas. And before we wrap the show, we caught up with Avendus Capital's Andrew Holland on what's next for the Indian markets. What are the big triggers? What are the headwinds that we need to keep an eye on? Here's a slice of that conversation. Listen in.
All right, joining me today on Talking Point is Andrew Holland, the Chief Executive Officer at Avendus Capital. And the case for the chat today is the time that we are in, where markets are hunting for the next big trigger. We're at a time when markets have touched new highs. This was expected, but the momentum, in a sense, is missing. The breadth or the move that is pushing the markets towards the next big leap is, in a sense, missing. Markets are hunting for the next big trigger. Is it going to be an election year, considering that election results are being priced in? Corporate results are good, but what next? The biggest question, is the Fed movement going to turn out to be the biggest headwind of the year? We're going to be talking about all this and more, and also asking Andrew about the stocks and sectors that he would continue to bet on. Andrew, welcome to the show. Absolutely fantastic to speak with you on Talking Point and get your take on what is a slightly confusing time in the markets. We're seeing range-bound trade, volatile trade, but the large direction is definitely trending upwards. Let's begin with the importance of global cues at this point. Do you think that this is still a market which in the medium term will be directed by what the Fed does and what US market does?
Well, first of all, Tamanna, thank you for the opportunity. I think we've been thinking that the Fed is leading the way. But, despite the fact that now we could be waiting longer for interest rates to fall, the market's just looking through it. So I'm not sure the Fed is giving the direction to the markets. The market's giving directions to the Fed and saying, listen, it's okay. Don't reduce rates so quickly because earnings growth will be good. The recession or hard landing, which the market was possibly anticipating, isn't going to come. So that Goldilocks scenario of lower inflation or trending lower inflation, rates, yes, will be lower, but earnings growth will be there, is a narrative which is being played out. not just in the US, but across global markets. I mean, it's interesting, right? You have the US where it's probably growing at real GDP growth of say 1.5%, 1.7%. Not great, but okay.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Good morning and welcome. You're watching the Small and Mid Cap Show here on NDTV Profit. I'm Harsh Saita. We focus on the smaller and mid cap companies, and the company we're focusing on today is first off going to be Zen Technologies. Now, you know, it's a very solid set which the company has delivered in terms of numbers for Q3. Order book also continues to consolidate upwards. And you know, I have the management of Zen Technologies. We have Ashok Atluri, who is the chairman and managing director at Zen Technologies. Welcome to NDTV Profit, sir.
Thank you. Yeah. Thank you so much.
Sir, you know, tell us about how this story of Zen Tech is really shaping up, firstly. And I'm going to try and focus a little bit more on the top line. You've guided for a 50% CAGR growth, FY26 at least up to. Fair to say that that kind of a number is sustainable even beyond, all the way up to FY28, for example?
So, you know, 22 we did 60 crores, 23 we did about 160 crores, and this year we are planning to hit 450 crores.
Correct.
And next year we have said already, based on the order book position, that we will grow at 100%. But year after that, we think, you know, the growth will be maybe mellowed down, and it will be at 50 CAGR growth rate, given the historic, past few years growth. So I think, we think that this is achievable and sustainable, the 50% CAGR for at least couple of years post the next year.
Sure. So next year you go from 450 to 900. Let's round it up to 1,000. So roughly 1,400 odd crore by FY26. Is that the kind of number you're looking at? And thereafter,
That's right. Yeah. 26.
And thereafter, you're going to grow at
would be
50% CAGR.
That's right. Yeah.
Understood. And your order book currently sits at around 1,450 odd crore. So will this go up substantially? That's my first ask. My second is, this is all as of today. So you're not factoring in possible acquisitions that you might make, which will further boost top line. Or does this include such acquisitions? Are you factoring those as well?
So we are not factoring the acquisitions, even though we are discussing the acquisitions internally within the company, and we are looking at some companies, both internally and internationally. But yeah, we are not definitely not included the additional acquisitions, the inorganic acquisitions. We are not factoring that growth also in this.
Understood. And what about how is the order book shaping up? More of it on the domestic front?
So again, for FY25, we think this is the order book position. FY25, we expect the order book position to be better than what we have currently. And so we expect the order book to grow in the next year. And this growth we're expecting in the next couple of years also. So only that will enable us to get the numbers that we are predicting.
Correct. So where will that come from? Will it come from export markets? Will it come from domestic market? How are you viewing that kind of, your order book shaping up in that mix?
So I think it's going to be 70-30, the growth 70 skewed in favor of domestic, and the exports being at 30%.
And where are you today, if I can ask, domestic versus export?
So we are around 65-35%.
Understood. So that will inch more in favor of domestic than in favor of export.
Yeah, that's right. Yeah, based on the current situation, I think Indian government is doing an extraordinary job, and as we saw from the recent DAC approvals, they are going for Make in India only. They're going to buy a lot of equipment under that. And again, all those equipments will require training simulators, so that's a good scope for Zen there. But even when we're looking at the attacks in Red Sea, Middle East, and Ukraine, or everybody, there is a requirement for counter-drone systems. So export market is also kind of in need of the products that we make, both in terms of training and counter-drone systems.
Right, and of this kind of opportunity available from India itself, I recall the last budget, around 3 lakh odd crore was freed up in terms of defense. How much of that would be products which you cater to?
So actually, they're specifically not named, but they're integrated into the product. So whenever they're buying a product, they'll also buy the training aggregates with them. So they are integrated. All the large projects for anti-tank mines, and they have talked about launching loiter munition systems, air defense tactical controller, and we make radars also. So there is a mix. There is no, so we really don't know how much is out of the 84,000 crores is exactly for the recent thing. But we are very sure that it's a very large number that will finally come out, and we are trying to actually work at this point in time about the kind of figure that we will be able to bid for and finally probably win also.
Sure, understood. And you would like your order pipeline to be at around 1.5 years forward revenue? Is that how one should look at it? Because your order book currently is at around 1,500
preferably
crore.
like that, because in 18 months we can execute most of the orders, but no more than 24 months definitely. Yeah, so because we can then execute the equipment orders very fast. With our ability to produce, again, it's outsourced manufacturing model, so we can scale up very, very fast.
Sure, and your EBITDA has been only consolidating upwards because obviously as you scale, your EBITDA gets better in terms of the margin. I'm not sure if that's the right metric to look at it, but currently your margin on 100 crore odd of revenue sits at around 47%. How should one look at this number? Is that the correct metric to look at, and how should one look at it going forward as well? How will it shape up?
So definitely, I think the EBITDA, what we have been assuring our shareholders is that it should be around 35%. And as we go ahead, we will be spending more on R&D, more on marketing expenditure, And, so the expenditure will increase. And, we think that 47% may be a little far-fetched thing. So, we have been saying 35% of EBITDA is maintainable and 25% of PAT is maintainable. But, if we are continuously working on reducing the cost, so, we would definitely probably a margin will improve a bit because of that. But, we stand by that, assuring that 35% is achievable.
Understood. And how does R&D therefore evolve? Just trying to determine where cash flows will therefore lie.
So I think R&D is one place. We typically do between 15 to 20 crores in a year of R&D. And it's very opportunistic. We don't do it as a percentage of sales. If you get an opportunity, we go after that. Okay. And so we expect that to definitely grow to a larger number. Probably in the range of 30 to 40 crores, because we are aggressively investing in more products and a little high-value product, where the value capture is more. So we do expect R&D to increase definitely. Yeah.
Understood. And with regard to your expansion, you have suggested on the Q3 con call that you're looking at the export market in a very big way. Now, you've told us today that your export mix will actually come down. So I'm not fully understanding how this is playing out. So you're looking at exports in a big way, but you're looking at an even larger opportunity domestically. Is that how one should look at it?
Yeah, what I was talking was, about the 25, 26 immediate thing. In the long-term goal, it's a 50-50 goal, 50% goal. But sure, immediately it may be in the between 30 to 30-70 or 35-65 range. That's what my statement was. But again, I think the international opportunity is very big. As we go, 2 years, 3 years from now, it will definitely, the size will explode. And, in terms of absolute terms, we'll definitely be doing much, much better than what we are doing currently.
Understood. And is the pricing internationally better? Is the margin internationally better? Is that something that you see as an opportunity as well versus domestic?
So, typically our approach has been, domestically or internationally, we want to to give to the customer the best possible price that is available. So internationally, when we compete with international players, we do get a better margin than what we do domestically. But again, the point here is that there are additional costs also involved in that. Overall, definitely it's a better margin because there are more uncertainties in an export order versus in an order. So yes, we do have better margins there.
Sure, understood, sir. It's a very interesting setup at the moment, especially when I'm looking at your numbers and the kind of growth opportunity that you are clearly providing in terms of guidance. Zentech looks very, very well placed, it seems. Thank you so much for giving us all of that perspective. Thank you for speaking with us and giving our viewers all of that.
Always a delight to be here. Thank you so much.
Thank you, sir. With that, we'll slip into a very, very short break. More, of course, on the other side. Stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching the small and mid cap show here on NDTV Profit. Now moving on, the tourism space, the domestic tourism industry in fact, in India is on the rise with a special impetus on domestic tourism. My colleague Tamanna spoke with the management of Chalet Hotels, the managing director Sanjay Sethi. Let's listen into a slice of all that he had to say.
The concern or the question is how huge is going to be the breakout in the hospitality industry? No question of whether or if. So let me begin with the latest set of announcements or news around your company, which is your ambitious plan to expand your portfolio of big box or your large inventory hotels. Let's start by understanding that. What is the scale and what is the capex that you have in mind?
Hi, Tamanna. Pleasure being back on the channel. Look, we've got roughly around 2,890 odd rooms which are operational right now. And we've got, as of now, 880 rooms that we're working on. In addition to that, the business development side of the business is very active, looking for opportunities to grow further. If you really look at our history, we've typically had very large hotels. The Hawaii Westin at Hawaii, for example, has a combo 773 rooms. The JW Marriott at the airport in Mumbai is 585 rooms. We've got Bangalore, which is close to 400, expanding to 520. And we've got Hyderabad, which in the two hotels combined together as a complex is 600 odd rooms. So we've done big hotels in the past, and we just believe economies of scale work for that. However, you can't do this in tier 2 and tier 3 cities. So, any big investments or big box hotels will largely come in the top 7-8 cities in India for us. And at tier 2 and tier 3 cities, if we do invest in those, it'll be smaller box hotels in the range of about 150 to 200 rooms each. In terms of capex, typically a hotel room costs us between 1 and 1.5 crores. And at 80 rooms, that's roughly around 1,200-1,300 crores of capex. In addition to that, we've got a couple of office buildings under construction, taking our capex as of now to roughly around 2,000 crores to be spent over the next couple of years.
Okay, so what I find interesting, Mr. Sethi, because whenever you speak to anyone in the hospitality space right now, the focus or the next growth area is in fact tier 2, tier 3 cities and your pockets of tourism, whether it's a Lakshadweep or an Ayodhya. From what I'm understanding, Chalet is sticking to your top metros and your big box formats. That is not somewhere where you're venturing.
No, it's not that we're not venturing there. I think majority of the investments will come in tier 1 cities. If you look at our stated strategy, we do have a leisure play as a part of the stated strategy. So we've always said that we'd like to get into Goa, we'd like to get into the Rajasthan region, we'd like to have resorts in the drivable distance from Mumbai and Delhi. So that part of the strategy continues. But put all of this together, and at the end of it, even if you were to get into leisure destinations, we don't see our leisure portfolio going beyond 20% of our total portfolio. So the majority of the strategy will be growth in large cities, large box hotels.
Okay. So you've earmarked about 2,000 crore rupees for capital expansion. That money is there right now. Any further plans for fundraising?
So it's well known that we've announced 2,000 crore, potential 2,000 crore fundraise or capital raise. But that's not going to be needed for the announced pipeline. That's going to be beyond that. So let me put it like this, our trigger for raising the extra capital is going to be opportunities for deploying that capital. We don't have them on the plate as yet, and as and when we see that, we will use timely capital raise to have the gunpowder dry for it.
Is a portion of it going to go towards minimizing debt as well?
Yes, it will go towards minimizing debt. But if you really look at our debt, Tamanna, today, our debt-EBITDA ratios are healthy and they get healthier. In fact, over the next couple of years, the debt does fall quite dramatically, given that the cash flows are very strong, EBITDA numbers are extremely strong, and we are growing the portfolio. So all of that together is going to pay down the debt in any case. Add to that capital raise, and that will help us further pay down debt as and when required. I do want to highlight that a lot of the debt today is on account of capital work in progress. And therefore, those CapEx assets, as they fructify into operations, will yield EBITDA numbers, which will further support the debt numbers.
Okay. I just want to come back a bit to your mix, and you're of course heavily skewed towards the corporate business, traveler. Are you planning to change that towards leisure, and to what extent? You mentioned briefly Goa, Rajasthan, etc. But any concrete plans on that end that you can share?
So we did acquire the Duke's Retreat in Lonavala, which is driving distance from Mumbai in March last year. And that's under a major renovation and expansion as we speak. We do operate a small resort at Mud Island for the group, and that will go in for some expansion in sometime in the future. But we are very aggressively looking for opportunities in the stated leisure destination that I spoke about. And we do ultimately, as I mentioned earlier, see 20% of the portfolio being leisure portfolio when we look at it, say, 3-4 years from now. I do want to highlight, it's not just the business traveler that we cater to today. A lot of our hotels are very popular hotels for the MICE and wedding segments. So those are big segments for us. And of course, the cruise segment is pretty large for some of our city hotels.
Okay, so MICE, cruise and wedding are also playing in. Let's talk a bit about the leasing side of it. So you're expecting about 4.5 to 5 million square feet of leasing. What kind of incremental growth are you pegging there?
No, we'll ultimately end up with 3.2 million square of office space totally in the Chalet portfolio. So it's not going to be 4 to 4.5 million square feet. We've currently got about 1 million odd square foot under operation, and roughly around 70% of that is leased out. The rest of it came in the very recent weeks, and it's under advanced leasing status. We do expect the 3.2 million square foot of office space to ultimately stabilize at about 90% plus occupancy rates. And the rates, of course, the rental rates will vary depending on Mumbai or Bangalore.
Okay. Just let's wrap with an outlook from you, Mr. Sethi, because your domestic travel, of course, is booming, but your foreign inbound travel still has not picked up even to pre-COVID levels. Is that where you're seeing the next push coming in? And what are your ARRs outlooks coming in right now as you see, an economy developing?
So, Tamanna, you're right. The foreign tourist arrivals, or FTAs as they're called, haven't picked up pace as compared to pre-pandemic months. And we believe that's the headroom for growth. That's going to create some serious headroom coming October onwards. Occupancy is already very high, largely on the back of domestic business travel for us. But when I say domestic business travel, it includes a lot of the MNCs. So the large MNCs of the world, because they have large offices in India, and when they travel within India, they're counted as domestic travel. So I do want to highlight that part. In terms of outlook, I think we've got a bullish run ahead of us for the next 4 to 5 years at least, because that's the visible future. I'm unable to predict beyond that, and that's on the back of the arbitrage that we have between demand and supply today. I see that riding the wave for the next 4 to 5 years at least.
Right. That was, of course, Chalet Hotel talking to us about all the plans that they have going forward, speaking with Tamanna. Let me, though, quickly take a check on markets where we're at the moment. We're seeing a fairly okay day of trade. It's a flattish day, very tight band that we're seeing. Less than 100 points is what we're trading in terms of the band. The high and low 22,137 versus 22,45, 045. Very, very tight band as you would see it. In terms of the contributories today, it's being led by HDFC Bank, up 2% in trade, 50 plus points contributed by HDFC Bank. Okay, 40 plus as we speak. But outside of that, Power Grid, Kotak Mahindra Bank, ICICI Bank. So it's the private sector banks which are taking the lead, at least among the gainers today. Let's look at the losers outside of Infi. Really nothing significant in terms of losers. Definitely not the worst day, especially judging the breadth. Just 18 gainers to the 32 losers. If we can have the heat map, you will see that. And that's how the day is really shaping up. There you go, that's the heat map. 20 gainers to 30 losers. So clearly not a bad market. Given what we're doing. Now in terms of where the mid cap and small cap indices are, some amount of pain that we're seeing there, 0.5% lower on the Nifty mid cap. We've slipped up a bit. The Nifty small cap too, largely flat but trading with a slight negative bias, around 1/5% or so lower. Now, I want to shift focus. Deepak Nitrite recorded a weak Q3 set of numbers. Company's net profit has dropped 3.3%, margins narrowed by around 63 basis points, 0.63%. We spoke to Maulik Mehta, who's the CEO of Deepak Nitrite, about the company's performance, how China chemical dumping has been a problem for India's chemical space, and what lies ahead. Listen in.
If all we see is revenue doubling, then it will be really bad job with expenditure and revenues. That is something that we expect to happen over the next 4 years before the end of 2027-28, and hopefully significantly before that, while at the same time improving on our standalone and our consolidated EBITDA margins as well. So we expect to see across the board in all of our group companies an improvement in our percentage as well as, of course, our gross. China as a manufacturer of note should never be ignored, right? It's the largest chemical manufacturer in the world. Pretending like India is in a sense insulated or that it is delinked, or any region in that world for that matter. That is, I think it is high hope right now, and it is not a mature way to think about it, even though a lot of Indian companies do offer that as a solace. The chemical industry in China is plagued by a slightly different situation, in my opinion. And that is that generally speaking, the Chinese government has supply side support that it normally offers. And over the last last 2 years, it has significantly impacted China's ability to consume. Now, the Chinese government is also belatedly realizing this and making a lot of structural changes in the economy's ability to consume. Now, generally speaking, China has not been known for being a consumption side policymaker like the US. But as it is improving on these things, and as these things start to have a domino effect, China's need to export everything that it makes, quote unquote, dumping, will certainly go down because it will end up consuming a lot more of what it makes. As its own consumers, either people or companies, will be given more support by the government to consume. And hence, as global sentiments improve, so will China's own appetite to consume its manufactured capital.
Well, that's Deepak Nitrite, but that's all the time we have on the show today. You're watching the Small and Mid Cap Show. Thank you so much for tuning in to NDTV Profit. More on the other side. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Good morning. You're watching Ask Profit. I'm Smriti Chaudhary, and for the next 30 minutes, I'll take all your stock-related questions. So to write to us, you can either message us on the WhatsApp number that's on your screen, or you can write to us on the YouTube live chat or through any of our social media channels. So get to writing. Now, let me introduce you to the guests for today. We have with us Mr. Vineet Bolinjkar of Ventura Securities and Neerav Chheda of Nirmal Bang Securities. Welcome to both of you, and thanks for joining in. Now, before we jump into the focus and the questions, let me start off by seeing where the markets are currently at. If you look at the benchmark indices, they're extremely flat at this point. It's 0.02%. That's where Nifty 50 is at. However, it's been kind of in the red, a little bit in the red since morning. So, bit of a downturn we're seeing, but not much to complain there. Let's also look at the constituents of the Nifty 50. Power Grid is gaining about 3.8% in trade. HDFC Bank is up today about 1.8%. Grasim is up about 1.5%. From the contribution, there's just a 5-point contribution, and largely it's by HDFC Bank that we're seeing. Then there's Infi that's on the downtick, Infi, TCS, and Coal India. Now, Coal India is also one of the biggest loser on the Nifty 50 today, and that's because of the commentary from the management and the results yesterday. That's pretty much on the benchmark indices. Let's look at the broader markets as well. Nifty Mid Cap and Small Cap are both currently trading in red. Nifty Mid Cap 150 is down about 0.2%, and Nifty Small Cap kind of flattish there, but treading the territory in red. So that's the broader markets. If we can also look at the breadth of the market at this point and see what is the ratio of advance and declines. Yeah, there you have it. You can clearly see there's a bit of a choppy market right now. It seems indecisive at this point. So literally the advances and declines are pretty much merging, and that's the state of the markets right now. And but the focus for today is Zee Entertainment. Now, we have NDTV Profit has an exclusive on Zee Entertainment today, and according to sources that spoke to NDTV Profit, Zee Sony lawyers are engaging in talks. Now, this comes after the collapse of the Zee Sony merger. So this, and the markets are taking positive cues from it. The stock is up in trade today, and if I'm not wrong, it was touching upper circuit at 5%. That's pretty much a positive cue on Zee. But I'll come to you, Vineet, on Zee Entertainment. How are you viewing this development? Do you see some sort of, I understand there's uncertainty in the stock that remains, but from a longer term perspective, would you suggest people to stick with Zee Entertainment if they already have the shares?
See, the primary perspective for Z2 and Sony to merge was truly to take on the competition which is coming from big boy Reliance, doing a deal with, Hotstar and Disney. Now, with that kind of ominous competition, Z, if it thought that it could survive on its own, or thrive on its own, they would have not gone in for a merger. But the fact that the merger has been called off and this thing, so it really does not portend well for the Z stock. Of course, there's a little bit of upside coming in from the fact that the stock was beaten down very aggressively, and they would possibly be looking for other suitors for their business. So until such time, I think this stock does not have too much of mojo in it, and we expect the stock to drift upwards because because the beating has already factored the downside.
Right, understood. Okay, let's quickly jump into the questions now. The first one is from Ranjit, and they're talking about Nalco. This one's for you, Nirav. They want to know what is the good price to buy Nalco. Should they buy the stock at this juncture? Should you wait for some more of a dip in the stock to get into it?
Yeah. So, see, this stock has witnessed a big breakout. This is about a 15-year breakout. This is the first time this stock has gone above the 140 levels in its history after, the 15 years. So definitely, it has a lot of legs to move up, and it should move up very quickly. So my only request here is don't look to trade short term in this stock. The volume profile is very good as well. There is a likelihood that this stock is going to go up towards the 220 to 30 odd levels in a very short period of time. So look to buy the stock even at current levels and on dips up to 150 or 145 is a very good support area. That should be a stop loss. And at 220 to 30 as well, don't look to sell. You can probably again see how the chart looks. You can ask a question again and we'll be there to help again.
Got it. Let's take a question from Rajesh Maheshwari. He's written to us on YouTube and he's talking about Dixon Technologies. He's already bought in the stock at 5,000 levels. He wants to know what's the outlook for this stock from a short to medium term perspective. So Nirav, tell us what are the charts showing on Dixon Technologies?
So this stock has witnessed a 2-year consolidation breakout above the 6,300 odd levels, and post that there was a small little flag kind of a formation breakout which has come in, and definitely believe this stock is going higher up to the 7,200 odd levels. You can continue to hold the stock for the target of around 7,200. Now the only thing one should do is, keep a stop loss around the 6450 odd level, which is a good support area. That should be a good stop loss as well.
Right, fair point. Next up, we have a question coming in on Coal India. Now, this one's from Pranav. We're seeing a downtick in the stock after yesterday's commentary from the management, and we saw the results also. The e-auction premium has come down. We need, from a longer term perspective, do you still remain constructive on Coal India?
Absolutely. So with the number of coal-fired plants being set up and the demand for coal going up, there is obviously going to be a shortage in peak power. So obviously that can only be met through Coal India's coal, and we expect volumes to remain robust, and there is steady pricing, and we also expect a little bit of operating leverage to come in because coal is also setting up its own power plants. And apart from this, the washing of coal also helps in improving the the profits margins. So I think coal is a good buy at current levels.
And from a technical standpoint, Nirav, how does Coal India look?
Technically, it looks very good. This stock has consolidated from 2011 onwards, and this is the first time a 100% retracement has taken shape. And in fact, the stock also went above those important resistances of 450 odd. I definitely believe this stock has the legs to move up. No doubt, it is negative today. Also, some dividend has come in today, so that is why it is down. But I definitely believe one should continue to hold the stock, even buy it at current levels. It should move up quite significantly, like it has done in the last 6 months odd. I am looking at targets, medium-term targets of around 750, 800, and from a short-term perspective, definitely 550, 600 is achievable. So don't worry here. Probably another 3-4 days of consolidation or downtick, this stock should again regain strength and move up. So continue to invest in this stock.
Got it. Next up, we have a question from Sulochana from Visakhapatnam. Now, they're talking about Adani Wilmar shares. They've already bought in the stock in 2022 at 700 rupees. Yes, 700 rupees. We need, from a longer term perspective, what's your view on Adani Wilmar?
I think, the franchise is a very strong franchise, and to build such a franchise, it takes about 20 years. And the fact that the company operates primarily into the edible oil space, which is a large chunk of its business, there is bound to be some volatility. But with the government taking a lot of steps to ensure that, domestic volumes pick up and there is uniform, reduce the volatility to a large extent, I think Adani Wilmar, with its diversification into FMCG and other products, is well placed to buy from here. So I think, barring for the fact that the Adanis want to sell out, this stock is definitely at a interesting point, and it can continue to move up from.
Right. Just a standard disclosure here, NDTV Profit is part of Adani Group, and yeah, that's why you're watching the show. Now let's get into another questions. This one's on Roto Pump. Now, Nirav, I'll come to you on this one. This question is from Devang, and they've bought in the stock at 245 levels. Would you suggest holding on to it, and what are the key levels that you should watch out for?
This stock, I'm seeing a very good pattern develop here. A higher top, higher bottom formation is in place, and the volumes are also rising as the stock is rising. So that's a very good sign. I believe one can stay invested. You can in fact add more positions at current levels as well. You don't see any distribution that is happening. So yeah, it should again regain strength and move up above that 450 odd resistance zone and up to that 550 600 levels. Continue to stay on. The only real thing here is for you keep a stop loss of about 380. Once 380 is broken below, there can be some negative bias for this stock, and about 320 odd can come. But I don't see it coming, probably breaking that 380 odd levels. But always have a stop loss with you while trading or investing.
Got it. Next up, we have a question from Krishna Kishore from Hyderabad, and they're talking about Shipping Corporation. Now, Vineet, recently we did a story on Shipping Corporation that talked about, we essentially valued the non-core assets of the company, and it turns out that the market value of these non-core assets, which will be demerged into SEILAL, is double the book value. Now, considering that, we have a Krishna who's bought the shares at 141 levels, and currently the stock is trading around 251. From a longer term perspective, what would you suggest Krishna to do with the Shipping Corporation of India? And I also want you to talk about the concerns around Red Sea as well, that is having an impact on freight costs.
Yeah, so first thing that I think is he should continue to hold on to this stock because there is going to be substantial upside coming here. What are the reasons for driving this upside is the fact that India's EXIM business is going to go up very aggressively because the country is trying to push merchandise from Made in India exports and Atmanirbhar Bharat. So that is number one. Number two is that, if you see the crisis which is there in the Red Sea, India has, Indian Army has been very protective about its vessels, and they've taken some preemptive action. So that goes to show you that, our vessels are safe and secure. Third thing is that, it's obviously a conflagration, which is explosive situation, and prices are expected to stay firm, right? So this is, while this will help SCI build on the margins, it is going to impact the insurance cost. So, there will be a net minor gain for the company. But apart from that, I believe that longer term, the story looks very, very strong. And the government is hell-bent on improving the efficiency and valuations of, the PSUs. So we believe that you should continue to hold for these purpose.
Understood. So it's a hold on Shipping Corporation of India. Next up, we have a question from PGK Raju, and he says he's retired from the central bank and he's also holding the shares of central bank. He bought it at 60 levels. It's currently in the red today and trading around 66 levels. Nirav, what kind of levels should you watch out for in central bank? Should you continue holding on to it because he's there's a marginal profit there?
Yeah. So, if he's holding on to the stock from a long time, this is the right time for the stock to perform and, give him good profits. This stock was in the snooze mode for, the longest time, probably 15 years. This stock has come down from 120 odd onwards. But the volume profile is very good. Now the stock is also doing a higher top, higher bottom formation. I believe this stock can go up towards those 85, 90 odd levels in the short term. So if it's looking from a short term perspective, that is your target. But from a medium term perspective, 100% retracement of around 120, 125 will come in the next 6 odd months. So definitely hold on to this stock. It will give you good profits. The stop loss here to be followed is around 56.
Got it. Understood. We'll slip into a short break now, but after the break, we'll take a lot of more of your questions. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
Welcome back. You're watching Ask Profit. Without wasting any time, let's quickly jump into the questions. The first one's coming from Shambhunath from Kolkata, and they're talking about Deepak Nitrite. They've bought in the shares at 343 levels. Now, Vineet, Deepak Nitrite, we had the management also on today talking about the company and the fundamentals. If you can tell us what's the long-term view on this one, and should they continue holding on to the shares?
So, we believe that while, right now the chemical market outlook is not that hunky-dory, our reasoning is that Deepak Nitrite has been indulging in business which is, an import substitute. So the market for them is like a buyer's market which they service, and that provides them with a lot of volume security and the business security. Ultimately, what is going to drive the stock upward is a recovery in chemical prices, and we think that this should happen over the next few months, given the fact that we are in the fag end of a exhaustion of the chemical price decline. So we are quite constructive on the entire chemical industry, and we think there is more gain than pain from current levels. So you can continue to hold the stock.
Okay, fair point. Now, next question is from Nishant Patel on YouTube, and they're talking about Adani Energy, and they've bought the stock at 1,079 levels. And I'm not sure if they've mentioned, yeah, this is from a mid to long term view. So Vineet, this one's for you as well, Adani Energy. Should you continue holding on to it from the longer term? I know you've talked about the power sector on a whole, but specifically this one, would you remain constructive?
Yeah, absolutely. See, with the increasing number of renewable projects that come in, you need to put up new transmission lines and the entire infrastructure setup to vacate the power. And, that is where Adani Energy comes into play. In this, what happens is that, they get 30-year cash flows decided right at the beginning of the period when the contract is allotted. So there is some very strong cash flow accruing over 35 years. And, it's very difficult to replicate this kind of business after 35 years because of the cost inflation for the infrastructure project. So what happens is they tend to get renewed with the existing players. So these are like perpetual income for these stocks. So I believe that they have a very strong growth factor. They have been gaining almost 30 to 35% market share of the private sector projects which are rolled out, not including power grid in this perspective. And they've done really well. And we think that this stock is headed for another 50 to 60% upside from current levels over the next 2 to 3 years.
Okay, 50 to 60% upside in Adani Energy. Now, next up, we're talking about Time Technoplast. This one's from, I'm not sure if they mentioned the name, Hari. And they want to buy the stock, Nirav. Now, Time Technoplast, if you pull up the 1 year chart of this, it's a multi-bagger. It's given over 160% returns. Do you think there's more upside into the stock?
Oh, definitely. See, there is a period before 2020 and then there is a period after 2020. Before 2020, there was no volume whatsoever. Just look at the volumes this stock has managed after 2020. It's a totally different stock post that. And no doubt it has given multi-bagger returns because of the volume. The profile is superb. There's a V-shaped recovery for the stock, and this is on the verge of a multi-year breakout. The multi-year breakout level is around that 230 odd levels. Once it gives a closing about 230 levels, you will see this stock fire, all guns blazing. This stock can go up toward the 280, 300 odd level. So definitely go ahead and look to buy. But above that 230 levels, once that breakout comes in, only then buy. You can keep a stop loss of around 210 for your longs post breakout.
Got it. Vineet, let's talk about the IT sector. This one's from John. They've bought in TCS at 4100 and Infosys at 1700. And we've seen a bit of a chop and churn in the IT sector. We saw US inflation kind of more than what was expected as well. What would you say to somebody who's holding on to a TCS or an Infi? From a longer term perspective, of course.
Obviously. So for me now, there is still a lot of, if you see technically there are breakouts, the stocks have hit new highs and price action has been quite positive and investors have benefited. But going ahead, I am not very sure on what is going to be the outlook for this sector. Primarily due to a couple of things. One is the orientation towards AI, number one. Number two is, we believe that we are at the precipice of a possible fall in the dollar. When that will happen is anybody's guess. But that is an overhanging sword, and the risk of that to the entire business being based on arbitrage of labor, doesn't portend well for the outlook of the service providers. So as a policy, we are constructively negative on these stocks. So if you're a long-term holder, you must trade with very tight stop losses. And if you're in profits, don't let these trades get into a loss. If you're getting into a loss, you should be exiting them.
Okay. Nirav, do you have the same view on TCS and Infosys? And if you do give us the levels.
See, frankly speaking, these stocks have had their share of consolidation. And now TCS is one stock which has led the rally for the sector as a whole. And a rounding shape breakout has come in this stock. That breakout had come in around that 4,000 levels, which is being retested again. So once that retested is done in the next couple of weeks, you will see the stock moving up very swiftly. And I feel whatever wrong had to happen has happened technically. This stock can move up towards that 4,800 to 5,000 levels very swiftly. And the others as well. You look at the others like Infosys Tech, Mahindra, HCL Tech. Most of their consolidation period is over. Volumes have risen from the lows, and very importantly, a lot of shorts were in the system, which seem to have come out now. So covering has happened. So even for Infosys, for that matter, a small breakout has come in, and it has been retested as well. So 1650 is a very strong support area now. So this stock is headed towards 1850, 1900 levels very soon. So definitely a buy on dips kind of a stock where you've got dips today. Should be bought into with for Infosys 1640 will be the stop loss, and for TCS the stop loss would be around the 3980 odd levels. So both these stocks are a buy, and I believe the sector as a whole should see good upside.
All right, understood. Thank you so much, Nirav and Vineet. We're completely out of time, and thanks for joining in and for answering so many questions for us. And viewers, we'll be back tomorrow, same time at 11:30 a.m. If you were not able to take your questions today, we'll definitely try and take them up tomorrow. But stay tuned to NDTV Profit, lots more coming up on the other side.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
Markets trade in the green. Sensex now trades above 72,800 while the Nifty stands above 22,100. Sectoral indices trade mixed, dragged by auto and pharma. On the other hand, media and realty come out as top gainers. And meanwhile, Z re-engaging with Sony Group on merger talks as per sources. Stalemate over key issues continue. That's an NDTV Profit exclusive. And a dismal day of trade for Whirlpool as promoters are expected to sell 24% stake in the India unit at a discount of nearly 8% to current market prices. The stellar Dalal Street debut for Vibhor Steel shares list at a premium of over 100% to its listing price of 420 rupees per share. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and take an expert opinion on the same as well. But before that, a quick look at how the markets are faring, and it's been a quiet day of trade as far as the Nifty is concerned. The positive is that it's sustaining about 22,000. It's currently marginally in the green as we speak. But it's the Bank Nifty which is outperforming the benchmark. So the Bank Nifty is advanced by around 0.8%. It is the Fin Nifty weekly options expiry, and a lot of that is also translating to the specific index, but no prizes for guessing. The key contributor to both these indices advancing is HDFC Bank, which is also up and about by as much as 2%. We're going to get you a lot on HDFC Bank, of course, in this show too, but let's take a look at the constituents and the contributors to the Nifty as to where there is a pull and a push. So no prizes for guessing that the main positive contribution is coming in from HDFC Bank. That's followed by some gains in Axis Bank and Kotak Mahindra Bank as well. Power Grid among the many other gainers on the list. And what's weighing on the indices today is Infi and TCS, Coal India and Reliance Industries to a certain extent. But it's been a fairly quiet day of trade as far as the benchmark is concerned, save for something like your banking counters, which are advancing. What's happening in the broader markets is a little bit of an underperformance now. We're seeing a little bit of temperance as far as these indices go. So the mid-cap 150 is down by 0.25%, and the small-cap index is largely flattish, but it really hasn't done too much in today's day of trade either. The question is that, can we expect a little bit more consolidation through the course of the day? Well, that's a wait and watch on that one. But on that note, let's take a look at all that we want to address in the show today. So we are going to talk about Whirlpool of India and how things could potentially pan out in today's day of trade, along with the fact that, well, what happens once the parent company moves out of the India unit. Coal India is also in focus. We have HDFC Bank. We have management rejig in Kotak Mahindra Bank, which we're going to talk about. Z Entertainment doesn't cease to be in the news, does it? Something that we will discuss, and some amount of weakness in the two-wheeler space also panning out. That is something that we will take up with. And with none other than Sharmila Joshi of sharmilajoshi.com, who is joining us on the show. Sharmila, good afternoon. Thanks so much for taking the time out. Sharmila, I'm going to come to you in just a bit, but I want to take up the first subject with Coal India. Let's bring in Vikas to tell us a little more about the key highlights that came through towards the fag end of the trading day yesterday, and it's clearly had repercussions today as well. Vikas, good afternoon. What do you have for us?
Yeah, hi. You rightly said the stock is likely to be in focus today, especially because what the management yesterday said, they had trimmed the production volume target, what they had given at the beginning of the year, of 780 million ton by 10 million ton. But what's impacted more, I think, the stock and is likely to impact is basically the e-auctions premium, which was around 117% in December, has fallen to almost 45 to 50% in January, and is even lower in February at 38%. However, today the brokerages, some of the brokerages like Motilal Oswal and Nuvama, they have come out with a report on the this management call which happened yesterday, and they've said that they have their buy rating and they expect Coal India stock to basically reap in the benefits of basically volume growth, that CAGR that they see of 3 to 6% for FY24, and also they have trimmed down the employee cost, which is likely to be lower, which had been the overhang for now till now for FY24, and next revision is likely to happen in FY26. So till then the stock is likely to perform basis the volume growth that they have seen, and they have also increased their supply to non-regulatory segments. So the volumes have increased, although the premium have fallen because of the drop in global coal prices. So it's likely to be a stock that needs to be watched out for, but overall the commentary is that they are likely to benefit from the overall growth that the country is seeing.
Right, Vikas, thank you so much for all those updates coming in. But we also have an expert view here. We have Rupesh Sankhe, the Vice President of Elara Capital, who's also shared with us his outlook for FY25 and Coal India. Listen in.
Definitely, the Coal India guidance for FY24 was close to 780 million tons, and there will be a shortfall around 15 million tons we are expecting. And for FY25 also, their target was earlier was 850 million tons. So we are expecting close to 825 kind of a target for FY25. Now, if you look at the stock performance was largely because of higher e-auction realization that witnessed in the last 12 to 15 months. And there is a lot of concern is there on the e-auction realization, which has down to almost 3,200 rupees per ton. Earlier, it was close to 7,000 rupees per ton. And we believe that the e-auction realization will go down further because a lot of stock inventory is there. And the India's peak demand, which was close to 240 gigawatt, has come down to 210 gigawatt. So slightly concerned there on the e-auction realization front. On the volume front, we have seen the new thermal capacity expansion there around 70 gigawatt by 2032. And that has boosted the sentiment around Coal India in the last 12 to 15 months.
Right, let's get in Sharmila into the conversation. Sharmila, good afternoon. Thanks for joining in. Your view on Coal India, how do things stand right now? And, you know, over the last 1 month, we had seen a lot of strength in this particular PSU. But over the past 2 days, we are seeing a little bit of correction. How are you, looking at this particular company right now?
So yes, I think, as we've been hearing, this definitely does put a dent in the scheme of things, as it were. Because e-auction, if you're going to really see a reduction in the price there, then that will impact the stock. But I think somewhere there is a feeling that that could be offset a little because you would expect volumes to sort of offset that to some extent. So having said all that, I think there are a couple of reasons why the stock has, sort of had the run that it has had. One is, of course, I think, as we've been discussing, PSUs as a basket has been doing very well, and we are seeing some cuts on that. So there could be continued pressure on the stock. Also, valuations are high. So I would really advise a word of caution on this because now you are in a scenario where the space as a whole is correcting, PSU space, and you have some concerns for the stock as well. So I think don't make any fresh purchases. I'm not negative on the stock, but given the valuations, I think it's best not to buy at this price.
Right. Stay on, Sharmila. We move on to the next one that we want to address, and that's Whirlpool of India, where we understand the promoters are looking to sell their stake, 24% stake in the India unit. I'm going to get in Mahima to talk to us about a little more in detail about this impending deal. Mahima, good afternoon. What do you have for us?
Good afternoon, Agam. So as you rightly mentioned, Whirlpool Corporation is looking to sell around 24% of its stake via block deal, and it's and sources say that it will happen today. I mean, it has happened today. Whirlpool Corp held 75% of its stake in Whirlpool India as of December ending, and if they sell 24% stake, they'll still hold the majority of 51%. Whirlpool Mauritius will be the selling shareholder as per the sources, and Goldman Sachs is the sole broker for this deal. Now, talking about the stake sale value, where the floor price is set at 1,230 per piece, and this amounts to approximately 3,744 crores. Now, the floor price has indicated a discount of approximately 7.6% as per the closing price at NSE for Whirlpool India yesterday. And the purpose of stake sale is mentioned to be that Whirlpool Corporation wants to use the proceeds to reduce their debt levels and enhance their balance sheet flexibility. Now, they had come up with an exchange filing on 30th of November 2023 previously, stating that they will par stake in Whirlpool India for approximately 24%. And since the filing, the stock has fallen approximately 12%. And if we talk about the debt profile of Whirlpool Corporation, where the debt as of 31st December stands at $6,400 million, and they've said that they target to pay approximately $500 million in this quarter itself. Overall, even if we see the stock performance, the stock has been down today in trade. Even if we talk about the 1 month performance, the stock has been hardly up 1.8%. 6 months, it's been down 16%. And 1 year, the stock has hardly given a return of 2%. And if we compare it to its peers, in terms of 5-year returns, Whirlpool has fallen around 5.5% in the 5 years, whereas its peers like Crompton and Havells have grown approximately 40% to 94%. So this is all we have for Whirlpool India so far.
Right. Mahima, thank you so much for getting us those updates. Sharmila, we all know that the consumer discretionary space has seen its own set of challenges, and Whirlpool India is no different. We've also seen returns which are not spectacular for this one. In fact, we've seen relatively flattish, returns for this one. How are you placed on this one after we see the parent move out of the India unit?
Yes, I think precisely the first point that you made is probably, to my mind, very significant. What we've really seen is in this space, and I would include a couple of other stocks in it. I think that in the pandemic, you did see a lot of, churn in terms of this white goods sort of capital goods space that we see, because a whole lot of people bought new refrigerators, washing machines, dishwashers. So, whether it was an IFB, whether it was a Whirlpool, Havells with their, Blue Stars of the world, all these stocks, had a dream run. And since then, given, the kind of data that we're hearing for the space as a whole has not been great. Now, within that space, again, Whirlpool, unfortunately, has not really done too well in terms of the numbers that they sold. And I think some of the reasons are now apparent. I think that if your parent company and if there is a sort of a debt burden, then you don't really take advantage of even the good times and expand the way you would like to. So while this news per se is not a very big negative, because the stock has not really done anything and it may not impact stock price too much, what it also means is that you're not really going to see the stock going anywhere, because they do have a debt that they need to take care of, and the space that they're in is, their numbers have not been good, and the space that they're in again is facing challenges. So all three things sort of going against them.
Right.
Unfortunately, I have the stock. I hold on to what I have because it's a very small quantity, but not positive on this stock.
Sure. Well, fair enough, Sharmila. Stay with us. We'll slip into a short break, but on the other side, we get you more focus on the banking stocks, which have been buzzing off late. Stay tuned, and we'll be back in just a bit.
Brought to you by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
Welcome back to Hot Money, and we shift focus to HDFC Bank, which is in focus, and where the MD and CEO Shashidhar Jagdishan spoke about the bank's granular deposits in an analyst meet. This is what he had to say. Listen in.
We realize that effectively we have preponed the loan growth, so I need to now have that period of I would say, what do you call it, transition time to warm up the engine to raise that amount of equivalent granular sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up and so that matching with that of the loan market share. Obviously, it's not going to happen overnight. It's a kind of a glide path that we will be seeing. In the meantime, obviously, whatever I raise, if I raise a lot more, then I'll have enough to maintain reserves. I'll have enough to pay off the bond maturities or the loan maturities that will come up there, and the balance we'll deploy it. If I have constraints because of the monetary policies or monetary situation, liquidity situation in the system being rather tight, to that extent it will be much lower. But yet, just by repayment of the high cost borrowings, you will see the trajectory of profitable growth continuing.
Right. That's, of course, the MD and CEO telling us about how and all the plans that are on the anvil as far as the HDFC Bank is concerned. But Sharmila, I come in on HDFC Bank. It's, of course, we all know the kind of volatility it's seen off late, but the message here, it seems to be clear that they will prioritize profitability over deposits growth. And we know that there has been a challenge with respect to the entire sector when it comes to the deposit growth. How have you placed on HDFC Bank now at these levels? Do you think that you would want to perhaps dip into it?
Yes, I think that I have been positive on the stock, and as you know, the street has been very divided, and a lot of the concerns that we are now seeing getting played out in the numbers is something that you sort of knew around the time of the merger. It is unfortunate that when it did play out the way it happened, and the focus, the way it shifted, not just for HDFC Bank but for banking as a sector to NIMS, is what has really hit the space quite badly. And I think this was long overdue, because the street was waiting to hear from the management, because at the end of the day, no management will speak lightly, and so this is a more this is now something from which we can build on and understand that how things will progress for them going ahead. So yes, I think that while, as I said, I've been positive, and I have sort of advised buying in the stock and started buying as well. The buying is sort of staggered, because I don't, nothing has been indicated is going to be immediate, and you will have your time to sort of get the stock at your price. But having said all that, I am positive on the stock.
Okay, so positive on HDFC Bank. But there's another stock which has been under a tremendous amount of pressure of late, and that's Zee Entertainment. Now, we understand that Zee is re-engaging with the Sony Group on the merger talk as per sources. And of course, we all know about the stalemate, so which continues to be a big challenge as far as the deal is concerned. Yet, the shares are up as much as 5% today. This is after we understand that, it has re-engaged Sony. Now, remember that at least as far as sharp movements go on this particular stock, it's going to be a relatively lackluster one because of the fact that it's in an F&O ban. That said, we still have a lot of issues to weed over as far as the entertainment is concerned, and that's something that we'll continue to keep an eye on. Sharmila, how are you placed on Zee Entertainment, or are you placed at all? Would you want to avoid it before and until we have absolute clarity? Because it did seem like we did have clarity last week that the deal was off, everything was official, and now it seems like the deal is perhaps maybe back on the table. Would you want to avoid, or do you think that there is in fact an opportunity at this point in time?
Well, honestly, I think that it's best to avoid it. And I think as, you were discussing a little while earlier, the concern, the sort of the stalemate, as you would say, continues on key issues. And those key issues are something that I don't think that Sony would be ready to overlook. So I think it's best to get clarity on that and see how things progress from here. Because I don't really see the point of buying the stock in the hope that things will settle down very soon, or they will go either this way or that way. I think market will give us enough time that if it really does, Sony is successful in closing the deal, on what terms have they closed it, and what picture emerges out of that. So for now, for me, the stock is a complete avoid.
Okay, and we also want to address the two-wheeler sector, because Bajaj Auto, Hero MotoCorp and Eicher Motors, all of them have had a tremendous up move of late. It just so happens that today they are the biggest losers in the Nifty 50, and of course, notwithstanding today's weakness, on the whole, overall, they have certainly been big gainers, and they have volumes to back them. So at this point in time, Sharmila, do you think that there's a little bit of a resurgence in two-wheeler space? And would you be positive, would you stay positive, at least with respect, keeping the long term in mind?
Yes, absolutely. And I think one other name that you missed out is TVS Motors, because they had really great margins this last quarter. And I think another important thing that is emerging out of the numbers is that what you will hear from every management is that the premium segment has really given them good numbers. So this is only a concern for Eicher really, because at the end of the day, market always perceive them to be a player which is largely in the premium space. I don't think that in terms of numbers they're going to suffer, because at the end of the day, given the overall demographics and the aspirational nature of our population, that number is only going to expand. I don't think that sales will come down for Eicher, but it is just that there is this perceived sense of competition. But again, I think all numbers were good, and if the stock's correct, I think they'll just give us an opportunity to enter, because definitely I think my list would probably be Bajaj Auto, TVS Motor, Hero, and then Eicher.
Okay, Sharmila, the other big bank that we want to talk about is Kotak Mahindra Bank, and we've had some big management rejigs as well, which are coming into place from the 1st of March. Before I go across to Sharmila, I'm going to get in my colleague Vishy to tell us a little more about what's in store with respect to this rejig. Vishy, what do you have for us?
Thanks, Agam. So what's happening with respect to Kotak Mahindra Bank is a complete management rejig of sorts, which is happening with regard to the senior management at the bank. You're seeing people being elevated to senior positions. Some people who were not part of the key managerial personnel have also been elevated at Kotak Mahindra Bank. The first and the most important sort of rejig that happened at Kotak Mahindra Bank was with regard to KVS Manian. Remember that he's been heading wholesale banking since 2014. Before that, he was handling retail. He was a whole-time director on the board of Kotak Mahindra Bank. Now he's being elevated to joint MD. This I will come back to later, because it's an important sort of movement. The other big promotion was for Shanti Ekambaram, who went from whole-time director to deputy managing director from the 1st of March. So that is another sort of important reshuffle that's happening within the management. This appointment of Devang Ghiwala, I'm sorry, I think the image is of Ashok Vaswani, but Devang Ghiwala is currently now going to take over as the president and group CFO of Kotak Mahindra Bank. He will replace Jaimin Bhatt at the end of this fiscal. Milind Nagdur, who was CTO, is being elevated to Chief Operating Officer from the 1st of April. There again, that's a big one. He's coming into the KMP sort of classification at Kotak Mahindra Bank. Similarly, Paul Varambi will take over as Group Chief Risk Officer. He's, of course, been with part of the bank for the long time. Now he will take over a more of a group role. Now, why is this important? So Ashok Vaswani, who took over as CEO on the 1st of January. This is his first big move at Kotak Mahindra Bank. He's trying to retain that senior leadership because after Uday Kotak stepped down, there was a little bit of concern whether the senior leaders will continue to work under a new CEO. So this kind of a rejig does help. An unintended consequence of this entire thing is what's happening with Federal Bank. It's down about 6% today, primarily because NDTV Profit had reported last week that KVS Manian might be considered for the CEO role at Federal Bank. Remember that Shyam Srinivasan, the current CEO of Federal Bank, will step down in September. So a new CEO is being considered. Mr. Manian was one of the 3 candidates who was likely to be sent to the Reserve Bank of India. Now, we're not sure after the reshuffle at Kotak Mahindra Bank what exactly happens with his candidature. You're seeing that impact play out on the stock, of course, at Federal Bank, and similarly on Kotak Mahindra Bank, because if they are able to retain that leadership, then that really aids continuity at the 4th largest private bank in the country.
Right, Vishy, thanks so much for those details. And it's really interesting because the first time Kotak Mahindra Bank hit 1750 was back in November of 2020. And at the moment, it is at the same rate at which it was trading there. So basically, over the course of the last 3 years, we've really not seen any returns for Kotak Mahindra Bank. And almost every analyst that we speak to, well, they are of the suggestion that while the performance has been there, the overhang is of leadership. And this perhaps potentially could solve a lot of the problems as far as Kotak Mahindra Bank is concerned. But on that note, we are completely run out of time of the show. So I'm going to take a moment to thank Sharmila for joining us and taking us through her views on well, the various stocks and the themes that we've discussed. And with that, it's also a wrap on Hot Money. But don't go anywhere. Lots more lined up on the other side. Stay tuned to NDTV Profit.
Brought to you by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome to NDTV Profit. I am Muralidhar Swaminathan. Today we are looking at the Portfolio Manager show, and today's Portfolio Manager is Jyoti Vardhan Jaipuria. He is the founder and MD of Valentis Advisors. Jyoti Vardhan has been a veteran in this industry. He was with DSP before he launched his own advisory firm and a portfolio management firm. Jyoti, thanks for joining us. Welcome to the show.
Thanks.
Okay, so Jyoti, I would request you to introduce your fund to our viewers, your strategies. What is this PMS scheme all about? It's just about 5 or 6 years since you launched, I suppose.
It's more than 7 years now since we launched our first scheme. So we have 2 schemes over there. First is what we call the Rising Stars Opportunity Fund. So that is primarily a small cap fund by today's SEBI market definition. So 70 to 80% of our portfolio will be less than 10,000 crore market cap. What that aims to do is buy the blue chips of tomorrow. So we buy stocks today which are generally not known. And, like 3 years later, 5 years later, everybody will know about the scheme. The other scheme is what we launched 5 years ago, which was our multi-cap. So that's like a classic multi-cap with some exposure to large cap, some exposure to mid cap, and some exposure to the small cap. And, so probably a third of the portfolio here will be have stocks which are there in a rising star already. The idea of the multi-cap is what it does is the small cap scheme, the rising star scheme generally gives a very high return. At the same time, it comes with more volatility, which is inherent to the asset class of a small cap portfolio. So to that extent, this one is trying to reduce the volatility even at the cost of reducing the returns. Both the schemes are run in one very same way, which is research, and more research is our mantra. So we focus on deep fundamental research in the company. Our churn ratio is very, very low. We have like a churn ratio of like less than 20% in both our schemes. In fact, it is lower in the rising star than it is in the multi-cap. One other philosophy which we have is what we call the 3 U's. So we buy undervalued stocks, which obviously everybody does, whatever way they define undervaluation. But we are very happy to do underowned stocks, very happy to do undiscovered stocks or underperforming stocks. So, that's one of our core philosophies. The research is our strength, and very, very deep fundamental research goes behind most of our stock picks.
Okay, that's very interesting. Undiscovered stocks, undervalued stock, or whatever you may call it, hidden gems, if I may call so. What is for beginners? What's the ticket size, minimum ticket size, if somebody wants to get into your fund?
Our ticket size is 1 crore generally, so we don't want to do less than 1 crore. The SEBI minimum obviously is 50 lakhs, and we try to keep it a little higher, and because we want people who understand the philosophy. We want them to come for 3 years, 5 years. So what we tell our investors is, unless you're thinking of like a 3-year, 5-year vision, don't come to our scheme, because it is not really meant for people who want to come in and go out.
Right. And if somebody wants to come in today and put money, what are the other terms that would be required? I'm just helping viewers understand so that before we go on to talk to strategy.
So obviously, like, we have fees which are very similar to what a lot of the other PMSs charge. But one thing, because we don't want short-term money, we have an exit load for 3 years. And that is something which we are very clear on, that we don't want people who are looking at very short-term. So the exit load is something which we typically insist on.
Right. Okay. So my next question to you is, if somebody wants to come and put in, let's say, 1 crore, what will you tell them? Will you tell them that, look, at this stage of the market, I won't be able to give you X, Y, Z return as opposed to what it was the last year? Because I guess that's the beginning of the conversation.
Yeah, so, see, we never really try to give a return numbers per se. And, that's something which, even like if you go through all the SEBI regulations, you're not supposed to give any return guidance when people come in. What we obviously want to do is we want to create alpha, and we have a track record where we have sustainably created alpha, and we create a large alpha for portfolio investors. So that's something which people want to look at. Typically, we tell people a lot of this, because especially like if you come in rising star, it is a volatile portfolio. It will go down when the markets go down. The other thing is where we are today positioned in the market. It's not a cheap market. It's a market which has done very, very well, and it's relatively expensive compared to history. We think returns over the next 3 years, 5 years will still be made because earnings will be good in India, the economy will do well. But it's definitely not a market which is like a very easy market that the chances are that you will see volatility over the next 6 months, 1 year. Returns will be quite muted. In fact, the other thing which we are doing now is we are telling all our investors that we are not going to invest your money in which one shot, but we'll probably stagger it over the couple of months, depending on how the market goes. So we want to invest slowly rather than invest in one shot and keep some money just in case we get a correction in the market. We want some money to be available to invest at that point of time.
So which leads me to the next question. How much cash are you sitting on in the old portfolio? How much cash will you sit on if somebody comes in afresh?
So, in the new portfolios, what we are typically thinking today is we'll invest over 8 to 12 weeks. So, if somebody's come in, let's say a month ago, it's possible that we are sitting on 50% cash in this portfolio. In the old portfolio, we were fully invested till some time ago. We built cash of around 7 to 8% in the old portfolios by selling something. And this is again, we're keeping, like I said, we're keeping it as insurance that at some point the market will go down. So if you look at overall as a firm, we are sitting on close to 17% cash. But like I said, there's a difference between the new and the old portfolio, but overall we are sitting on close to 17% cash.
That would be your overall portfolio both together will be about 1,500 crores, the size of the fund?
Yeah, a little less than that. It's around 1,250 crores.
1,250 crores. Okay, excellent. So before I go to the next question, what I want to look at is, now in terms of, you're sitting on cash, whether it's 17% today or 18% tomorrow, it doesn't matter. Suddenly, there are days when the markets tank. Do you jump in and say that I will buy on this day, or will you stick to your philosophy of what my research has guided me?
So, for like the simple answer, we stick to our philosophy that we want to buy stocks at a certain price where we are comfortable with. So, very often what we do is whether the market is going up or down, we may want to buy something at X price, and that price could be like 5% lower than the market. It could be 10% lower than the market. It's more like, okay, at these levels, we feel that, the risk reward works out to be good. And we are generally patient and we're waiting for that sort of price to come. On down days, we do find that one or two of those stocks reach our level at which we want to buy, and we end up buying at those levels. So it's not like it's not a 0-1 game because, you're sitting on cash, so you want to deploy 1% today, you want to deploy 2% today, and it may happen that one stock has fallen, so you end up buying that stock on that day.
Okay, so at this point in time, I'm sure your research would may not match the price that you want, So you might have a bunch of stocks where that, look, they are not in my portfolio, but they are not at the price I want to buy. Do you have those kind of stocks? Would you like to name them, or would you like to mention what kind of stocks that you are there, which are in the waiting list, if I may say so?
Yes, you see, without naming stocks, there are like two types of stocks, right? One is there are stocks which are already in our portfolio, which we want to buy, but we may not want to buy at today's prices because we think they'll still do well. But if we can get lower, then we can, make even more return on it than we can make at today's prices. So typically, some of these are in the engineering space, some of these are in the banking space, and some in the cement space. So just to name a few sectors. So what we may be doing here is, let's say a new portfolio comes and we want to put 8% weight into that stock. We may at some point go and buy 3-4% weight in that stock and say, on correction, we'll probably add another 3-4% weight to that portfolio. And there's another set of stocks which are not there in our portfolios at all, which is, we don't own them at all, but we do want to buy them if we can get like a pullback and we can get prices looking very sensible. Some of these are actually in the banking stock, which we are looking at today, that these banks have done quite badly. And if we can get them cheap, then we do want to buy them. So there are banking stocks which we want to buy. And there are a whole lot of other sectors. The waiting list normally is very, very large, linked to some prices and linked to some events. So now, even some chemical stocks are starting to come on the horizon because we've not owned them for a long time. But now that they've corrected, there are some chemical stocks which are starting to look interesting. And we may at some point go and buy them also.
Right, very interesting strategies. I think we may have to slip into a break before we come back and ask specific strategies on how to select a small cap, because largely the portfolio is small cap. Stay with us, Jyoti. We will come back after this short break.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Welcome back. You are watching NDTV Profit, and this show's focus is on portfolio managers. Today we are featuring Valentis Advisors Rising Star Opportunity Fund, Valentis Advisors Multi-Cap Fund. There are two funds. They have about 1200 to 1300 crore of corpus, and it's managed and run by Jyoti Vardhan Jaipuria, veteran fund manager who started this 6-7 years back, and he is very keen on selecting stocks that are not in the limelight. Maybe the kind of stocks which would suddenly one fine day you will see they have gone up, but they have done deep research on this. Let me bring the conversation back. Jyoti, the next question I want to ask you, let me focus on the Rising Star Opportunity Fund. Here, the kind of returns, it's primarily 75 to 80% small cap largely. Now, how many small caps do you have in this fund, and what kind of small caps are they?
See, typically the portfolio has 15 to 16 stocks. So in some sense, it's a very concentrated portfolio if you compare it with, let's say, the mutual funds. And so because we have 15, 16 stocks, typically the weight of each stock, minimum we like to have is 5% weight in a lot of these portfolios. Now, it has a mix of stocks which are not known today and which we think will be known 3 years later. and some of the stocks have now got known, and they're generally beaten. But most of the time when we buy the stock, we are looking for disproportionate return in this. So our whole analysis works on what will it take us to double this money in the next 3 to 4 years. And that's the way we start like a lot of our analysis.
How many of these stocks have doubled their money in the last 3 years, if I may ask?
Oh, so last 3 years, I think most of them have done, but frankly, last 3 years is not an indicator because it's been one of those very easy phases, right? Because this is post-COVID. So, like the fund itself has done some crazy amount of return, but that may not be like a great way to look at it because we had this COVID base which created a lot of problems. So what I can say is, over the period since we started the fund, we've had at least like 3-4 stocks which are up like 7-8 times in 5 years. So that, would be an interesting way to look at it, that you managed to get quite a few of those multi-baggers there.
Okay, so I think essentially we should call it as a multi-bagger kind of a portfolio over a period of time. If I can take one example, I want to understand how you have spotted these companies and why have you invested and what is your conviction here. For example, Ganesha Ecosphere is your top holding. What drove you to look at this stock?
So, without getting too much into specifics, because, we'll end up with some compliance issues.
Sure.
So, in general, if you think about it, recycling and pollution is going to be a big theme for the next 5-10 years. Pollution is a theme because we are getting more environment conscious, and, India signed a lot of these, climate agreements also. And the Prime Minister himself is very, very aware of it. So if you think about it, like we all have PET bottles, we use them. The bottle in which you have Bisleri, the Coke bottle, the Pepsi bottle, all these are PET bottles. And plastic, as you know, does not just naturally get into the waste, so it needs to be recycled. The government of India has mandated from next fiscal year that all the bottlers will need to have a certain amount of recycled material when they make the bottle. So it's like what happens with this bottle, PET bottle, is you can crush it and create PET again, which can be used to make bottle again. So in some sense, it's a whole recycle chain that you buy a Pepsi and the empty bottle is converted back into a bottle by crushing it and taking PET chips out of it and making a bottle again out of it and ensuring all the safety and quality standards so that, because it's a food grade product. And so that will be a very big theme for most of the people like Coke. Just in general, I think they want to move to using 80-90% recycled material over the next decade. So most of the Coke bottles or the Pepsi bottles will be from recycled material rather from virgin PET. And it's companies like this which will stand out a lot because the whole ecosystem is going to move in such a way that they will have a lot of demand in future. And if you can build a sustainable model around it, you can do very well with it.
Right. So, as an extension of that theme, yesterday I looked at a very interesting piece of news. Balrampur Chini is looking at making plastics out of a particular chemical made from sugar. I think it's called polylactic. That's a very interesting. So, there is some innovation happening. Do you also look at companies which go in for such innovation?
Yeah, so, we are very open to it. So, we never say never is like a philosophy to anything. It's more like, can we understand it well? Because we are not probably great technology guys. So sometimes, it's something, can I understand it simply or not? And the second is it a little more sustainable? Because, we're not venture funds. So we can't afford to bet on somebody who, the technology may or may not work and it may take many years. So we may get in at a later stage, venture capital gets at some stage. We'll get in when the technology model is discovered. Or at least proven that, okay, this is going to work. So for us, we are happy to look at a lot of this space. In fact, for us, it's a theme. So there are lots of these recycling companies or companies which will do very well when the tech environment comes around, which we want to play in. At the same time, we don't want to go and bet on, we don't want to bet on somebody who's starting to do R&D on something else.
Right, very interesting observations. I was looking at the sector allocation and I find that infrastructure has got about 16%, capital goods about 10.75%, auto ancillary 9. More or less evenly distributed. What in infra one can look at? Are they road builders? Are they kind of the bus makers or the EV battery makers? What kind of infra are you actually looking at?
It's very interesting because the reason we took infra, and one of our themes was we prefer investment theme over consumption theme, and that's been our theme right from 21, that we think investments will do well. The logic for that was two. One was our whole three-use philosophy. So the consumption theme was overvalued, whereas the infrastructure was undervalued. It had underperformed a lot, and most people didn't own it, so it was underowned. The other was that the government, if you see, as a government capex as a percentage of GDP was going up, and it was going up like if you see every year, the percentage was going up. So in the last 5 years, more or less doubled as a percentage of GDP. So it was like we have to play that government capex. Now, one thing which we played, and this sounds not so much, the Prime Minister came with this Har Nal Jal, which was water at every tap in the villages. And that was something which we played in a big way, because one of the gainers from that was putting up the pipe companies. So we bought a lot of these pipe companies because one is, additional demand would come from this Har Nal Jal program of the government. And the second is the pipes were anyway doing well because of all the infrastructure thrust from the government. It was a sector which we picked up like close to 4 years ago. And today that sector now is become universally loved. Everybody's buying it. A lot of the mutual funds own it. But at that time, we had picked up a couple of very small companies in it. Most of them would become like, a multi-baggers now. So it was like taking a very small segment of the government spending, which was not a crowded space, not very well known, and starting to, play out of that. One thing which I always like in these companies is I don't want government sales to be more than 20-25% of total sales. So that is something which you're very, very on. So when you're comparing this versus road building companies or something, for us, this was the advantage that, okay, if the government sales become very large, then your balance sheet, if they don't pay you on time, the balance sheet starts to get strained. Whereas if the it's at 20-25%, then you can do much better with it.
Right. Okay. So I think it's time to switch focus to multi-cap. I think the market is also now moving away from mid and small to large caps. What's your strategy for multi-cap, and what kind of returns do you think you would be able to deliver? And today, would you lean more towards large caps within multi-cap?
Yes. So like within the multi-cap space, we are adding to the large cap and selling or reducing the weight of the small cap. And the reason for us was very simple, right? It's valuation. Again, I just go back to the three-use philosophy. So relatively, the large caps have become overvalued. Relatively, the large caps have outperformed a lot. And, that's where the ownership has built up over the last couple of years. So we are, basically switching more to small cap. But having said that, like 2 years ago, we owned probably like 40% large cap in our portfolio. That number's come down closer to 20% now. So there's a lot of gaps. So, if you think of where we were 2 years ago, we are much, much lower. Than part of this has happened just by performance, because the small caps have done so well that their weight keeps going up every month if we do no action on it. So I think the next 6 months, the trend is going to be reduce the small cap and increase the large cap in the portfolio.
Right. So talking about large cap and trying to align it with your strategy of hidden value or undervalue. When the market gets worried about large caps, I can take one of the most current examples is HDFC Bank. Everybody got worried. Even yesterday, the CEO very clearly said that we are not going to disappoint. Do you look at those kind of opportunities which come your way?
Yeah, so for us, our whole three-use philosophy automatically, a lot of the schemes which we do guides us to that. So it's like, 3 years ago, and, I don't split the banks into, people always have this public sector versus private sector. For me, it was retail banks versus, the corporate banks. And 3 years ago, we took the call that the corporate banks is where, the bigger value is, because retail banks had done very well, so they had outperformed. Retail banks had become very expensive relative to the corporate banks. The corporate banks were undervalued, and the retail banks were overearned and the corporate banks were underearned. And so, that was the call we took that, it's the corporate banks where we want to focus on, though the whole market is focusing on the retail banks. And, in the last 3 years, that worked out very well for us. So for us, we are always getting into space which is not the most common known today, whether it is the large cap, whether it's the mid cap, or whether it's the small cap. That's the way we think, And we get very worried of high valuation. So we typically get out early of stocks. We get in early into stocks, we get out very early into stocks.
I think that is a lesson for many investors. You have to get in early and you have to get out very carefully. I think once sold, you may not get that price. Selling is tougher, I suppose. Jyoti, thank you very much for all the insights and wish you all the best. Thanks for watching NDTV Profit.
Bye.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an
Markets trade in the green. The Sensex now trades above 72,800 and the Nifty stands above 22,100.
Sectoral indices trade mixed, dragged by auto and pharma. On the other hand, media and realty come out as top gainers.
Meanwhile, Z is re-engaging with Sony Group on merger talks as per sources. Stalemate over key issues continue. That's an NDTV Profit exclusive.
Dismal day of trade for Whirlpool as promoters are expected to sell 24% stake in the India unit at a discount of 7.5% to current price.
Stellar Dalal Street debut for Vibhor Steel shares list at a premium of over 100% to its listing price of 421 rupees.
Good afternoon, welcome. You're watching Market IQ on NDTV Profit. That's Pallavi Natha. I'm Harsh Saita. Over the next half an hour, we'll try to bring you more insights, more IQ. That's what the show is about with regard to certain stock sectors which are buzzing. Let me first start off with where markets are at. And Pallavi, if we're looking at the market itself, you're looking at it broadly very close to the day's low. That's where the Nifty is at, currently at 22,155. I beg your pardon. That's 100 points off the day's low. So no complaints at all where the Nifty 50 is concerned. Let me quickly take it to where the mid and small cap and the broader markets currently sit at. Not a very pretty picture where the broader markets are at, but there has been a bit of a recovery in the broader market. They're off the day's low. And that's a possible positive that one can take out. Let's look at the advanced decline and make out some trend as to where directionally markets are at. There you go, flat as you like, advanced and declines. But we're at or close to all-time highs and therefore nothing much to complain about, even though that advanced decline ratio doesn't indicate much positivity, at least at the moment. Let's look at what are the contributors on the Nifty 50. HDFC Bank leading the pack, 2% higher and contributing roughly 50 points or thereabouts. You also have the likes of Axis, Kotak also participating, which means that the private banking space looks good for today. Among the laggards, Reliance Industries and the IT pack sit atop. And then you have ITC and others to follow. And that's what's causing a bit of a drag in terms of where the markets are at. In terms of sectors, quickly on to where the banking and the Nifty Bank currently sits pretty 1% higher in trade today. But the Nifty Auto not looking good. The Fin Nifty, it's Fin Nifty expiry, and that one also trading 1% higher. So positive cues from the financials pack. Nifty Media is up 1.91%, largely on the back of the fact that you've got Z, which is up and away in trade, contributing to a large chunk of those gains. Nifty Realty also up 1+%. And among the laggards, you have Nifty Energy, Nifty Pharma, as well as Nifty IT, which are trailing. So it's a mixed bag kind of a day where sectoral indices are concerned, Pallavi. But on top of the Nifty pack, at least today, we have Power Grid. It's up 4% in trade. And, I'm going to go across to Varsha because we have a Bernstein note, which is an initiating coverage note by Bernstein, rating Power Grid and outperform. It's probably one of the reasons what's driving the stock higher. But give us more perspective on this, Varsha. What is the Bernstein note saying?
Hi Harsh, so as you rightly said, company is up almost stock is up almost 4%, but if you see in last 12 months, stock is up 78%. In a month, it's been valued of course over 21%. And now this stock is with a 4% dividend yield, and this is a capex heavy, but it gets debt at what, 8%. Now Bernstein has initiated a coverage with overweight, so it rated Power Grid and outperformed with a target price of almost 315 rupees. Now the reasons why they have initiated a coverage is, one is their increasing transmission need, and also we have seen a rush in commission of renewables. And they also expect interstate transmission, batteries and smart meters are the new growth areas for the company. And of course they do have access to funds at a low cost of debt, and the capex for the next 2 years is expected at 30% which is understated by the consensus. Also, this is a low beta stock with 18% ROE, 8% PAT growth and strong governance. And if you see the price to book calculation, which implies a fair value of 3x, currently is hovering at around 2.7x. Also, on Monday, a company approved investments of worth rupees 656 crore for the implementation of electricity transmission projects in the country. So, burst-in report plus this investment is what actually, taking the stock up.
Thanks a lot for that, Varsha. Now, from the top gainer to one of the top losers, the IT index is trading with cuts of about 0.1% today. Almost all stocks on the index are in the red. IT Minister Rajiv Chandrasekhar today at the NASSCOM's AI conclave said that India will be filing draft regulations on artificial intelligence by this year. Adds that the government plans to utilize AI in different fields. Listen in.
India is today seen by the world as one of the preeminent countries in the world to harness technology for the good of its people and, of course, the good of its economy and expanding entrepreneurship and innovation opportunities. And we are basically taking the same framework into all of these emerging opportunities, Sindhu, including AI. So, as the Honorable Prime Minister said in the global conference in New Delhi for AI in December, he said, we are all in and we intend to fully exploit AI in use cases that impact our people.
Now, in fact, my colleague Rishabh Bhatnagar is here with the key takeaways of the ASSOCHAM and NASSCOM event. Over to you, Rishabh. Busy day?
That's right. We're tracking two crucial AI-related events today, one in Delhi and one in Mumbai. I'm at the ASSOCHAM event, which is happening here in Delhi. The biggest takeaway, though, was from the Mumbai event, where the Minister of State of IT, Rajiv Chandrasekhar, said that India will come up with its draft AI regulations by June or July this year. Apart from that, some key takeaways from the ASSOCHAM event were from Dr. Amar Patnaik, who is an MP and a part of the standing committee, the Standing Parliamentary Committee on Finance. He said that AI is the most significant disruptive technology that India and humanity has encountered. But there are issues that India also needs to address in terms of AI bias that is coming due to already present inequities in society. It cannot be done away with coercive regulation, he said, and has to be done by coders as well as industries. He said that he is also in active conversation with IT ministers Ashwini Vaishnav and Rajiv Chandrasekhar over this. Apart from that, the NASSCOM event is seeing a lot of upheaval in terms of generative AI and what it can do to the industry. Scheduled to speak there are EY India's Nitin Bhatt, Microsoft India President Puneet Chandok, Tech Mahindra's Mohit Joshi and NVIDIA's Shankar Trivedi. So a lot to track in India's AI space.
Right, thanks so much for that, Rishabh, giving us all that perspective that's happening with regard to IT. But the index obviously down and out. If we can have the IT index, we'll see that we're down around 0.7%, and in terms of contributories as well, there you go, 0.9% lower now. And in terms of contributories as well, if we can have that, pretty much all of them trading in the red, just about 2 trading in the green, but that's just a slight positive bias there. But I'll move on to the Nifty Media from the Nifty IT, because Nifty Media is up 1+%, and within that, Z is really contributing to gains. And sources tell NDTV Profit, which is your channel, that both Z and Sony continue to consider a possible merger. There are lawyers which are sitting and engaging, hashing out the details with regard to a possible merger again. Of course, what we are gathering from sources is that the ball is in Sony's court rather than Z's to go ahead with the merger. And there are certain key issues on which there's a bit of a stalemate. But of course, we'll have to wait and watch how this progresses. You know, when we were speaking with most analysts, what they seem to allude to, it's a win-win for both. But it seems that over the last couple of months, once the talks have really fallen through, that, you know, it doesn't seem like Sony is keen to go ahead with the merger. Of course, reaction on the stock on the back of the news break, but so we're 5% higher on Z. but not sure as to whether that will actually go through or not. Some bit of skepticism, it seems, Pallavi, with regard to this merger, and that seems to continue. That overhang seems to continue.
Absolutely, Harsh. It seems to be a bit of a never-ending saga, but we'll stay on top of this and continue to get updates as and when something does pan out. But moving on, Sula Vineyards in high spirits. Verlin West Asia has sold its entire stake in the company, resulting in the stock closing 8% lower yesterday. Today it's in the green though. Mahima joins in with more. Hi Mahima.
Hi Pallavi. So as you rightly mentioned, yesterday the term sheet had come out, and now we know that Verlin West Asia has sold its entire 8.34% stake in Sula Vineyards. Now, if we talk about the other buyers and sellers, where Moserina LP also sold 3.43% of its stake in Sula, which is why the stock was quite under pressure yesterday. And the buyers, the large buyer that we know of is Morgan Stanley, that has bought around 1.02%. Just to highlight, even the promoter, the Rajiv Samant himself, also sold approximately 81,000 shares yesterday. Now, talking about the major shareholders that hold Sula include Goldman Sachs, which has around 3.5% stake, HDFC, which has around 9.5% stake, Quant, which has around 4.3% stake, and SBI, which has around 3.3% stake. So, even if we talk about Verlin Invest, it held approximately 20.9% stake around June 2023, and it sold approximately 12% of its stake in August 2023, and now the remaining 8% stake it is sold yesterday. Talking about the PE valuations, the Sula PE valuations are going up, which was around 42.77 times in 30th September, and now its current PE stands as approximately 56.42. And even if we talk about their quarterly performance, sequentially the company has performed well. However, their Q3 performance for YOY has remained a bit muted, and that is why this is one of the possible reasons why investors are booking profits. So this is what we have on Sula so far.
Very interesting there, Sula. The way I would look at it is that possibly this is an 8% overhang gone. Mahima, thank you so much for all of that perspective. But yeah, I mean, Verlin West was expected to divest this 8%, and now that this 8% is probably been sold and divested, it seems that some bit of overhang on the stock ought to go away, which is what the reaction seems to suggest, at least today, 1.5% higher in trade. And from one stock that's lost ground yesterday, to another one that's losing ground both yesterday as well as today. We have Coal India. Now, a ton of commentary that's come through with regard to Coal India. It was the top Nifty loser yesterday. Continues to be down roughly 3%. At the bottom was down roughly 4% in trade today as well. Some bit of recovery that we are seeing. Now, with regard to the commentary itself, doesn't seem as bad as the reaction that we've seen on the counter. What the management seems to be suggesting is, yes, 10 MT of less production to happen on a base of 780 MT. That's a very minor blip in terms of a miss. I'm not sure if it can be really called a big miss. But that 10 MT also is with regard to one subsidiary where there wasn't an approval or a clearance granted. And therefore, there is this 10 MT miss. If that was not the case, likely they would have actually held up with regard to their guidance. So that's one piece. The other piece is that the other piece that's affected markets both yesterday as well as today is with regard to e-auctions. Now, the e-auction premiums have declined from the 100+% mark to around 35 to 50%. 100+% in Q3 of FY24. To 35 to 50% in Q4 that we've seen as of now. But what has actually happened is your volumes have actually gone up in this e-auction, and there is a possibility that that will be offset. So your premiums will be offset by better volumes, which should aid obviously the top line overall in the larger scheme of things. And therefore, again, I'm not sure how much of a negative that is. The market clearly pricing in a huge negative on Coal India on the back of both of these factors. But I have to try and get more perspective on that. But clearly, brokerages don't seem completely out of favor with regard to this. Systematics has downgraded, but we're seeing Motilal Oswal actually upgrading or rather increasing their estimates with regard to EBITDA for the years going forward. And therefore, they continue to retain a buy on Coal India. So Coal India definitely in focus because Nifty 50 plus 3% lower on back of that 4% decline yesterday. And that's all that's happening with regard to Coal India. We'll continue to give you more perspective on that one, even on closing. So stay tuned for that. But Pallavi, it's an interesting story that's playing out Coal India itself.
Yeah, and another stock on our radar is Vary Renewable Technologies. The company has hit upper circuit on the back of a 990 crore order win. Anushi joins us with more.
As you mentioned, the stock has hit an upper circuit of about 5% today. So the 990 order win for Vary Renewables is a big one because if you look at its market cap, that's about 9,000 crore or something. So that represents about more than 10% of an order win over a year. So quite huge for the company on that basis. Earlier also this month, they had announced another order win of about 547 crore. So a lot of order wins from the company's side in the course of this last 2 quarters. But again, now coming back to this order win, the project is estimated to be completed within a 12 months time frame and is a domestic order which is to be with which the company's unexecuted order book now stands at about 2.141 of gigawatts. So this remains on a watch out for more orders to come in the period. Whereas if you look at for its outlook going ahead, the company has maintained about a 15 to 20% of EBITDA margin outlook for the year, that is FY24. Onto the stock performance, well, Vary Renewables was one of the most sought after stocks. Just we can see it from its past 6 months and 1 year return. So in the 6 months, the stock has surged over 3x, and over the course of 1 year, about 7 times its stock price over year. In the period of these 5 days also, the stock has seen about a 22% gain. So that is the reason why the stock was in focus today.
Right, Vary in focus, locked in upper circuit. This one has been getting very, very used to getting locked in the upper circuit, I must say, Pallavi. But let's quickly move on. Amid all the regulatory concern for Paytm, the Finance Minister, Nirmala Sitharaman, is set to meet fintech startups next week. My colleague Pragati Oberoi brings you this report.
Finance Minister Nirmala Sitharaman will be meeting the fintech startup founders and other people of the fintech startup industry next week. That's the information we are getting from our sources. Sources have also said that the meeting is very important at this time because there are growing concerns, especially regulatory concerns at this time after the Paytm crisis has blown out. Hence, the Department of Financial Services, or DFS, is holding this meeting with fintech startups next week. The meeting will be held in Delhi either on Monday or Tuesday, and Finance Minister Nirmala Sitharaman will be chairing the meeting. What are the details of this meeting as to what is the exact date and the final date? We are yet to find from our sources. As and when we have more updates, we will bring them to you.
The Paytm stock, meanwhile, hits the upper circuit once again today. With that, it's time for a short break, but stay tuned. We have a lot more coming up on the other side. The latest, including the latest updates on the farmers' protest from Chandigarh.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
Welcome back. You're watching Market IQ on NDTV Profit. We'll move over to the latest coming in from the farmers' protests. Now, farmer leaders will be taking part in the Delhi Chalo agitation. Leaders rejected the centre's proposal of procuring pulses, maize and cotton at MSP, stating that it was not in the farmers' interest, and announced that they will march towards the national capital on Wednesday. My colleague Mohammad Ghazali joins us with more details. Mohammad, what can you tell us about the latest that's happening there?
See, day before yesterday, the union government had shared a proposal for the farmers that all those farmers who will move away from paddy crop, since it's a water guzzling crop, and move towards 5 of the crops like maize, cotton and 3 pulses. Then the government had floated this proposal that once the farmers moves from paddy to either of these 5 crops which I mentioned earlier, then the government or its agencies will purchase these 5 crops on MSP for 5 years, regardless of the quantity produced by the farmers. But the farmers deliberated upon this proposal with their own farm experts and economists and later rejected it. And what they have announced today, that by tomorrow 11 a.m. they'll start their march towards the national capital. But how will they do that, since Haryana, the neighboring state, has sealed all the interstate borders between Haryana and Punjab, and it's almost like fortification of Haryana, and they have asserted that not one farmer will be allowed to enter into Haryana.
Thanks a lot for that. We'll stay on top of what's happening as far as the farmers' protests are going on. But moving on, it's been an incredibly strong year of growth for the Indian economy. But the state of the rural economy has been a bit of an Achilles heel of sorts. High-frequency indicators, whatever is available, continue to paint a somewhat mixed picture of what's happening in that space. So we decided to turn to pretty much the best source course, under the circumstances. We went through some of the commentary on the rural economy by a handful of the Nifty 50 companies. Now, to be sure, what we gathered is that recovery is still in the woods, warranting close monitoring. The first thing, in fact, that Rohit Java, the CEO and MD at Hindustan Unilever, spoke about on the analyst call was in fact the rural economy, how the effect of uneven monsoons was felt on the Kharif crop output impacting agricultural yields and in turn rural incomes. Now the takeaway was that rural consumer sentiment remains subdued. Consequently, the anticipated buoyancy from the festive season has also not materialized. Now that's according to the HUL con call. Warren Berry, the Vice Chairman and the MD at Britannia, also appear to have some strong commentary. We've not seen rural growth the way we've seen it in the last 10 years. That's what he had to say. He also said that urban growth continues to outpace rural growth and flagged the impact that elevated inflation has been having, especially on the rural economy. That's all we have on the show for now, but stay tuned to NDTV Profit.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
What are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Welcome. You're watching the Mutual Fund Show on NDTV Profit. I'm Tamanna Inamdar, and this is a show that aims to bring you expert advice from the mutual fund industry so you can make smart choices for your investments. Now, today we're discussing NFOs, that's new fund offers, as an investment tool. Here's a bit of context setting. In a bull market, like we are in right now, typically, you have a slew of new fund offers. AMCs, mutual fund companies, all of them want to come out with more and more products for investors to come into. In fact, you've had record NFOs right from the year 2022, 2023. There are at least 20 odd NFOs on offer just for the month of February 2024. The question that we're tackling today is whether an NFO is actually a good investment option. So an NFO typically comes at a face value of 10 rupees, an NAV of 10 rupees. You can equate it in a sense to an IPO, except of course, you don't have an immediate listing price, etc. It becomes attractive because of its NAV of usually fixed 10 rupees. The question is that whether it's the right choice. When should you go for an NFO? And we're going to get you the pros and cons, both sides of the story today when it comes to new fund offers. I'm speaking now first to Kalpesh Ashar, he's CFP of Full Circle Financial Planners. I will also be speaking with Alok Singh, who's CIO of Bank of India Investment Managers. They in fact have an NFO out, and we'll ask him why he thinks NFOs are a good idea. But first, for the other side of the story, Kalpesh, great to have you on the show. Thank you so much for joining us. Let's first set a bit of context and put into perspective why NFOs are seeing such great numbers right now.
Thanks, Tamanna, for having me on this show on NDTV Profit, and always a pleasure doing a show with you. The question about NFOs is that it's more of an emotional tag or an emotional, I would say, an attraction which investors have whenever there's an NFO or stretching the yard a little bit, on the direct equity and IPO, because it comes out with a lot of fanfare and a lot of attraction and a lot of, publicity given to the same thing. But what we really need to see here is that when do these NFOs actually, come into the limelight? And as we've been seeing probably from, I think last 2-3 years, would not be wrong to say that, we are in a healthy bull run stage right now. And this is exactly the period where you will see a slew or a surge of NFOs being offered by the mutual fund houses. And it's pretty obvious, the AMCs are into this business of expanding their own, books and offering more products, more varieties to the investors, and also trying to capitalize on what a particular theme or what a particular category has to offer. And what more better time than when the going is good and everybody is in a mood to invest and the economy looks good and the results are great. So the mutual funds are pretty obviously right in their place to launch new NFOs, in a hurry. And it becomes more of a heap of NFOs on the investor's portfolio if he or she were to subscribe to, a majority of them. So the rationale has to be applied there, and that is where a bit of common sense by the investor himself, but more of a strict hand by the advisor needs to come in, that what is right for you or what is not right for you needs to be seen. So it's more of a phase of the markets where NFOs come out, and obviously like what you also mentioned, Tamanna, is that they come out with that, I would say a low-hanging fruit of NAV of 10 rupees being offered, which the investor feels that, it's a very cheap option, and because it's the starting rate of the face value of a mutual fund scheme. So all these points put together, it becomes an attractive proposition for the investor to invest in it. But again, the caveat remaining, Does the investor need it in his portfolio or no? That is the $1 million question, and that is what we need to address, I think, on priority.
Yeah, so let me put it this way, Kalpesh. Apple to apple, if it's a similar kind of fund, whether it's a thematic fund, a sectoral fund, a diversified fund, a multi-asset fund, a flexi-cap fund, would a previous fund or one with a longer track record score above any NFO just on the basis of the fact that you actually have some kind of an idea of what this fund's performance is like?
Absolutely, you hit it on the head, Tamanna. That's absolutely the criterion that a performing fund, a fund which has been in existence for, say, 3, 5, 7 year period and has already seen the various cycles of the economy or the markets per se, I think is in a much more stronger standing, in a much more better position to be, I think, seen from a perspective from an investment, because it's weathered many storms. Please understand that. And it's also, if we say that in mutual funds, what is the crux of mutual funds? It offers diversification. And that field also of diversification has now been long explored by mutual funds. So you used to have large caps earlier, you used to have multi-caps, you used to have flexi-caps, you used to have mid-caps and small caps. So what's new? The question is what's new? So by having a surge of NFOs calling themselves a large cap or a mid cap or something, that's already there in the market. It's up to an investor and his advisor to sit together and find out what is right for him, which is the right performing fund. Does it match his goals? Does the fund house adhere to the benchmarks, what it has set for himself? So those things put together, like a seasoned, experienced fund would always, I think, have an edge over an NFO. And rightly said, one more thing which you mentioned here is that, it's just the same thing which is being offered time and again. And for various reasons, which I spoke in an earlier segment here, why are they keeping on, offering it time and again? One more thing which I would like to point out, Tamanna, is very important here, that post-2018, SEBI came up with a lot of categories which they opened up. They subcategorized the mutual fund arena completely. And that opened up spaces or slots for many mutual fund houses to fix their schemes if they didn't have a presence there. So fair enough, it was done with a lot of rationale. It helped a lot of, I think, dust to clear. But then I think that has ended now. So there should be no, I think, fresh, excitement for anybody just hearing the word NFO. There has to be a theme of inventiveness or a thing which has not been explored in the past, which compels the investor to invest in an investment.
But the flip side of that, Kalpesh, is if I go by that, then why should anyone invest in anything new? Where is the case for investing in NFOs in that case? Because you will be then restricted to just the funds which have enough of a track record. What does that mean for newer players that are coming into the market? Because there are quite a few of them. They will obviously come with a new thinking, a new outlook. Don't you think it will become restrictive then to only existing funds?
No, so I'll answer it in two ways. So first, let's talk about what is it when you should invest in an NFO. So for example, you talk about the Indian equity market space where you talk about large caps, mid caps, small caps. So it's the same ocean which everybody is trying to pick up his best stock or pick up his best script and pick up in a percentage or a rationale which he or she thinks is the right. That's the job of a fund manager. Now, for example, if you're offering something like international fund category or investing in something which is, say, for example, a NASDAQ theme or in a European theme, which is something different, which is not there in the Indian arena space, or you have the newer themes, so you have the innovative new age companies which have not been explored. Now that's something new, and that sets your mind thinking that, okay, should I take an exposure into that? What is the rationale behind it? That sets your mind thinking. And there should be always a question answer session between the AMC and the investor or the advisor to why should I invest in it? What is so new in it which compels me to do it? Second part of the question is that what about the newer players? So the mutual fund space has to get bigger. It has to cater more. I think this is the tip of the iceberg, what we are seeing, the 18,000 crore SIP book which we have. I think we have a lot more potential to do it. Newer players are welcome. We have a lot of unexplored space. But let the newer players prove themselves. My point is not I have no complaints against the AMCs launching new fund offers. They have their equal right to do. That's their business in which they are. I'm talking about a buyer beware or a buyer caution or a buyer awareness type of a thing from the investor point of view. That let the fund house prove itself in what different is it doing and how is it adhering to the client interest and also 100% performing to the required calls.
Absolutely. We're going to get the other side of the story as well. We're taking a very short break. On the other side, what are the pros of NFOs? What is the situation in which an NFO really makes sense? And how do you spot that special differentiation that a new product is offering you? We come back with all of that after the break.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on
Welcome back. You're watching the Mutual Fund Show. We've been talking about NFOs on the show and discussing whether NFOs are necessarily a good idea as an investment option or not. I'm joined now by Alok Singh. He's the CIO of Bank of India Investment Managers. And, we want to get a different perspective to the entire discussion. Mr. Singh, welcome. Thank you so much for speaking with us here at NDTV Profit. Of course, the context is that you are launching an NFO yourself. It's in the process right now. But let me start with a broad picture, because the question we've been asking is, without a track record like existing funds have, are NFOs really the best bet for investors? What would you say to that?
If you look at, NFOs can be classified into two categories. One is basically there are existing funds of that category may not be managed by the same fund house or the same team, and there basically there can be a value add by the process they run, the way they look to manage it, and it could be a fund which the concept which already exists, and there can be second category where it's a new category altogether or a new concept altogether. There, of course, there is no track record. So in first case, obviously, there is a track record of that category. What the fund house may offer is a new process or the way to manage it. But in the second category, yes, where there are no similar funds or the same concept does not exist anywhere, there somewhere, the leap of faith, depending on the concept which you are talking about, that is what the investor has to do. But at the same time, everything starts somewhere. So, you can't say that only I will invest when it is X years old and things like that.
Yeah. Having said that, I want to understand from your perspective. We've been speaking about on the show about a large number of NFOs hitting the market right now. And of course, that is a very clear characteristic of a bull run. Tell us about that perspective. Why do AMCs, why do participants want to launch a lot of NFOs right now, you included?
Yeah. So obviously there is... you may have seen more NFOs when the markets are doing good. That is also because, you get to raise money when the people have money. Typically, when the markets are not doing good, even if that investment is not that good, maybe people will not like to churn at that point in time, or, you're sitting on some mark-to-market losses. When the markets are doing well, people usually have more money. Most of the money is in profit, and they like to churn or look to evaluate new concepts or redivert, rebalance. These are the reasons because of which, typically the new NFOs or even IPOs come and people participate in that. In our case, we are doing a multi-asset allocation fund. While there are many multi-asset allocation funds which are existing right now in the market, but we are slightly different because we are a debt-oriented multi-asset allocation. Multi-asset as a concept need to invest in 3 asset classes up to minimum 10%. So we are doing debt, equity, and gold, where the debt is a larger portion. And the reason we are doing it primarily because for last 3 years, the markets have been quite good. People have made decent amount of money, and somewhere that the concept of risk is less appreciated. And we believe that, a debt-oriented funds also should be part of the allocation strategy, and that's why we are offering this at this juncture.
Okay, no, fair enough. And, I want to thank you for joining this discussion, because while we're not focusing solely on your fund, we're talking about a larger picture and a larger issue, and not specifically, your fund. I just want to make that very clear. But I want to get Kalpesh's view on some of the points that Mr. Alok Singh has made. And Mr. Singh, please do stay on with us, because we want to present both points of view to our viewers. On the point that you sometimes have to take a leap of faith, Kalpesh, but then there is a new idea which is being presented as well. that seems like a fair enough proposition.
Yeah, fair enough. So exactly the points which Mr. Alok also mentioned, that in a bull run, the mindset of an investor is different, and that's why they would like to capitalize on exactly the same point which I mentioned. But the crux point here is that we are talking about just as a counter argument, and like what you rightly said, it's not against a particular fund or new NFO that I would like to mention here. But the thing is that we have a multi-asset fund. Or a large cap fund or a flexi cap fund, which is offered by all AMCs at some point or the other. And to each his own, the concept, the taxation part, and everything is more or less the same. The point is that the investor has to decide that I do not, and we have seen instances because I face clients directly where he might be having 3 or 4 multi-asset funds in his portfolio. Now, that is surely detrimental to his portfolio returns. You can't have 4 large cap funds. You can't have 3 small cap funds in a portfolio. And all that is probably if you see it in detail, when was this purchased? All of them would probably be, from the inception, that is from the NFO stage. And from the simple argument that it has been either hard pushed to him, or he's been attracted towards it, or he's probably been misguided, or we don't know the reason. Now, this is a major cause of concern for his portfolio, and that is where we financial advisors or planners who look at the portfolio returns on an overall. It's an overlap. It is not meant for reaching his financial goals, and it becomes more of a burden rather than an advantage in his portfolio. So this type of I would say a mixture or an assortment of funds in a portfolio, I think that is detrimental. And again, I would like to repeat here that with due respect to the AMCs, it's for the investor or the client to decide that which particular category or which particular fund of AMC he wants to patronize or select in his portfolio, and then he does the due diligence and then invests. Okay. Because then beyond that, he cannot stretch it.
Okay, so you're saying it's not necessary that a lot of funds in your portfolio is a good idea. Mr. Alok Singh, I want to get your perspective on, the question which is raised with NFOs, that they have a larger cost attached to them because they're newer funds. So it turns out to be a little more expensive for the investor. There is probably not obviously a track record. And if you go out looking in a market now which has a fair amount of depth like ours, you will always find another alternative with a longer track record. Would you say this is fair or being a little harsh on NFOs?
Yeah. So you are right on the part that where the expense ratio structure exists right now. For a smaller fund, it can be slightly more than a larger fund. But frankly speaking, in a larger scale, that's a very small or a microscopic view. Because yes, while the other panelists has raised the point that there can be 5 large cap funds and 5 X funds in a portfolio, but that is all what we are talking about is allocation. See, selection also plays an important role. While there may be 30 large cap funds in the market and there can be as number in each category, but does every fund perform as well? No. Even if there is a long-term difference of say 2-3%, which can be, if you look at on a compounding basis, even 1% extra compounding for next 10 years will make a lot of difference. While somebody may say that, okay, this one particular fund is giving 18, another is giving 19, but on the compounding side, it makes a lot of difference. So while I agree on the point that when we talk of the asset allocation, then obviously we cannot have same fund type as a large portion of our portfolio. We need to choose, but then the investor also needs to do the selection right. We always talk of allocation. We talk of, okay, invest X percentage in large cap, X percentage in mid cap, X percentage in XYZ category. But we rarely talk of selection because selection makes a lot of difference as well. Because we have seen over the period of time, you look at 3-year, 5-year, 10-year track records of even the existing funds, they may have underperformed the best in class and the person may be invested in not so. So that is an important thing which needs to be appreciated, and that is why the people need to look at it holistically not just by the existence. Existence does not lead to performance. So we need to also look at ultimately whosoever has given money or invested money is for the wealth creation, and the wealth creation happens not by virtue of just allocation. Selection also plays an important role.
Okay, fair point, fair point. So a very interesting debate here. It's not a one size fits all. In some cases, an NFO might be a good choice, and of course, allocation also becomes key. But don't choose something just because it's new. On the other hand, don't ignore an option just because it's new. You will have to go into those details, and that is really the point that we wanted to bring across. Thank you so much, Mr. Alok Singh. Thank you so much, Kalpesh, for joining us on the show today. We hope this has been useful to our viewers when deciding where to allocate their money. Of course, if you want to reach out to us for specific queries on your portfolio, all of those numbers on your screen. Until next time, thank you for watching.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Markets trade in green. Sensex now trades above 72,800 while the Nifty stands firm about 22,100. Sectoral indices trade mixed, dragged by auto and pharma. On the other hand, media and realty stocks come out as top gainers. Meanwhile, Z re-engages with Sony Group on merger talks as per sources. Stalemate over key issues continues. That's an NDTV Profit exclusive. Dismal day of trade for Whirlpool as promoters are expected to sell 24% stake in the India unit at a discount of nearly 8% to the current market price. And the stellar Dalal Street debut for Vibhor Steel shares list at a premium of over 100% to its listing price of 421. Hello and welcome. I am Agam Vakil and you're watching Large Trades, a show in which we take you through all the stocks which are buzzing in trade, largely on account of bulk deals, block deals and volumes. But before that, a quick look at the markets. So the Nifty is largely flattish. We are not looking at too much movement as far as the Nifty is concerned. Currently, marginally in the red, but we have seen some strength come back to key indices like the Bank Nifty. Now, the Bank Nifty is advancing by around 0.7%. And of course, a lot of focus will also be in the Fin Nifty, where we have the weekly options expiry. That said, let's take a look at what contributors are perhaps key at the moment. And it will essentially be HDFC Bank, which is leading the gains, along with a handful of other private sector names such as Axis Bank and ICICI Bank. What's weighing on the indices, of course, is Infosys and TCS, along with ITC. But besides that, we also have some amount of weakness in your key two-wheeler majors like Bajaj Auto, Hero MotoCorp and Eicher Motors. Now, to take a look at how things are faring as far as your broader markets go, when we are looking at subdued movements, a little bit of an underperformance as far as the broader markets are concerned, because they're currently trading at near day's lows. Well, we do have something like a Federal Bank, which has actually taken the lead on the downside. And Federal Bank is in fact down by as much as 6% as we speak. Biocon is also under pressure. That's down around 3%. And then we have Apollo Tyres, which is also declining in trade at the moment. We have Patanjali Foods, which is under pressure. That's down 3% as well. So plenty of counters out there where there has been a little bit of an underperformance coming through in today. You know, not much to speak for as far as gainers are concerned, at least in the broader markets, because it does seem like we are looking at a bout of profit taking. But Z Entertainment is a surprise mover, and it's locked in a F&O circuit of 10% on an up move. So that is where we are seeing a sharp spurt coming through. And of course, Paytm is the other one where we are seeing an advance as far as Sona BLW is concerned. But we'll continue to keep you and give you an idea on the same. But let's start by taking a look at the top stock of this morning. And of course, while it continues to remain weak as far as trade concerned, but it is clearly one of the top newsmakers of the day, and that is Whirlpool of India, where it is under pressure right now. And that's something that we want to address at the moment. But let's get in firstly, Mahima, to tell us about the deal coming through, as well as several other details that have come through the course of the day. Mahima, good afternoon.
Good afternoon, Agam. So as you rightly mentioned, Whirlpool is under pressure today. Now, this is on account of the news that Whirlpool Corp will sell approximately 24% of its stake via a block deal in Whirlpool India. Whirlpool Corp currently holds approximately 75%, so even if they sell 24%, they will still hold the majority stake of 51%. The news is that Whirlpool Mauritius will be the selling shareholder and Goldman Sachs is the sole broker for this deal. Now, if we talk about the stake sale value, the floor price for the block deal is set at 1230 per share, and this indicates a discount of 7.6% versus its closing price yesterday, and approximately the total value of the transaction will stand at around 3,700 crores. Now, the purpose of stake sale is that the Whirlpool Corp will use this transaction proceeds to reduce its debt and enhance its balance sheet flexibility. There was an exchange filing which came out on 30th of November 2023 where Whirlpool in its filing said that Whirlpool Corp will be selling stake in Whirlpool India, and since then the stock has fallen approximately 12.9%. And if you talk about Whirlpool Corp, their debt at present stands around $6,400 million in its balance sheet, and they've targeted to pay around $500 million in Q4 as per their recent SEC filing.
Right. Mahima, but let's put things into perspective. Even in terms of valuations, how are things stacking up there? Also, what is the street making of this particular counter?
Right, Agam. So as you rightly mentioned, valuations for Whirlpool when compared to its peers are pretty high. If we see Symphony is valued at somewhat 55.5 times in terms of PE, and Crompton is around 39.82, whereas Whirlpool is approximately around 75.6. Even if we talk about the stock performance versus its peer, and if we see the 5-year stock performance, Whirlpool has underperformed. It's given negative returns of 5.5% versus that of 39% up of Crompton, and Havells has grown around 94.7%. Even if we talk about Whirlpool stock performance over the last 1 year, in the 6 months it's been down around 16%, and 1 year it's been hardly up around 2%. So overall, even if we talk about analyst take, 5 say buy, 4 say hold, and 4 say sell. So analysts are also not very bullish on the stock. So overall, if we see, we're seeing that foreign parents who have subsidiaries in India are seeing very high valuations of this subsidiaries that are present in India, and probably are selling their stake and share in those subsidiaries.
Right, fair enough. And it's very interesting to see how things have panned out, because it's not like the growth has been amazing for the entire sector. Mahima, thank you so much for giving us those insights into Whirlpool. And well, as she's already mentioned that the indications had already come through. Whirlpool Mauritius is just following through on their plans, and we have in fact seen a little bit of an intraday recovery, so to speak. But that said, it's not exactly at on the winning streak in today's job trade. But let's move on and talk about Deepak Fertilizers. Now, this is the other one which is buzzing in trade today, and it has advanced substantially through the course of the day. We have Varsha who's joining us to give us more details on this one. Varsha, good afternoon. What perspective can you give us here?
Good afternoon, Agam. So as you rightly said, so if you see Deepak Fertilizers has seen an intraday high of almost 10% in trade today, and volumes are trading at 11x of its 30-day average. Now, this is on the back of deal win that Deepak has done. So it has signed 15-year LNG contract with Norway-based Equinor. Now, this agreement is for annual supplies of up to 0.65 million tons over 15 years, so quite substantial order. And this tie-up will provide for trading LNG parcels and companies' growing captive needs. Also, this LNG will be delivered to west coast of India, and with this, company strengthens its value chain from gas to ammonia to various downstream fertilizers. And this deal will also help to increase their margins, and the agreement signed is one of the largest contracts signed by Equinor. And Agam, also companies looking forward to exploring strategic tie-ups in chemical business with Equinor.
Varsha, thank you so much for giving us those updates. And we've seen quite a bit of traction of late with respect to tie-ups in Norway, specifically with respect to the LPG segment. But we'll continue to keep an eye on that one. But from there on, we move on to Sona BLW Precision, which is also in focus. It's advanced modestly, about 3.5% gains on an intraday basis. But we're also seeing a surge in volumes. Let's get in Anushi to give us some insights into what's happening here. Anushi.
Absolutely. As you mentioned that the stock is in focus on its higher trading volumes today. So the volumes are about 4x its 30-day average and the stock has seen about an intraday gain of 6%. Now coming to the fundamental aspects of the business, I just want to reiterate the Q3 numbers. Over here we did see a strong quarter for the business, about revenue seeing a 13% growth. Margins also moving upwards to the 30% mark compared to the 27% mark it had made in the last year quarter. Again, the management has also revised its margin guidance to 28% compared to the 25 to 27% range that they had given earlier. Second point of focus should be on its EV business. So there had been a lot of focus in this area. If you are to look at its battery EV business also, that has now moved to about 28% of the company's overall revenue mix compared to the 14% contribution that it had made in FY21. Another is the three huge orders that it had secured, about 1,000 crores in the last quarter. And even if you look at its total order book of about 24,000 crore, about 63% is now from the EV side. A third point of focus is again the market share trajectory that the company has been displaying, especially in its differential gear segment. So again, in CY21, that's calendar year 21, about 6%, which moved about a percentage higher to 7% and then on to 8%, while the starter motors remain range bound in mostly 4.6 to 4.2% of range. The domestic market continues to be the stronger one, with passenger vehicles, with the differential gears dominating the passenger vehicles about 55 to 60%, followed by commercial vehicles with 80 to 90% of market share, and tractors seeing about a 75 to 85% of market share. But when it comes to valuation, the stock has always remained on the expensive side, even if we compare it with its 3-year average. So the PE range continued to range between the 95 to 105x range, so that is there. Onto the stock performance of the company. So just to conclude on that, not much of a major upside that we have seen in this course of 1 year, about 35% of gain in this last 1 year, and in the 5 to 6 months return almost similar at 8 to 9% range. So the trading volumes was the main focus for the stock today.
Right. Anushi, thank you so much for getting us that insight into Sona BLW, and on to another stock which has been on our radar, and that's Zaggle. That stock is surged in the middle of the trading day, and this is on good volumes too. Let's get in Harsh to find out what's behind this sharp up move. Harsh.
Well, Agam, it's 4 large deals that have happened on Zaggle, and along with it, Zaggle has won a couple of orders. Small orders relative to the size that Zaggle generally deals with, and as well as the size of Zaggle's balance sheet as well as market cap, but nonetheless orders trickling through. And I'll quickly take you through the 2 orders that have come in most recently. One is from Questcott for 10 crore. It's a contract for employees, employee benefits, and it's a vendor agreement as well, and Ease My Trip. That one is an integrated travel and expense management solution to corporate clients, which Zaggle will be providing to Ease My Trip. Now, Zaggle has been consistently winning orders over the last quarter or so. They've won roughly 280 odd crores of orders outside of this. Ease My Trip order value is not determined. They've also won an order with Axis Bank, and that's why if you see over the last month or so, stock is up 34% over the last month, so really surging in trade. What's happening today? Well, 5 large trades, I beg your pardon, not 4 that I did mention. Volumes are at roughly 4 times the 30-day average, and the average trading price is at 287, not too far away from where it is currently, 14% higher in trade.
Right, Harsh, thanks so much for getting us those updates on Zaggle. And then from there on, we move on to Kotak Mahindra Bank. Now, a big management rejig to take place from March 1st, which is causing some tension at Federal Bank. We have Vishwanath Nair, who's joining us to give us more details. Vishy, good afternoon. What do you have for us?
Right, so what is happening at Kotak Mahindra Bank is essentially a rejig of the senior management at the bank, and this is being led by the first major reshuffle, which is KVS Manian, who was leading the wholesale business and was a whole-time director on the board, has been elevated to joint MD. That's literally second in command right after CEO Ashok Vaswani. This next big rejig that happened is Shanti Ekambaram went from being whole-time director as well as leading the retail business to becoming deputy MD from the 1st of March. The third one, that's an interesting one, is with regard to Devang Ghiwala, who will take over as president and group CFO. Of course, Jaimin Bhatt, who was president and group CFO till this point in time, is set to retire at the end of this financial year. So April 1st, Devang takes over as a group CFO. Milind Nagnur, who was a CTO at Kotak Mahindra Bank, will take over as chief operating officer from the 1st of April. That's his inclusion into the key managerial personnel group, as well as Paul Parambi, who was working with the bank till this point in time, will take over as group chief risk officer from the 1st of March. So these are the main sort of points of reshuffle. It's important to note that this is the first major move by Ashok Vaswani since he took over as MD and CEO of Kotak Mahindra Bank on the 1st of January, and he's trying to retain the senior management team back, because of course those were one of the concerns, that these senior managers will sort of leave right after Uday Kotak stepped down and a new CEO has taken over. The unintended consequences of the entire Kotak Mahindra Bank management rejig is with regard to Federal Bank. Now, what happened at Federal Bank is that during the day, it's dropped right about 8.5%. This is primarily because KVS Manian was being considered as a potential CEO candidate for Federal Bank. That is what NDTV Profit reported last week. And Federal Bank likely is going to submit names to the RBI for approval at some point in time in the next financial year. Since KVS Manian has now been turned into joint MD, it's interesting to watch. It'll be interesting to watch whether he decides to stay back at Kotak Mahindra Bank or move to Federal Bank. We do not know what his decision is, but as things stand, as far as the investors are concerned, there is a concern whether Federal Bank is going to find a suitable sort of CEO, an external candidate who can take over as CEO of the private bank. We will move to Harsh now, because that's where the key HDFC Bank news is coming in. Of course, the stock has been buzzing in trade. Harsh, tell us what's happening at HDFC Bank.
Okay, well, there you have it. Well, that's how things are happening up as far as HDFC Bank goes. Of course, we'll get you a lot more in terms of how things are panning out. But it's on that note, it's time to slip into a short break. But do stay tuned to NDTV Profit, and we'll keep bringing you more.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. From the top gainer to one of the top losers, IT index is trading with cuts of over 1.2% today. Almost all stocks on the index are in the red. Now, IT Minister Rajiv Chandrasekhar today at the NASSCOM AI conclave said that India will be filing draft regulations on artificial intelligence by June, July this year. Adds that the government plans to fully utilize AI, but set up the, guardrails in different fields. Listen in.
India is today seen by the world as one of the preeminent countries in the world to harness technology for the good of its people and, of course, the good of its economy and expanding entrepreneurship and innovation opportunities. And we are basically taking the same framework into all of these emerging opportunities, Sindhu, including AI. So, as the Honorable Prime Minister said in the global conference in New Delhi for AI in December, he said we are all in and we intend to fully exploit AI in use cases that impact our people.
And my colleague Rishabh is also here with us to give us the key takeaways from the ASSOCHAM and NASSCAM event.
That's right. We're tracking two crucial AI-related events today, one in Delhi and one in Mumbai. I'm at the ASSOCHAM event, which is happening here in Delhi. The biggest takeaway, though, was from the Mumbai event, where the Minister of State of IT, Rajiv Chandrasekhar, said that India will come up with its draft AI regulations by June or July this year. Apart from that, some key takeaways from the ASSOCHAM event were from Dr. Amar Patnaik, who is an MP and a part of the standing committee, the Standing Parliamentary Committee on Finance. He said that AI is the most significant disruptive technology that India and humanity has encountered. But there are issues that India also needs to address in terms of AI bias that is coming due to already present inequities in society. It cannot be done away with coercive regulation, he said, and has to be done by coders as well as industries. He said that he is also in active conversation with IT ministers Ashwini Vaishnav and Rajiv Chandrasekhar over this. Apart from that, the NASSCOM event is seeing a lot of upheaval in terms of generative AI and what it can do to the industry. Scheduled to speak there are EY India's Nitin Bhatt, Microsoft India President Puneet Chandok, Tech Mahindra's Mohit Joshi, and NVIDIA's Shankar Trivedi. So a lot to track in India's AI space.
And on the sidelines of NASSCOM Technology and Leadership Forum event, my colleague Tushardeep Singh caught up with Shrikant V, Group CEO and co-founder at Fractal AI, talking about the impact of artificial intelligence on manual jobs. Listen in.
Last 31 years, NTLF has been the flagship tech event in India. But this year, it's all focused on AI. AI is the only topic everybody's talking about. And that is also a reflection of how AI and tech have merged together. So almost everything exciting in tech is now AI driven. And you can see that reflect in the energy levels, in the conversations. We had Fei Li to begin with, and then we had Mustafa Suleiman from Inflection and DeepMind, and then we had JP Kothwa from Microsoft. The entire panel of people who have been on the show so far are all AI practitioners and AI evangelists. So it's a huge difference because AI is becoming more mainstream and it is basically eclipsing all of tech. So all of tech is now AI.
All right. So what is the sense that you're getting from visitors here? You briefly dwelt on it. Just give us what they're sensing from this event. What are the takeaways from this event that they have for the coming years?
See, in general, people are very keen to understand what is this AI beast. It's such a big new phenomenon. There's so much conversation. People are saying, countries are saying, AI will determine who's going to lead the world. In that world, they're saying, how does it affect me? What should I do differently? What should I learn? If I'm in the tech industry, is my job at risk because, coding assistants have come in which are automating coding. So how do I navigate this in order to be competitive? They know it's exciting. AI is exciting. They're trying to figure out what is my role in AI and how can I use AI to get better and make progress in my own lives. I think companies are thinking of how can I leverage this trend in order to get more business and how do I grow my business with AI.
All right. We were attending your session some time back where you mentioned that AI is the new electricity. And you also dwelt on the fact about the jobs of coders going ahead. Can you just tell us something about those lines as well?
So I think the key point is that 6 million people in India write software code for a living every day. And these coding assistants, AI-driven coding assistants have replaced or augmented coders. So what's happening is instead of writing code from scratch, I will ask an AI assistant to write the initial code and then work on it. Or I might write the initial code and then ask AI to debug it or create test cases or create documentation. In all of these activities, there's almost a 50% improvement in productivity or even higher, which means that if I was taking 10 hours, I may take only 6 hours now to do that work. So that is the world in which we're living. Then what happens to the 6 million people? Do we need all the 6 million people? Or because of this demand in AI, demand will expand and explode so much that we'll actually need more than 6 million. So this question is at the center of everything. And depending on who you ask, people have different views. And that was what I was trying to tease out as to what is going on in the world of AI and how it affects the software industry per se, apart from all the other industries as well.
And on that note, it's a wrap in this edition of Large Trades. But on the other side, we get you India markets close. Stay tuned in.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks and small cap stocks.
Welcome, you're watching India Market Close, and what a day it has been. The markets have been moving in a range, but that doesn't mean it's not been an exciting day with a lot of focus on the Bank Nifty. That's really the hero of the day. A very quick look at what's happening on the top line, and yes, the Nifty holding up decently, I would say, above the 22,100 mark after what looked like a tough afternoon. The Sensex also about 186 points up, but Bank Nifty, like I said, is the story of the day. And we'll pull up the constituents of the Bank Nifty also, because it's the big boys. HDFC Bank, Shashidhar Jagdishan's talk seems to have had some effect as far as HDFC Bank is concerned. There you have it about 2.5 points up, and when an HDFC Bank moves, of course the index moves. So a lot of concerns have been addressed in terms of communication from the management, etc. All of that playing out. Axis Bank as well, but Kotak Mahindra Bank is the other story over here. What happens when you make the effort to keep talent? And that's really the interesting underlying story playing out as far as Kotak Mahindra Bank is concerned. Of course, the loser of Kotak Mahindra Bank's ability to retain talent has been felt by Fed Bank, because Mr. Manian was headed there probably as CEO. It's something NDTV Profit had reported. That stock down 5.5%. But let's pull up the heat map to give an overall picture of what's happening in the markets today, on what I would say is, if you just look at the Nifty and Sensex, you might think, oh, not a very exciting day. That's not true at all. So much going on today, and Coal India is one of them. 3% down, second trading day in a row where you're seeing that kind of pain. Yesterday it closed about 5% down. In the closing hours, there's been weakness through the day. Some attempts by the management to come and explain that things aren't as bad as it seemed in our investor call, where they've lowered guidance for e-auction revenues, for output, etc. But the stock not really responding. Power Grid is the other one on the other end of the spectrum after a positive Bernstein report, and we're going to go into all of those details. But yes, banks leading the pack over there. Power Grid, of course, doing really well. Tech not having a very good day, whether it's a TCS, an Infi, and HCL Tech, all down between 1.5%. Quickly pull up the advanced decline ratios and just look at what the lay of the land has been. And look at that. Just look at the volatility over there, where you started perhaps on a positive note. A day full of range-bound trade, and right now maybe I would say the bears taking the lead. Will it run through, and what do you pick in a market like that? It turns into stock-specific stories, and Harsh now with more details on that. What a run, especially in the media space.
Yes.
But it's about 1 or 2 stocks only, isn't it?
Well, yes, I'll cover media last, Tamanna. I'm going to first start off with what you already spoke about, Federal Bank. Let's quickly take it as one of the top stocks that I've picked, at least with regard to AR. Quickly up. In fact, the stock is down now almost 5.5%, giving up all of those gains that it had made last week post the announcement. CIE Automotive also weaker set of numbers, and on the back of that, you're seeing a knock on the stock. Outside of that, you have the likes of a Whirlpool, which is also trading in the red. Around 1.5%. Ugro Capital, surprisingly, not sure what's happening there, but down 5% in trade today. So something to keep your eye out on. Outside of that, you have NBCC onto the positives. Deepak Fertilizers, both of those are trading higher. NBCC order win. Deepak Fertilizers also on the back of news. Vibor Steel, first day of listing. That one has, really had a blockbuster listing. And 192% over IPO price. Paytm is the other one, 5% higher, consecutive days of upper circuit for Paytm, definitely a positive. First 2 days of the week in trade, and both of those it's done very well. I'll come to Z now because Nifty Media is taking the lead overall among sectoral indices. Z up 8.5% now. Newsbreak making that difference on the stock price. Sona BLW up 4, BHEL up 2.2 are among the other gainers on the Nifty mid cap. When I'm looking at some of the smaller names, you have Biocon, which is trading lower. On the Nifty mid cap, Biocon trading lower, around 3% odd down. Patanjali Food also taking a knock within the mid cap space. MRPL and JBM Auto are the other two names within the small cap space I want to highlight. Those are some of the top losers in the Nifty small cap 100, Tamanna.
You are seeing a spot of strength, I would say, even in some of the real estate players. Those aren't doing too badly. When it comes to your micro caps of Force Motors, of Solara, and Aztec, all having an interesting play over there on the other side, on the loser side of Puravankara, Orient Cement, and you're seeing those spots of weakness there. Overall, I would say range-bound trade, but the big stories continue to be, one, what's happening with Coal India and why so much negativity there? Is it warranted? Secondly, HDFC Bank, have investor concerns really now been allayed, and we'll come to all of that. Of course, the talent management pull and push between a Kotak Mahindra and Federal. But let me come to Soni Patnaik and Dharmesh Kant. Soni Patnaik is AVP GM Financial Services. She's speaking on the technicals today. Dharmesh Kant, head equity at Chola Securities, will be speaking on the fundamentals. Welcome to both of you. Soni, I have to start by asking you where you think the Bank Nifty is headed yet after it's shown this boost, since been in a range for quite a while. Do you think you're seeing new levels soon?
Hi, good afternoon, and thank you so much for having me on the show. So I think talking about Bank Nifty, of course, it's looking good from current levels because, 47,000 was the level where maximum options pain was present. And this level has just getting tested right now. So I think from current levels, you can see positionally, Bank Nifty is looking good. Like 46,000 is an immediate good support. So from 47,000, of course, the next step is to test 48,000. But ultimately, I think over a few days, it will definitely head towards 49,000 plus levels also. I think it's quite good, and risk reward ratio is also quite favorable to enter at current levels with 46,000 as a very strong support.
Dharmesh, quick word from you on what we're seeing in IT in terms of weakness. Yes, so overall markets are off their day's highs, but IT taking a harder knock on the chin, and not just your TCS, Infosys for IT, even a Coforge. Do you see this as a result of bond yields hardening, US Treasury hardening, and perhaps that interest rate fear now setting in?
Yeah, good afternoon, Tona. Definitely, yes. I mean, the CPI and the PPI data which came out for the month of January in the US has something to worry about as far as the timing of the interest rate cuts is concerned. And Indian IT, the entire space was just banking on the theme that once the interest rates starts getting lower in the US, discretionary spends will again start in a big way, and that will help them get the order book in place and the future visibility. So that was the challenge for the IT sector. It's in a trading zone right now. Unless that happens, I don't think Indian IT companies, especially the large cap ones, are going to benefit or see a trending uptrend going forward. So that's the problem out there, because they're still short of products which the current IT space is coming up with, and that is all to do with generative AIs and machine learning and stuff like that.
Sure. Right, Dharmesh, thanks for that. Now, a couple of days of declines that we've seen where Coal India is concerned. That's our stock of the day. We are looking at Coal India again, a loser in trade today as well, 3+% lower after that 4% knock it took yesterday. Couple of reasons, Tamanna, that have come through, adverse reasons. One is that your production target has fallen from roughly 770 MT to by around from 780 to 770. That's largely because there was an environmental or a clearance from the government which did not come for one of the subsidiaries of Coal India, thereby having a 10 MT kind of a knock in this year's production for FY24. And then, of course, the other one was with regard to e-auction premium. Your e-auction premium was 100% plus in Q3. It's fallen to 35 to 50% in Q4. At least till now. But that is just 13 to 14% of the revenue. So really, I'm trying to understand here as to what would the larger impact be here. Not very clear on exactly what the impact would be, because though e-auction premiums have fallen, but your volumes are higher on the e-auctions. And there ought to be an offset of that.
They will have to come in for much higher volumes to make up for the e-auction. And I think the big takeaway from the con call was very clear idea that you will see at least a 10 metric ton reduction.
Correct.
Analysts we've been speaking to through the day say it'll be 10 to 15. Mixed views as far as brokerages are concerned.
Correct.
That have still kept the target prices up. Interesting to know Dharmesh's view very quickly on a Coal India. Do you think it's getting bashed a little too much?
I think it's a healthy correction which has come into the play and good opportunity for investors to again get back into Coal India. So these minor adjustments will keep on happening. I mean, in a year or in a quarter, these things will do come into the play. But, the larger picture is still 20, if my memory serves me right, 27% of the coal is still imported in India, and government of India has a target of to get it to the 0% imports. So that is where Coal India is likely to step in a big way. And LPG usage in India is still very high. It's not that it's going to come down. So coking coal production would be required even for that matter. So I see this as an opportunity to, lap into, if you have an investor, to get back into the Coal India and buy some at current levels. So not to forget, still trading at less than 8 times on your forward PE multiple with an ROE of more than 50%, strong cash flow generation, 5.5% dividend yield. So, I mean, it's just that some trading place, some minor adjustments will happen. And Harsh pointed out right, because there may be a slight drop in the premium, but the volume is going to take care of that. So it's a knee-jerk reaction, a welcome reaction for new people to get into Coal India.
Very, very interesting. Thank you for that, Dharmesh. Sony, if I can come to you with regard to charts, how are they looking? Is this indicating that this correction could be an opportunity even on charts?
I think definitely, Harsh, it is indicating that, there's still some more downside left. Perhaps 430, 420 be the range where it can test. And maybe that would be the optimal range. One can re-enter the longs. But as of now, from current levels, just wait and watch. There's definitely like 430, 420 range can be tested. I think from there, that level, it can bounce back again towards 450 odd levels.
Absolutely. All right, that's the story with Coal India. But let me come to the other big story of the day, which is definitely Kotak Mahindra Bank. Now, they announced their rejig yesterday, which will take place effective from 1st March. And this might have had a spillover effect at Federal Bank. Vishy is joining us with all the details of why a personnel rejig in Kotak Mahindra Bank is having this ripple effect on the Federal Bank stock today. Vishy.
Right, Amana. So what's happening here at Kotak Mahindra Bank is essentially a large management rejig. And the first one of those, the most important one of those, is the elevation of KVS Manian from whole-time director and head of wholesale banking to joint MD. That literally puts him at the second in-command position at Kotak Mahindra Bank, right after CEO Ashok Vaswani. We have then the next appointment is Shanti Kambaram, goes from retail head and whole-time director to deputy MD from the 1st of March. After Shanti Ekamram, of course, there's Devang Ghiwala, who's going to be taking over as president and group CFO of Kotak Mahindra Bank. He'll be replacing Jaimin Bhatt, who will retire from his group CFO position at the end of this financial year. There's also Milind Nagnur, who was a CTO at Kotak Mahindra Bank, will take over as a chief operating officer from the 1st of April. That puts him in the KMP league at Kotak. And lastly, we have Paul Parambe, who's currently working with the bank, and he takes over a group level position as chief risk officer from the 1st of March. So this was largely a rejig that's happening at Kotak Mahindra Bank. What is interesting to see is that this is the first big move that is being done by Ashok Vaswani since he took over as MD and CEO on the 1st of January. This is the intent behind this is, of course, to retain the senior management pool so that they don't end up leaving the bank. That was one of those fears right after Uday Kotak stepped down as MD and CEO of Kotak Mahindra Bank. The fear was that the larger or the top management will also follow him and probably leave the bank. But clearly, Ashok Vaswani ensuring that these people stay back. Now, the collateral impact, as Tamanna was talking about earlier, the ripple effect that's being felt is at Federal Bank. That's primarily because of KVS Manian. NDTV Profit had reported that Manian was being considered as the potential CEO candidate for Federal Bank. This was reported last week. Federal Bank is set to submit a few names to the RBI as potential CEO candidates, at least 3, that's what we understand from our sources, and that was likely to happen at some point in time next financial year. Now, if Manian decides to stay back or whether he will come in as a CEO of Federal Bank, that's something that we need to watch out for. That story will get clearer as weeks go by. However, direct impact on Federal Bank, it rallied about 10% after the story came out about Manian being considered as a potential CEO candidate. And then today, it's down roughly about 6.5 or 7% odd. That sort of enthusiasm amongst investors, that's coming off in case of Federal Bank. And of course, all of this is happening because the CEO of the 4th largest private bank in India decided to rejig his management. Another stock that is actually trending in trade at this point in time is HDFC Bank, up about 2.5% today. Harsh, if you want to take us through what exactly happened at HDFC Bank and why is it that investors are so keen on trading in the stock?
Well, yeah, 2.5% higher, Vishy correctly pointed out by you. HDFC Bank also in focus, and it's a welcome step, at least for investors. The kind of commentary that's come through, it's been clear, it's been concise, it's been crisp in terms of taking ownership of whatever has been going on over the last couple of quarters in terms of weak commentary, in terms of weak guidances. It's come out, or rather Sashidhar Jagdishan's address to investors, it's come out, and what he suggested, he's taken full ownership, and he suggested that deposit growth will come back. One will have to be patient, and most importantly, they will focus on EPS growth. That has been the big question mark as to when does EPS growth start to kick in. But he's continued to say that priority will be to grow EPS, and clearly the reaction on the stock seems to suggest that the market has taken his comments favorably. Also, to add one more piece, and we'll try and discuss the whole banking pack together, right, Tamanna?
Right.
But just to put one more piece together, Kotak Bank also, the criticality of having all of the management stay back is also from a perspective that their larger strategy, their larger goal over the last 5 years, 7 years continues. It does not, there is a bit of continuity in strategy. That does not change considering that the management stays back. And that, I believe, is also one big positive, which also what analysts are also suggesting.
I think, in corporate India, we sometimes underestimate the importance of talent at the top. Globally, it's a huge mover when you have that kind of a move, and that really what the management is, who it is, and what they are communicating becomes key. But talking about Sashidhar Jagdishan, let's listen into what he was saying, and these are some of the key pointers of what he said. We played it out first on this show yesterday, and you're seeing the impact on the stock today.
Our narratives could have been better. And I take it upon myself that it's a learning for me With all humility, I do reckon, and we will be focused. As I said, we'll have our single-minded focus is to create a very sustainable franchise, and our focus is going to be on profitable growth. And that's the only metric that I'm going to be looking at for years to come, and especially during the period of transition. We will not disappoint you, that I can assure you that. We realize that effectively we have preponed the loan growth, so I need to now have that period of, I would say, what do you call it, transition time to warm up the engine to raise that amount of equivalent granular sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up and so that matching with that of the loan market share. Obviously, it's not going to happen overnight. It's a kind of a glide path that we will be seeing. In the meantime, obviously, whatever I raise, if I raise a lot more, then I'll have enough to maintain reserves. I'll have enough to pay off the bond maturities or the loan maturities that will come up there, and the balance we'll deploy it. If I have constraints because of the monetary policies or monetary situation, liquidity situation in the system being rather tight, to that extent, it will be much lower. But yet, just by repayment of the high-cost borrowings, you will see the trajectory of profitable growth continuing.
Yeah. Okay, so those words seem reassuring, calming from Shashidhar Jagdishan. You're definitely seeing that in the stock move today, about 2.5 points up. So Shashi Talk has helped. We'll take a very short break, but we're coming right back with the top volume buzzers of the day and what you should do next in today's trade.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Welcome back. Thank you for staying with us on India Market Close. A host of stocks are buzzing in trade today on the back of volumes. Anushi joins us with all of that. Anushi.
Well, Harsh, right at the top, we have Whirlpool Corporation in India in focus today after Whirlpool Corporation is selling up to about its 24% of stake via multiple block deals with this aim to reduce its debt using the proceeds it will receive from the stake sale. Again, the floor price is expected to be around 1,230 as per the Goldman Sachs term sheet. Moving on to next is All Cargo Logistics. Quite an up move here, about 13% of return. This is on the back of multiple large trades that happened, wherein about 3.8% of equity changed hands after the management made some positive comment on its margin expansion going ahead FY25. Next on the list is Deepak Fertilizers. Again, 11% of a return over here, in an intraday return over here, with the volumes buzzing in the 12 to 13 times its 30-day average. This was after the company signed a 15-year LNG contract with a Norway-based Equinor, which is supposed to be the margin accretive for the business going ahead. Next on the list is Zaggle Prepaid. The stock is up 16% today with the volumes in the range of 4x its 30-day average. Again, this is on the recent order that it has received today from EasyTrip and Questcore, resulting in 5 large trades, and thus we are seeing such high volumes. And lastly on the list is eMudra. While there is no specific news flow around it yet, this is purely on basis of higher volumes, with the volumes being about 4 times its 30-day average and the stock seeing an intraday gain of about 5% in trade today.
Absolutely. So a lot of those volume buzzers on the radar. Thank you for that, Anushi. Quick word from Sony and Dharmesh on some of those stocks that we're discussing. Sony, any of those you track, especially Whirlpool and All Cargo? Whirlpool taking a knock, of course, after the parent stake sale news. But do you see any potential there, and views on All Cargo?
I think Whirlpool is not looking that impressive on charts as of now. It has, of course, taken a hit today. But the moment if it's not able to cross 1350, 1360 on the upside, there could be some more sell on rise sort of a pressure. And that structure is quite firm. So I think it's looking quite weak on the medium term also. If you can see, then to the next important support coming for this stock is around 1230. I think that stock can, just like sort of wait and watch until the 1360 resistance is crossed. And talking about All Cargo, I think this stock is sort of better than Whirlpool, and it has seen a lot of volume action today as well. I think going forward, definitely it can test 92, which is its next hurdle, and immediate support that can be trailed and look forward to is 82.
Okay, so those are the levels to watch out for. Dharmesh, if I can come to you very quickly before I allow you to go. With regard to some of these private sector banks, we were speaking about 3 of them: HDFC, Kotak, Federal Bank. All 3 moving on slightly different topics, on slightly different cues. HDFC Bank now up 2.6%, sitting at the day's high, sitting extremely pretty. So is Kotak Mahindra Bank. Dharmesh, your views, what should one do, and how do you look at valuations at the moment?
Yeah, I think interesting moves today, and it has more to do with a sentiment move on all 3 counters. The news flow is same, and the reactions are different based on the same news flow. If given a choice, I would be buying Federal Bank rather than HDFC or Kotak Bank, because HDFC, see, it has been a performer for last 25 years, and that benefit of faith has to be given to their management that things will return to normalcy. But that any credit growth in today's world has to come from the retail segment, because corporate India is already flush with liquidity. Equity is cheaply available, so there's no need for corporate borrowings anymore. It has to go through the retail route, and there the problems are coming up in most of the pockets, be it MSME, SME, or the personal loan segment. That's unsecured portion. That is what we are getting a feel on the street. So it will be interesting to see how these companies boost their EPS and go away from the traditional strategy, which has been more on a conservative front. Federal Bank, having said that, will definitely find its successor at the top. There is no dearth of talent in the country, and they have been performing well for the last 5-6 years. The journey of Federal Bank has been phenomenal. Their book has almost doubled in the last 5 years, and I do think this opportunity for value investors to get into Federal Bank. So valuation-wise and the future outlook, if you ask me, the growth where the alpha is going to come from, it would be in Federal Bank rather than a Kotak or an HDFC Bank.
Absolutely. Thank you so much, Dharmesh, for speaking with us today. Soni, please stay on as we turn our attention to what's happening on the F&O side of things. Agam, muted day as far as the top line is concerned, but the action in banks and Fin Nifty expiry as well, isn't it?
Yes, absolutely. And, you know, through the course of the day, we've seen both the Bank Nifty as well as the Fin Nifty outperform the Nifty 50. And that's largely on account of the strength that we've seen return to HDFC Bank. I'll come to that in just a bit. The Nifty, of course, flat at the moment, and a little bit of unwinding of older positions to the tune of 2.5% as far as your open interest decline goes. The Bank Nifty, on the other hand, showing strength. And well, we should have Bank Nifty for you in just a bit, which has in fact advanced by as much as 1%, and looking at some longs building in there as well. In terms of the options market at the moment, well, we continue to see a lot of traction with respect to well, the 22,100 calls and puts, and considering we've seen a flattish day of trade, we aren't seeing too much in terms of change there. That said, we're still looking at a 500-point range between 22,000 on the lower end and 22,500 on the higher end. And moving on to stocks, pardon me, Fin Nifty. The Fin Nifty at the moment, of course, is well, trading somewhere around 20,700, 20,800, and that's something that will be taken as a positive in both hands as far as bulls are concerned. But let's move on and talk about stocks then, and that's where we see a little more focus coming through. So Balrampur Chini and Deepak Nitrite looking at longs, and Hero Motor Corp, Federal Bank and Coromandel International under pressure, looking at declines. Federal Bank, of course, seeing a sharp cut of around 5.5%. And in terms of stocks which are seeing unwinding, we are in fact looking at a long list of those stocks which are seeing a longs unwind. Coal India, Metropolis, Ipca Labs and MGL, all of them looking at well, a bout of declines in open interest even as the underlying comes off. And once again, we continue to keep an eye on the banking indices as we move into trade tomorrow, where of course we will have a lot more traction with respect to the Bank Nifty weekly options expiry. But as far as the Nifty goes, a quiet day of trade.
Quiet day of trade on the Nifty, not so quiet for one specific stock. So the Z stock has been zooming in trade today, and one of the reasons very clearly is reports that there may be revival of conversations between the two sides. Now, what NDTV Profit has learned is that talks are taking place at the level of lawyers. Lawyers of both Z and Sony are engaging in merger talks at this point, but the ball really is in Sony's court whether it wants to revive any of those conversations or go ahead with the merger. There is no deadline as such which has been stipulated as to when they have to get back or when Z has to get back, but at least the fact is that there seems to be no real reason why Sony would come back to the negotiating table, because the stalemate over key issues that tanked this $10 billion merger on the 22nd of Jan have not really been resolved as of this point. The question is, why are investors still seeing this as a positive? And that truly is at the end of it, whether it's a Z or a Paytm, not saying anything negative about these companies or these counters, but both with a lot of uncertainty and no real reason as to why you're seeing this kind of a bump up, Harsh.
Well, yes, you're right, Tamana. It seems like the market is pricing in or starting to price in some of the possible merger synergies which could play out, if at all that were to translate.
For Z?
For Z, yes.
My question is, why would Sony come back to the table? Because it was always Z who really has been pushing to let it go through, including Puneet Goenka stepping down, etc., etc.
But now it seems like it's the other way around. Sony seems to have approached Z, and there seems to be...
I'm not sure. What I have learned is that both sides are talking, lawyers are talking, which in ordinary course of business they would, even though they're fighting it out in courts. Those channels are always, legal channels are always kept open. So I don't know how much of this is really going to pan out. But let's go across to Sony on some of those stocks, Z and Paytm. Fundamentally, everything is up in the air, Sony, but are you seeing any potential on the charts, both at or near circuits?
I think Tamana, for Z, we'll have to wait until 210 is crossed. I think that's a resistance level, and the stock has been consolidating. It of course has a very broad range of consolidation. I think somewhere around from 175 to 195 and then 210 also. So until and unless the 210 level is not crossed on charts, it may not see any significant short covering. So maybe only above that level we can see it fill the gap up to 225, 230 odd levels. So I think that's the level one has to definitely wait for. Talking about Paytm on charts still looks quite weak. It's just some bounce back that we can see after a lot of correction that has happened. It still does not fall under any parameter where you can say that it's a good buy from current levels. It's definitely an avoid on charts as of now. I think there are a lot of resistances coming ahead, like around 400 and 420, multiple resistance zone. So it definitely poses as an avoid from current levels.
Yeah, absolutely. It's an interesting time in the markets where there is liquidity, there is capital chasing ideas. But are the best ideas really out there? As I'm going into this break, I just want to play out a snippet of a conversation I had today with Avendus Capital's Andrew Holland. And this really was an interesting quote where he compared the markets today as arriving at a party perhaps a little late, where all the food and drink is over. Listen in.
It's been a great rally, don't get me wrong, and I think everyone's scratching their head a little bit of how they missed it. But, it goes back to, when, the market's where they are at the moment, and I'm not saying there won't be a pre-election rally, but, when you arrive late at a party but all the good stuff has already been eaten or drank, and you're kind of left with some of I'm not saying the scraps, but some of the leftovers. That's where I'm feeling at the moment. I just don't want to kind of push into this market so aggressively, when a lot of the gains have already been made, individual stocks, and rather than just the indices.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
There are different types of stocks. Large cap stocks.
This is turning into an exciting afternoon. I wouldn't say in absolute terms a massive move on the index, but we're closing in on the 22,200 levels. So a fresh record, the last record being 22,186, after which you saw a spate of profit booking coming in yesterday. What's driving the Nifty at this point? And it's banks all the way. It's something we addressed right on top of the show. Of course, power grid because of that Bernstein report, but in terms of contributors, look at what happens when an HDFC bank moves. The same way after its Q3 numbers that HDFC pulled down the market, the bank is now, or the counter now has moved up the markets. Even an Axis, a Kotak Mahindra Bank, all of them really fueling through. Yes, you have exceptions like a Coal India or an ITC because of news, at least as far as Coal India is concerned. But it's a bank story through and through. Even if you look at the heat map, and we'll pull that up for you to look at really what's moving, it's banks all the way. You also have an NTPC doing fairly well this morning. So banks, your PSU companies, and the weakness coming in largely from some of the two-wheeler spaces. In the last half an hour or so, you've seen Bajaj Auto slip fair amount, and Eicher, even a Tata Motors not doing too great. Of course, your IT pack showing its bout of weakness. But look at a Hero Motor down about 3.5% at a time like this. But the top line, or the big takeaway, of course, that Nifty at all-time highs. The Bank Nifty also looking spectacular. I just want to quickly pull up the line graph for the Bank Nifty, and look at that, over about 540 points right now, near its day's highs as well. Deepan joining us now. He's founder director at Elixir Equities on Fundamentals. Deepan, welcome to the show, and we're speaking to you at a great time because to truly go into the next phase of the bull run, you need the banks and the private banks to come on board. Do you think they've entered that party?
Yeah, good afternoon, and thank you for having me on your show. Yeah, I think they can enter the party anytime. They were actually the initial participants of this party. I think this entire bull run last 3-4 years ago started with the private sector banks, and some of the baton has been shifting from banks to PSU banks to other industries, and now back to private sector banks. So yes, I think this changing of the leadership positions is very common in a bull market. And certainly, I think there is a lot of value in the private sector banks, and there's great earnings visibility. So I'm not surprised if some buying is coming through in the likes of HDFC, ICICI Bank, IndusInd, Axis Bank, so on and so forth.
So we've hit 22,200, and then we've pulled back a tad. You know, frankly, the 22,200 number is emotional, sentimental right now, but it just looks beautiful on that screen. Quick word from Sony on whether we can hold above those levels.
Absolutely, Taman. I think it's looking quite strong and must continue. Nifty, keep on trailing a stop losses, of course, if somebody is playing for the longer side. And going forward, we can definitely see 22,500, 22,600 also on the cards, especially when it is being driven by Bank Nifty support. So like I've just discussed a while back, Bank Nifty is also looking quite good, and 48,000 on immediate basis looking on the cards. So I think both indices can be held on to for those targets, and keep trailing a stop losses above the cost. Of course, it just helps in case there is any sort of intraday dip. Everything just gets into bot. So I think that's how the market are framing at the moment.
Sure, thanks so much for that, Sony. Deepan, coming back to you with regard to banks, Harsh also joining in. Deepan, talk to us about what's today's market is largely been driven by HDFC. Is there enough comfort now with all the statements that have come out?
See, I think it's still work in progress, and although the sentiment is gradually improving, we'd like to see actual numbers flow through in December quarter, in March quarter and beyond, because there were certain negative surprises last couple of quarters. and the integration with HDFC is going to be more difficult and has created a whole host of uncertainties which were not earlier known. But if you're bullish on India and the India story and the Indian economy, then the largest bank or the second largest bank, that being HDFC Bank, is certainly going to prosper. And valuations are at historic lows, so you can always justify buying into HDFC Bank. To a large extent, I think the over ownership also has got corrected. And this recent news that LIC is permitted to increase its stake in HDFC Bank creates fresh room from LIC's point of view to acquire stock. But of course, they will do it at their price and at their time.
Understood, Deepan, point taken. I'd like to switch focus. Top gainer for the day on the Nifty, Power Grid. That one's up 4% in trade. We had an initiating coverage note coming in from Bernstein. Very interesting with regard to what they believe is a great story in the power transmission space, especially given that the ROEs are kind of 15.5% odd, and that's regulatory. The regulator has allowed that kind of an ROE pricing to happen. We have Varsha joining in to try and break down what within Power Grid does Bernstein see as the key takeaways from that note.
Hello Harsh. So if you see, this stock is 78% up in last 1 year, 21% up in a month. This is a stock with 4% dividend yield, 15% ROE as you rightly mentioned. This is a capex heavy business but gets a debt of at 8%. Now Bernstein has initiated coverage where it rated Power Grid and outperform. The reasons why it has initiated coverage was it sees increasing transmission need and also interstate transmission. Batteries, smart meters are new growth areas according to Bernstein, and access to fund, as I said, is at a low cost of debt. Also, regulator is grandfathering existing assets at 15% of return. Now, capex over the next 2 years is almost 30%, which is understated by consensus. Also, this is a low beta stock with 18% ROE, 8% PAT growth, and with strong governance. And price to book calculation, if you see, it implies a fair value of 3x currently, which is hovering at around 2.7x. Also, company on Monday approved investment worth rupees 656 crore for the implementation of electricity transmission projects in the country. So this is the reason we are seeing uptick in stock.
So Power Grid actually, on a electrical kind of a runaway today in the market, up about 4.5% on the back of that Bernstein note. But that's not the only story, I would say. Look at an NTPC also doing fairly well. Deepan, just your take as we reach those and hopefully sustain over those 22,200 levels. Yeah, we seem to be right now. The Nifty right now definitely sitting pretty above those 22,200 levels at 2208. What a fabulous number. So you're seeing that breakout over there. I'm talking about sustainability, Deepan, and where the next leg is going to come from. Would we need banks to participate holistically and sustainably? Can you do that without the IT pack coming to the fore? And do you think, your Power Grid, NTPC kind of space will also fire up?
See, I think, in a bull market, you're going to see changes in leadership. And, banks have taken the Nifty to these levels. Earlier, they were laggards. So the leadership position will keep on changing. But if you ask my view, I think it's time to be a bit cautious. I have been saying so. But of course, the market listens to no one. It's just been rallying one way up. But I do not expect that investors and traders buying into the market at these levels can expect any significant outperformance. So I'd be a bit cautious. And even if you have money to invest, better to wait for a correction. At some point of time, you may see 10-15% of a correction also. And those are good entry levels. But today, there are very few good quality stocks available at reasonable valuations. And of course, we are seeing a lot of action in PSU stocks. And that's because these stocks have been traditionally cheap. And we are seeing a decade-old correction adjustment taking place in their price to earnings multiple and under ownership being corrected over there. And of course, I think prospects also improve for PSUs. But beyond that, I think, to try and extrapolate significant growth in earnings to other sectors and justify a higher price to earnings multiple for other sectors and other stocks is not something that we are buying into.
Got it, Deepan. If I can switch over to Sony, Sony, 88 points on the Nifty, 80 plus, if we can call it, give or take 5. But 80 points on the Nifty, 60 plus contributed by HDFC Bank alone. How is that one looking on charts? Can we now see an uptick from here? Has the bottom being made?
I think, Harsh, it is safe to say for the temporary time being, definitely we can see that some bottom has been done. And, 1400 was the level where it was struggling a lot and, plus minus 20 odd points. But then came the decisive close above 1400, 1420. And from there itself, it has been rallying up. So going forward, definitely, I think 1550, 1580 is on the cards. It will be a positional play. But definitely one can take the risk from current levels and keep your stop losses at 1420 and look for targets of 1550, 1580 for the coming days.
This is very clearly a Nifty and private bank story, because if you look at the broader markets, you're not seeing that kind of an excitement. Mid cap 100 slightly in the red, even the small cap stocks about 0.5% down. So you're not seeing that same buzz in the small and mid cap space. This is definitely and firmly a story about the big boys and the big girls today in this pack. And Deepan, I just want to come to you on that. As we progress towards a bit of choppy waters, you're saying let's be careful. Are you going to see some of those profits come off in the mid cap space?
I would hope so. I think so. So, the whole idea about investing is buying good quality stocks at reasonable valuations. That's when you get a superlative performance. And I don't see very good quality businesses available at reasonable valuation just now. And that's why, my opinion that we need to be a bit cautious. Also, this earnings season, in my opinion, has been slightly below expectation. A lot of it because of base effect, and a lot of the profit growth has come because of lower costs, and that cannot be sustainable. There's clearly stress on the top line and volume growth across the industry. And I think we will see more of that in the March quarter as well. So if the earnings are going to, have a slightly, I would say, tepid, growth over the next 2-3 quarters, there's no reason to be extraordinarily bullish on stocks. No doubt, I think liquidity is coming very strong to the market, and that's keeping stock prices elevated. But from a fundamental perspective, you want to get into the market when valuations are reasonable and not get driven just by liquidity flows.
So, Deepan, if I can ask, where are valuations reasonable? Where are you looking at valuations which may be? Is it chemicals? Is it certain parts of manufacturing?
Well, that's the question that I'm asking all the time. That where is the valuation comfort? And I don't have an answer to that.
Sure.
What are you doing in these markets right now, Deepan?
Just waiting and watching, maybe taking holidays.
Yeah, really? Seriously?
Enjoying the bull market.
No, you're pulling our leg, because I'm talking to you with Nifty above 22,200. You're saying you're taking holidays.
This is the best time to relax and chill because there's no hard work required. I know for a fact that whatever stock I buy today, I'm going to most likely make a mistake. The real action happens when the markets are in a kind of a subdued scenario. And markets like these, you just want to enjoy. And of course, more or less, whatever investments you have made, you are seeing the fruit of that patience being paid off. But as I said, I think it's just best to wait and watch. As an investor who's invested over the years and decades, it's like a fulfillment of whatever, you have gone through and all the bear markets you have lived through to see such a day. But I know that from my experience that buying at such tops and such elevated levels 2-3 years down the line doesn't always make the best of the return. So from that point of view, I want to be a bit cautious. And I think it's a good idea for investors to be anywhere from 10 to 25% in cash. That cash is strategic. Should there be a correction and you put that cash to work, that's how you get the next leg of outperformance.
Got your point, Deepan. But Deepan, one thing that Tamanna and me were speaking about in the morning, $2 billion worth of sale which FIs have made. 5 years back, that would have meant carnage in a month-to-date period of maybe 15 trading sessions. Not happened now. We're seeing plenty of cash held by mutual funds being deployed. SIPs are at an all-time high, at record highs. So where is this correction really going to come from? Because flows are completely against what you seem to be suggesting.
That's right. I think the wild card in my entire analysis is the money flows which is coming in. And we don't have a handle how much money will come in. But all I know is that the market is getting bigger and bigger. The capitalization is going higher and higher. And at some point of time, you require even more money to keep the market prices afloat. And that's when perhaps you'll see that the liquidity coming in is not adequate to keep the stock prices elevated. But till then, I think it's all right. We are in a phase where anything can happen, and you could have extraordinary gains. There could be a parabolic move as well. But that doesn't mean that you should participate in it by putting fresh money to use. Mind you, I'm not recommending that you completely sell off your portfolio and go 100% into cash. It's just that strategically these are good times to create a bit of a cash buffer and not get carried away by investing in the markets at these levels.
Absolutely. Let me get Sony in on it, and specifically on one space which is apart from banks, and we've been talking banks all afternoon because they are the heroes of the day, but reality is not doing too badly as well. And you're seeing quite an uptake in some of those counters. Anything that you like at this point and at these levels, Sony, where you see an upside? I mean, a Macrotech, DLF are all about 1.5–2% up. I'm also going to quickly pull up Raymond. They've announced a project in Mumbai's Bandra. They're going to make a gated community. You saw that spike and then a pull off, maybe because investors are wondering where you will get that much space in Bandra East, some 16,000 square foot. Maybe that's one of the reasons. But that's on a lighter note. Sony, anything you like in this space?
I think, Tamana, we can keep a watch on DLF. DLF becomes a conditional buy only when it has crossed the level of 870, and most likely most likely by tomorrow or day after tomorrow, if we see that level being crossed, it can head towards 900 also. So I think that's a good level to watch, and immediate support. It has a lot of supports. I think 840 is a very crucial support to watch out for. And as long as 840 is getting held and defended, definitely to try to take out the resistance of 870, above which 900 is on cards. I think so. This is one be the stock which can outperform the rest of the stocks also. I think this could be a good pick from the realty sector.
Understood. And Sony, while we are at it, BTST ideas?
Right, so BTST will be from Voltas. Voltas is looking quite good with fresh breakout, and you can keep a stop loss of 1,095. It can definitely head towards 1130, 1140. So this is the first idea. The second idea would be in Power Grid. Power Grid has seen an inverted head and shoulder breakout today. It has also seen a lot of aggressive long wilted positions to the tune of 5% So I think Power Grid is looking quite positive from current levels, with 282 as a stop loss and 300 can be a target.
Yeah, absolutely. Deepan, just a couple of minutes left for market close. Your word on whether you think this momentum will sustain for some time?
I think so. I think that technically it's looking much stronger now that the previous high has been crossed and liquidity flows remain strong. So intuitively, I can tell you that the up move has got more feet and more legs, and certainly the markets can trade higher in the short term. But the real question is that from a trading perspective, it makes sense to go long. But from an investor's perspective, I think the risk return profile doesn't favor you.
Yeah, absolutely. Thank you, Deepan. Thank you, Sony, for being with us on a very exciting afternoon, I must say. And let's just wrap that all up for you. A couple of minutes to go as the markets close, and what a day it has been. Most of the action you're seeing is in the last, I would say, 20 minutes or so. Markets looking like they're going to close at their day's high. We have crossed, ladies and gentlemen, 22,200 and sustained there. You hit once and came back. We pulled back, but we have sustained now. Let me just pull up the Nifty line chart for the day to give you a sense of how this entire day panned out. It seemed tepid and quiet as far as the Nifty is concerned, but towards the end of trade, here you are, and you're looking like you're going to close at the day's highs. Towards the end of trade is where all the action began. Be interesting to see if FIIs came in the last hour of trade or so, and if that's what's pushing up the markets. But really, no need to look too far to guess what has pushed up the Nifty. Let's pull up the heat map, and it's all about the banks. Shashidhar Jagdishan may have done the trick, not just for HDFC Bank and their investors, but the entire banking pack, and as a result of its heavyweight nature for the Nifty as well. So HDFC Bank up about 2.5%. Axis Bank doing well. Kotak Mahindra Bank also, but there's a whole different story playing out there. That is a management rejig which they have done. They've managed to retain top talent. One of those was headed to Federal Bank, which has hit the Federal Bank stock now. But nevertheless, Kotak Mahindra Bank having a really good day. Power Grid there closing at a 4% plus uptick because of a positive Bernstein report. On the other end of the spectrum, what hasn't worked? I would say last hour's slide in some of your two-wheeler stocks, some data out there suggesting that perhaps two-wheeler sales are not as good as was expected. So you have Hero Motor down nearly 4%, Bajaj Auto also feeling the pain. Coal India is stuck over here. An analyst call has gone sideways. Management commentary on the kind of guidance they see has not gone down too well with investors, and Coal India has been seeing that pain point coming in. Bank Nifty, I just want to focus on the Bank Nifty for a bit because that's the story of the day. If you're looking for one snapshot of what's happening, you should look at the Bank Nifty and the Bank Nifty contributors, because that's telling you the whole plethora of range of what happened in this market. I was talking about a Federal Bank. So Mr. Manian has been retained by Kotak Mahindra Bank. That stock up 2%, but Federal Bank on the other hand 5% down is where it's tending to close. Since we have closed officially, I just want to see what the Nifty finally closed off at before I get Harsh in on what is happening on the broader markets. 22209 is where you have the Nifty closing, record high, all-time high. And today, Harsh, the story is about the Nifty, not really the broader markets, isn't it?
Absolutely. You look at the broader markets, Nifty mid-cap largely flat. Nifty small-cap, in fact, closed in the red. There you go, around 0.09%, as flat as it can get for the Nifty mid-cap. The small-cap, in fact, down 1/3%. And that's evident from the advanced decline ratio as well, Tamanna. Advanced decline ratio strongly in favor of the declines. Maybe not strongly, but definitely in favor of the declines.
Yeah, that gap narrowed right in the
yes, right at the fag end. So that's how it's played out. And with regard to some specific names on mid and small, let me first pull up something like a Z, Paytm, Sonacom. Z closed higher. 6.5% is where it settled at. It was up 10+%.
Yeah, there's a story we covered all day. I don't know. I mean, this hope that maybe some miracle will happen and talks will revive, but let's see where that goes. Yeah.
Yes, we'll have to wait and watch how that plays out. Paytm, second day in the sun, 5% higher for Paytm there, and you have Sonacom Star, which was also up. Quickly on to some of the newsmakers, something like a Federal Bank. There you go, Sonacom Star up 4%, substantial. Federal Bank was down 5%, not a bad close after what we saw, almost 7% at the bottom today. Biocon was also down, it's closed I think around 4%, 3.5% odd lower. And you have the likes of an Adani Power, Apollo Tyres within the mid-cap space, which have also closed lower. These are the top losers on the Nifty mid-cap. On to the small-cap, Renuka, Glenmark, Deepak Fertilizers were three names which have closed strongly in the green, the top three gainers on the Nifty small cap. And then within the loser pack, we have MRPL, JBM Auto and SJVN.
Okay, so MRPL seeing a bit of a pullback. Renuka, perhaps some buzz about whether ethanol makers will get a bit of relief. So all of those news pieces playing out. But exciting day all in all. We'll have to wrap it here. So from Harsh, me and the entire team, thank you so much for watching. Stay tuned though, an interesting conversation coming up with the management of Deepak Nitrite.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Alright, you're watching Earnings Edge on NDTV Profit, and as we're just wrapping up the earnings season, today we're talking about Deepak Nitrate. Now, the specialty chemical space has had a tough time over the last few quarters. The question is the worst over? To speak more on the Q3 numbers and the road ahead, I'm joined now by CEO Maulik Mehta. Maulik, great to have you on NDTV Profit. Superb to speak with you. Let's begin by taking a look at what this quarter has been like, and not an amazing one. It's been a slow sort of a quarter. Revenues flat, EBITDA is mildly down, margins have narrowed, net profits as well. Is this the tail end of the pain that we've seen in the space playing out in Q3 as well?
So I do agree that quarter three has not been a quarter of remarkable numbers for Deepak Nitrite, standalone or consolidated. But I also believe that we have shown a significant ability, remarkable ability in that sense, to remain extremely relevant in the Indian chemical industry and its ability to supply to the world. Now, when we're talking about margins, yes, margins have been affected. Partially, that is because of volatility in the feedstock prices, partially because in the AgChem segment, a lot of customers that we have had their books being closed for December 31st, and they had an unusually difficult CY23. Now, moving ahead, once one looks at the pain that the chemical industry has been going through, I think part of this pain is to be seen in terms of the kind of challenges that it has gone through over the last year and a half. That challenge is, in most cases, ones which have not been expected. So whether it is the Red Sea crisis, whether it is the Ukraine war, whether it is these geopolitical tensions that have led to a delinking. Now, the chemical industry worldwide thrives
when there is a stability, because customers and suppliers can plan long, have order books accordingly, and they become a little bit skittish when there is global geopolitical uncertainty. And because of that, there is always a quarter catch-up in terms of resetting what they consider as the new normal. Looking forward, what we can see from our own markets as well as the supply chain that we are intrinsically linked to, we expect the demand resurgence to start from Indian consumption improvements. And we are also seeing a general worldwide improvement in terms of customers' confidence in its buying strategy over quarters. In the beginning, this means that there is an improvement in volumes. And over a period of time, this means that there is an improvement in margins as customers and suppliers are willing to settle down into a predictable planning strategy. Now, Deepak is broad in its sense of being able to supply to ag chem, pharma, materials, construction, paper, detergents, etc., dyes and pigments, and hence we are de-risked in that sense. We don't have an over-dependence on one segment or another. At the same time, we do have 30% odd dependence on ag chem in the standalone business. And here we are seeing that there is an improvement, as I mentioned earlier, in volumes. And moving forward, we are certainly seeing an increase in wallet share. So over the last 6-8 months, what we have been doing concurrently is also brownfield capexes. And where brownfield is not good enough, greenfield capexes to be able to maintain or increase wallet shares. Right now, we've done it by increasing our headroom with existing plants. But over the next 12 months, there's a lot of semi-greenfield or significant brownfield expansion that is due to be commissioned.
Okay.
We remain bullish.
All right. So you remain bullish. Deepak Nitrite is looking at recovery mode. You're saying it will start from India. So let me begin with what kind of timelines you have in mind or you're predicting, because if this is determined on geopolitical factors settling down, that's something that has very little predictability one way or the other. So I want to understand the optimism when you say that recovery will come, and when do you think it begins?
So geopolitical uncertainty by its nature, I don't expect geopolitics to settle down.
Yeah.
This is a year where 90% of the world's democracies go to vote. I don't expect any sort of normal this year.
Yeah.
It's never happened in history, and I don't know when it'll ever happen next. But it's not the settling down. The settling down that I expect is in terms of the volatility, right? Now, for example, take the Ukraine and Russia war. There was a significant peak that took place with regards to natural gas availability as well as prices. But the war is not resolved today. In fact, it continues grindingly. Gas prices, on the other hand, have been able to find floor after floor over the last 3 or 4 months in winter time. Right? So it is not about geopolitics settling down, but it is about the volatility calming down.
Okay.
So once that happens, all parties resume a sense of confidence in their buying and selling strategies. Also, it is pertinent to note that right now we're continuing to live in an environment which has relatively high-ish inflation trending downwards, but an interest rate which has not yet followed suit. A lot of players worldwide are hoping for that to happen imminently, but whether that happens in March or April or May, some of them have planned aggressive expenditures only following this rate announcement. So there is optimism. There are animal spirits led by India in that sense. But a lot of companies worldwide feel, at least right now, that there is no harm in waiting for a month or two before making any significant announcements or rejigging any significant parts of their supply chain.
Okay. In all of these factors that you mentioned, Mr. Mehta, I'm trying to understand how much of a pain point is the China factor, recovery in their exports, and some may describe it as dumping of chemicals from China. We've seen that impact chemical companies across the board? I just want to understand that context for Deepak Nitrite.
Sure. So China as a manufacturer of note should never be ignored, right? It's the largest chemical manufacturer in the world. Pretending like India is in a sense insulated or that it is delinked, or any region in that world for that matter. That is, I think it is high hope right now, and it is not a mature way to think about it, even though a lot of Indian companies do offer that as a solace. The chemical industry in China is plagued by a slightly different situation, in my opinion. And that is that, generally speaking, the Chinese government has supply side support that it normally offers. And over the last last 2 years, it has significantly impacted China's ability to consume. Now, the Chinese government is also belatedly realizing this and making a lot of structural changes in the economy's ability to consume. Now, generally speaking, China has not been known for being a consumption side policymaker like the US. But as it is improving on these things, and as these things start to have a domino effect, China's need to export everything that it makes, quote unquote, dumping, will certainly go down because it will end up consuming a lot more of what it makes. As its own consumers, either people or companies, will be given more support by the government to consume. And hence, as global sentiments improve, so will China's own appetite to consume its manufactured capital.
Okay. So let me come back to my fundamental question. When is all of this going to happen? 2 quarters down the line, 3 quarters down the line? Do you have any visibility in terms of, a takeaway that our viewers can get on when you see the cycle turning, and are you already seeing the initial signs of it?
I am seeing the initial signs. They're very fragile. They are tentative in nature, and they are currently sector specific in X or Y sector. Seeing a secular improvement, I think it will start to happen over the next couple of quarters. But if one is to consider going back to the normal of FY22 in terms of India's ability to participate in the world chemical space, I think that will be closer to the second half of FY25.
Okay, so there's clarity there, second half of FY25. You also said a few quarters ago...
But you are seeing volume demand-led resurgence in this quarter as well. You will have heard the same commentary by a lot of other players. It is tentative. A lot of things can derail it, but we're positive that if that doesn't happen, it will snowball into consistent improvement.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
I wanted to refer back to a statement that you have made where you've said that you see revenues doubling in the next couple of years, if I'm not mistaken. Can you give us a clearer picture there? Are you on track to this happening, all things considered?
Mana, with the kind of investment that we're making over the next 4 to 5 years, if all we see is revenue doubling, then it will be really bad job with expenditure and revenues. That is something that we expect to happen over the next 4 years before the end of 2027-28, and hopefully significantly before that, while at the same time improving on our standalone and our consolidated EBITDA margins as well.
Okay.
So we expect to see across the board in all of our group companies an improvement in our percentage as well as, of course, our gross.
Okay, let's come to some of the details of what this quarter has looked like, and the Phenolics segment has worked out very well. Tell us a bit about that. It's also part of your larger import substitution plan. So give us some visibility on how this is panning out and how you're going to expand this.
Okay, so Deepak, Phenolics is largely tied to what we would call the India growth story, seeing as a significant amount of its output is domestically consumed. And that remains a resurgent theme across the board. So we're seeing demand-led recovery from the Indian consumption side, and then it is expanding to other geographies as well. Deepak Phenolics has been able to ensure that it has higher gross margins as well as top line by preemptively increasing its capacity. What we have also done is we have ensured that even the current sales numbers that we have and production, by the way, the highest production on record for us in a quarter, we still have some headroom, and we will be able to cater to this growing demand without losing wallet share. So moving forward, the main challenges that one would see is if there is, for whatever reason, a dampening of the consumption spirit in India. We're not anticipating that so far. And building into that, we expect that in Q4, assuming that feedstock prices come to some sort of a more consistent level, that Q3, in terms of its volume and its ability to push into the market, will be reflected in Q4. This is on the phenolic side. In the standalone business, nitride, we were affected from our AgChem side because of our 30% exposure there. And in Q4, we're seeing that there is some sort of a more stable base that is being created with marginal improvement in terms of volumes in this space, but in other spaces, whether it is paper, whether it is textiles and pigments, whether it is fuel additives, etc. There we are seeing that there is a reasonably strong confidence, both in terms of the volumes that customers are willing to pick up and the time period over which they're able to give us a confidence of their order books. So a large part of that inventory destocking seems to have taken place in Q3 with remnants in Q4. And moving forward, customers are more confident about fresh purchases for long. And I think that margin improvements will follow suit.
In the next couple of quarters, you will see margin improvements follow suit?
In some cases, it will be with a lag of a quarter. In other cases, it will be within the quarter. In a handful of cases, it may be with a slightly longer lag. But all of this we expect should be normalized in one fashion or another over the next 3 to 4 months.
I want to talk a bit about the slew of MOUs that were announced recently, I think just a few months ago with the Gujarat government, close to 14,000 crore rupees. How are these going to be executed? What is the kind of timeline for this? And is this all linear? Can you give us a sense of this?
So when you're talking about execution, I assume you mean project execution? Okay. So there isn't exactly a linearity. However, there is a clarity that if one is to work backwards, there's a particular footprint with regards to consumption that we have tied down, which would begin from 2027 onwards. So working backwards from there, there will be some plants that will come up earlier, some plants that will come up later, but by and large, it's a 4-year roadmap. And the speed at which plants get commissioned is significantly dependent on the technology and the tie-ups also. And in terms of the execution, we've created a whole new company so that we can focus on tight governance. These projects will be executed over multiple locations, including for the first time for us internationally. So we are also executing a project, the phase 1 in Oman, and that is to be able to support the business with an existing product where brownfield capacity expansion is, there's limited headroom there. Anyways, the other thing, so for us, it's a 4-year picture with project execution happening in parallel in many cases. Not to forget that we are also investing in a polycarbonate compounding facility where we have already started to supply to customers. We've already received quality approvals from marquee customers which have Indian presences, as well as about 150 crores into a world scale, world standard research and development center. This will house R&D as well as process scale up, as well as environment lab and safety lab.
Okay. And what would be the contribution of all of these investments and projects to the top line?
It would be significant. We normally have a threshold that we have. When it comes to specialty chemicals, we have a threshold of between 27 to 30% ROCE. And when it comes to intermediate chemicals, the positions that we have are more from the turnover to asset ratio. Now, where we are looking at going both upstream as well as downstream, for example, we have to keep that in mind. But on a long-term basis, we're expecting 2 to 3% blended margin improvement over the current EBITDA profile, that too on a significantly larger base.
Okay. All right. So it seems like perhaps we're at the end of that painful cycle for the chemicals business. Thank you so much, Ms. Mehta, for speaking with us.
I'll just make a point here. As far as CEO's job is concerned, see, it is my job, along with my team, to chart the destination.
Right.
Now, when you're on a ship and you're charting towards a destination, in the middle is, every chance that a storm comes. When the storm comes, my goal is to make sure that the ship survives and remains resilient through the storm. And I continue on the journey towards my target destination. But in the middle of the storm, if I am focused only on achieving my destination, then it's a wrong target. Here, I have to focus on weathering the storm and doing it with a sense of resilience and motivation, because I believe in the end destination. And I know that this ship is going to take me there. So I focus on prioritizing the ship.
Okay, so I think that caveat was an important one, and thank you for that, because instead of just only painting a rosy picture, you are addressing the concerns that may continue at least for some time. But there you have
I
it.
remain bullish about our ability to get there.
I've not heard a CEO who wouldn't, and that would be unusual. But nevertheless, great speaking with you, Mr. Mehta. So there you have it, Deepak Nitrite. Not the greatest Q3, but definitely an optimistic outlook.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
The Nifty ends at a record high led by Axis Bank and HDFC Bank. Sensex gains close to 0.5%. Broader markets underperform the benchmarks. Federal Bank stock dips as Kotak Mahindra Bank retains and promotes KVS Manian. Blockbuster debut for Vibhor Steel as it surged 195% above the issue price, making it the best listing of the year so far. The Maharashtra Assembly unanimously passes the Maratha Reservation Bill. Legislation will grant 10% reservation to the Maratha community in both education as well as government jobs. Welcome. You're watching The Reporter on NDTV Profit. I'm your host, Pallavi Nahata, and as always, the show aims to bring to you top choice when it comes to market headlines, along with national and international news. Before we delve deep, let's take a very quick look at how the markets have fared during the day. The Nifty hit a fresh high of 22,215, with Nifty Media being the top sectoral gainer. My colleague Harsh Sehta joins in with a quick wrap of all the D Street action.
Well, it's the second consecutive day where the Nifty has recorded, or rather, in fact, now closed at record highs. We've settled just below the 22,200 mark, a third of a percent higher on the Nifty 50, largely driven by banks. But let's quickly look at the heat map first. 1.2% higher on the Nifty Bank, but let's look at the heat map first. You'll see a couple of gainers, but when you see the top 5, you'll see 3 of them being the large private sector banks which have led the day today. And what a fabulous way in which they've led. 2% plus on Kotak, Axis and HDFC, supported by 2% on Power Grid and 4.5% on Power Grid and 2% on NTPC. It's a fantastic coat of green there at the top. Among the laggards, 4% lower on Hero Moto. Coal India, on the back of some commentary, has seen a second consecutive day of declines. But outside of that, you've seen the IT and the auto pack leading the declines, except for that Bajaj Finserv there, and then you have a supply as well. But let's quickly take it to the Nifty Bank, because that's the sector of the day definitely, because the way in which they've led some of those gains. Look at that. 2% higher across the board for Kotak, Axis, HDFC. Then you had IndusInd, Bob, PNB, ICICI, which has led for some time. Bob, PNB, ICICI have really led markets for some time and taking a bit of a backseat today. Let's quickly also look at sectors, because you will see some other sectors also emerge as winners today. The Nifty Media has done fairly well. The Fin Nifty has done well on the day of, in fact, closing. You're also seeing gains on the Nifty Realty, 1.2% higher. And you're seeing a mixed bag even in terms of the losers. IT, auto, metal, pharma. 4 big losers along with FMCG among the sectoral indices, and despite that we've clocked highs. Where have we lost out? In the mid and the small cap space. Broader markets, you're looking at the mid cap index closing just about 1/10% lower, absolutely flat, negative bias. The small cap index closing around 0.4% lower. But it's a day where it's been led by the benchmarks. We'll of course have a very, very interesting week in front of us.
Now, moving on to a stock that's created a lot of buzz today, Kotak Mahindra Bank is expecting a big management rejig from the March 1st, and this is causing some tension at Federal Bank. Vishwanath Nair joins us with more details.
What's happening here at Kotak Mahindra Bank is essentially a large management rejig, and the first one of those, the most important one of those, is the elevation of KVS Manian from whole-time director and head of wholesale banking to joint MD. That literally puts him at the second in command position at Kotak Mahindra Bank, right after CEO Ashok Vaswani. We have then the next appointment is Shanti Ekambaram, goes from retail head and whole-time director to deputy MD from the 1st of March. After Shanti Ekambaram, of course, there's Devang Ghiwala, who's going to be taking over as president and group CFO of Kotak Mahindra Bank. He'll be replacing Jaimin Bhatt, who will retire from his group CFO position at the end of this financial year. There's also Milind Nagnur, who was a CTO at Kotak Mahindra Bank, will take over as a chief operating officer from the 1st of April. That puts him in the KMP league at Kotak. And lastly, we have Paul Parambe, who's currently working with the bank, and he takes over a group level position as chief risk officer from the 1st of March. So this was largely a rejig that's happening at Kotak Mahindra Bank. What is interesting to see is that this is the first big move that is being done by Ashok Vaswani since he took over as MD and CEO on the 1st of January. This is the intent behind this is, of course, to retain the senior management pool so that they don't end up leaving the bank. That was one of those fears right after Uday Kotak stepped down as MD and CEO of Kotak Mahindra Bank. The fear was that the larger or the top management will also follow him and probably leave the bank. But clearly, Ashok Vaswani ensuring that these people stay back. Now, the collateral impact, as Tamanna was talking about earlier, the ripple effect that's being felt is at Federal Bank. That's primarily because of KVS Manian. NDTV Profit had reported that Manian was being considered as the potential CEO candidate for Federal Bank. This was reported last week. Federal Bank is set to submit a few names to the RBI as potential CEO candidates, at least 3, that's what we understand from our sources, and that was likely to happen at some point in time next financial year. Now, if Manian decides to stay back or whether he will come in as CEO of Federal Bank, that's something that we need to watch out for. That story will get clearer as weeks go by. However, direct impact on Federal Bank, it rallied about 10% after the story came out about Manian being considered as a potential CEO candidate. And then today it's down roughly about 6.5 or 7% odd. So that sort of enthusiasm amongst investors, that's coming off in case of Federal Bank. And of course, all of this is happening because the CEO of the 4th largest private bank in India decided to reject his management. Another stock that is actually trending in trade at this point in time is HDFC Bank, up about 2.5% today. Harsh, if you want to take us through what exactly happened at HDFC Bank and why is it that investors are so keen on trading in the stock?
And now coming to a primary market update, Vibhor Steel has made a blockbuster debut on the bourses with a premium of 181%. This makes it the 4th highest listing of all time. Saloni joins us to tell us more.
As you mentioned, the 4th in terms of listing gains for sure, and it even sustained that rally. It rose above 195% over its issue price of 151 per share and closing at over rupees 400. So that tells you the rally it sustained and even hit an upper circuit for that matter. And it is currently trading at a market capitalization of over rupees 800 crore on the BSE. Now, when we talk about the top listing gains, just to give a context, Sighaji Industries, Paras Defence, and Deliger Enterprises are the ones that actually were the ones who were topping the list of the listing gains of all time with over 200 to 180%. And now when we see Vibhor Steel has made it on the top of the list, being the 4th largest in terms of listing gains. Talking about a subscription, even in terms of subscription, it was the top 3rd most subscribed IPOs of all time. It was overall subscribed over 299 times after Latent View and as well as Paras Defence for that matter. And the issue was entirely a fresh issue and it was just of about to be 72 crores. It was not a very large sized IPO for that matter, but the kind of demand it saw and the kind of gains that we saw today, definitely I think the size wouldn't matter here. And the proceeds are supposed to be used for working capital and general corporate purposes. Now, another thing that's helped kind of the positive momentum towards the company is that during the IPO, the management had said that they are also planning to set up a manufacturing plant in Orissa, which is going to relate to their expansion plans. And even the management told NDTV Profit as well that the plant is going to be set up by the end of this year and it's going to be funded by internal accruals only, and they are not going to be raising any more funds or raising any more debt. So that's what we saw, and it'll be very interesting to see how the listings happen because there are so many IPOs lined up as well.
Thanks a lot for that, Saloni. Meanwhile, Zee seems to be re-engaging with the Sony Group on merger talks as per sources. Although the stalemate over what's going to happen over the key issues continues, Tamanna Inamdar joins us with an NDTV Profit exclusive.
The Zee stock has been zooming in trade today, and one of the reasons very clearly is reports that there may be revival of conversations between the two sides. Now, what NDTV Profit has learned is that talks are taking place at the level of lawyers. Lawyers of both Zee and Sony are engaging in merger talks at this point, but the ball really is in Sony's court whether it wants to revive any of those conversations or go ahead with the merger. There is no deadline as such which has been stipulated as to when they have to get back or when Zee has to get back, but at least the fact is that there seems to be no real reason why Sony would come back to the negotiating table, because the stalemate over key issues that tanked this $10 billion merger on the 22nd of Jan have not really been resolved as of this point. The question is, why are investors still seeing this as a positive?
With that, let's shift focus to Whirlpool. Promoters are expected to sell 24% stake in the India unit at a discount of 7.6% to the current market price via block deal. We have my colleague Mahima joining us with more details on Whirlpool. Mahima?
So Whirlpool India has seen a lot of pressure in trade today. There were large trades seen and buzzing in volume, and this is on the back of Whirlpool Corporation, which is set to sell 24% of its stake in Whirlpool India. Whirlpool Corporation already holds 75% in Whirlpool India, and if they pass stake of approximately 24%, they'll still be the majority stakeholder with a share of 51%. Now Whirlpool Mauritius is to be named as the selling shareholder, and Goldman Sachs is the sole broker for this deal. Now if we talk about the stake sale value, the floor price is set at 1230 per share, which is at a discount of 7.6% since yesterday's closing price, and the total value of transaction stands at approximately 3,700 crores. Now the purpose of stake sale is that Whirlpool Corporation will use these proceeds to pay off their debt, and they want to enhance their balance sheet flexibility. Now on 30th November, Whirlpool India did come out with an exchange filing stating that Whirlpool Corporation will sell 24% of its stake, and since then the stock has fallen approximately 12.9%. Now Whirlpool Corporation, if we talk about their debt profile, their debt as of 31st December stands at $6,400 million, and they've said in their SEC filing that they want to target and pay off $500 million worth debt in Q4. Now talking about the valuations of Whirlpool India, well, Whirlpool India is a bit expensive as compared to its peers, Symphony and Crompton. Even if we talk about the stock performance, Whirlpool India has fallen over 5% in the past 5 years, whereas Crompton and Havells have grown approximately 39% and 94%. Even if we talk about the 1 year stock performance of Whirlpool, 1 month the stock has been hardly up 1.8%, 6 months it's been down 16%, and 1 year it's hardly been up 2.7%. So the stock has been seeing pressure since past 5 years. And even if we talk about the analyst recommendations, 5 say buy, 4 say hold, and 4 say sell. So it looks like that foreign companies with the subsidiaries in India are selling off their stake in the subsidiaries due to high valuations.
Now, shifting focus to artificial intelligence, AI-led misinformation and deepfakes have caused concerns among internet users across the globe, increasingly so in recent times. We spoke to Meta's Public Policy Director, Sunil Abraham, who spoke about Meta's plans to fight AI-led misinformation. Listen in.
When it comes to the risks associated with generative AI content. To begin with, when it comes to our own models, we have taken a commitment to introduce watermarks on a voluntary basis. Some of these AI tools are not available in India today, but when they are made available, they will be made available with these watermarks. The second change that happened last year, and we have begun enforcement of that policy from this year onwards, is a change to a disclosure requirement specifically for political ads and also for ads around social causes. What we require is that if there is any digital manipulation of the content associated with those ads, then the advertisers have to make a voluntary disclosure. Finally, especially for deceptive generative AI content circulating on WhatsApp, we have worked with MCA, which is a leading consortium of fact checkers, and we have upgraded the WhatsApp tip line, and now the fact checkers manning that tip line are able to also assess whether a particular piece of reported content has been generated or is manipulated in any way.
Now, moving on to the bigger question, how is AI impacting the jobs of 6 million coders in India? Is it assisting them or disrupting their involvement in the workforce? Shrikant Velamakani, Group CEO and co-founder of Fractal AI, answered this question during his recent conversation with my colleague Tushardeep Singh at the NASSCOM event. Let's listen in.
Key point is that 6 million people in India write software code for a living every day. And these coding assistants, AI-driven coding assistants, have replaced or augmented coders. So what's happening is, instead of writing code from scratch, I will ask an AI assistant to write the initial code and then work on it. Or I might write the initial code and then ask AI to debug it, or create test cases, or create documentation. In all of these activities, there's almost a 50% improvement in productivity, or even higher, which means that if I was taking 10 hours, I may take only 6 hours now to do that work. So that is the world in which we're living. Then what happens to the 6 million people? Do we need all the 6 million people? Or because of this demand in AI, demand will expand and explode so much that we'll actually need more than 6 million. So this question is at the center of everything. And depending on who you ask, people have different views.
GCCs as a term will not even exist in the future. Now, that's according to Shalini Pandey, the India leader of Global Capability Centers at KPMG India. She shared this take during her recent conversation with my colleague Tushardeep Singh at the NASSCOM event. Let's listen in.
Today, GCCs coming in are very different from the model they set up years ago. You would come in, do the transaction processing, slowly and steadily evolve up the value curve. But in today's context, you look at the new centers coming in, they come in very disruptive models. They come in to set up deep capability hubs. They come in to set up an innovation hub or a transformation hub. Very cognizant of what they want to do and what they want to focus on. They also leverage the ecosystem beautifully. So they're clear on a bunch of areas that they're very happy to leverage third-party service providers. They don't want to bring that in. They believe that that hybrid model suits their needs, and they don't need to kind of do it, they need to do it differently. So it's the model itself, the operating model has changed. Everyone is looking at, and GCCs, by the way, I think very soon you will see the term disappear. It's a lot of centers don't like to be called a center. They view themselves as a seamless extension of the global organization. You'll see lots of different new terms emerging. So if you look at the India capability hubs that are being set up, they're there to really serve as transformation hubs for the parent organization.
At the same event, my colleague Smriti spoke to the KPMG India partner and national leader, Akhilesh Tuteja, who spoke about the role of AI in our lives going forward. Let's listen in.
There is AI everywhere. But what this conference has done for me is to unravel not the possibilities of AI, but how AI will actually transform our lives and the lives of the people who we work for. So we are taking the step ahead to not just talk about what AI can do, but what AI will do in near future.
And with that, it's time to slip into a short break, but stay tuned to NDTV Profit because we have a lot more lined up on the other side for you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching The Reporter on NDTV Profit. Now, it's been a strong year for the Indian economy, no two ways about that. But the state of the rural economy has been an Achilles heel of sorts. High-frequency indicators, whatever is available that is, continue to paint a mixed picture of what's happening in the rural space. So we decided to turn to pretty much the best source under the circumstances. We went through some of the commentary on the rural economy, and that's a handful of the earnings from the Nifty 50 companies. Now, to be sure, recovery is still in the woods, warranting close monitoring. The first thing that Rohit Java, the Chief Executive Officer and MD at Hindustan Unilever, spoke about on the analyst call was the rural economy, how the effect of uneven monsoons has been felt on Kharif crop output, and in turn, how that's impacting agricultural yields and rural incomes. The takeaway was that rural consumer sentiment remains subdued. Now, consequently, the anticipated buoyancy from the festive season also failed to materialize, at least to the expected extent. Varun Berry, Vice Chairman and MD at Britannia, also appeared to have some strong commentary. We've not seen rural growth the way we've seen it in the last 10 years. That's what he had to say. He also said that urban growth continues to outpace rural growth, and he flagged off the impact that elevated inflation has had. Moving on to the latest from the farmers' protest. The Punjab and Haryana High Court today wrapped the protesting farmers and said that they cannot use tractor trolleys on the highway according to the Motor Vehicles Act. Let's go across to NDTV 24/7's Mohammad Ghazali for a report on this.
Punjab and Haryana High Court has asked the Punjab government to not allow large gathering of farmers ahead of their Delhi Chalo March, which is scheduled tomorrow at 11 am. The Punjab and Haryana High Court was hearing a couple of petitions which was filed by one of the advocate who had contested the claims and the actions taken by Haryana government for internet suspension across the state in at least 7 districts. Now, while hearing the petition, the Punjab and Haryana High Court judges also came down hard on the protesters, saying that you don't have the right, as per the Motor Vehicle Act, to travel from Amritsar or from Punjab to Delhi on the national highway. Why can't you take other means of transport like buses and train? It also asked the protesters that for any protest, you have right to protest, but then it comes with reasonable restrictions. This has come at a time when farmers from Punjab are sitting near the Shambhu border, which is an interstate border between Punjab's Patiala district and Haryana's Ambala district, as well as Khanori border, which is another interstate border located near Jind-Patiala border between Punjab and Haryana. The High Court has also asked the centre to file fresh affidavit regarding what has transpired between the meetings, in the meetings between farm union leaders and the union government ministers who had held around four rounds of talks, and has now adjourned the matter for the next week. But before that, the Punjab and Haryana High Court has asked the farmers or the protesters to ensure that you can't go about with unreasonable restrictions while you are protesting. And I'll just quote that what the High Court has said while wrapping the farmers, that you are traveling from Amritsar to Delhi on trolleys, and everyone knows their fundamental rights, but there are also some constitutional duties that need to be followed. This is one comment. And then the court also told the Punjab government to make sure that people should not collect in large numbers everywhere, while there is a massive build-up which is happening across the villages of Punjab to gather near Shambhu and Khanori border for tomorrow's march. And at the hearing, the centre has told the High Court that meetings had taken place with farmers where new proposals or demands, new proposal was sort of floated, was discussed, but now the court has asked the centre to file a fresh affidavit regarding what all has been going on between farmers and the union government over this protest.
Now, in a significant development, the Maharashtra Legislative Assembly has approved the Maratha Reservation Bill. The bill is aimed at providing reservation in education and employment opportunities to the Maratha community. Maharashtra Chief Minister Eknath Shinde presented the bill, suggesting a 10% reservation for the Maratha community in educational institutions and in government positions. The Maharashtra State Socially and Educationally Backward Bill 2024 outlines the provision of a 10-year review period after the implementation of the proposed reservation. Highlighting the rationale for the bill, it underscored that the Maratha community constitutes 28% of the state's population. Additionally, it notes that a significant portion of Maratha families fall below the poverty line, with 21.22% holding yellow ration cards, exceeding the state's average of 17.4%. That's all we have for you on this edition of The Reporter, but do keep watching NDTV Profit for more news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody